अच्छा आया, थैंक यू। Very unique platform which is completely silent and will not really contribute to any noise. So let's get started. My name is Ridhimavali and I extend a warm welcome to each one of you to this confluence and convergence of thought leadership, insight sharing, and a platform where we'll be sharing a lot of pragmatic experiences and trends with the industry's stalwarts and experts. Welcome to this event, which is called the Global Fintech Fest. Can we give a big round of applause, ladies and gentlemen? Friends, fintech globally is innovating at a breakneck speed and adapting newer technologies to make an impact people's life in a quicker, positive, and a lot more scalable fashion. Policymakers, on the other hand, are working to facilitate this change systematically in a secure fashion and for long-term implication. Adoption of these technologies is being driven by collaboration between fintech, government, and numerous corporations. The third edition of Global Fintech Festival is organized by the National Payments Corporation of India, NPCI, Payment Council of India, PCI, and Fintech Convergence Council. This year marks the 75th year of India's independence. India has already made exceptional progress in the fintech adoption and is today a role model for the entire world. As India prepares to take the G20 leadership in the coming year, GFF 2022 will showcase India as a dominant fintech thought leader and demonstrate India's fintech ecosystem to the world. GFF 2022 will provide participants a really vibrant and relevant platform to engage with public and private sector stakeholders, collaborate and augment learning, and take action towards enhancing sustainable finance globally. The conference will include discussion on thought leadership topics, product showcases, tech talk, startup tales, Fin Inclusion Labs, and much more. This year, this platform will also bring together the stalwarts from industry, government, policy, finance, startups to really discuss, deliberate, and figure out a mechanism to decide the steps to be taken to move forward across the 4 pillars of Global Forum for Financial Freedom 2022, which are planet, people, prosperity, and principles of governance, which are aligned with the UN Sustainable Development Goals. And to get started in our journey of riveting conversations, I'd like to introduce to you all the context of our first conversation, which is going to take place with our esteemed conversationalists and members who will be taking the conversation forward. The entire premise of transfer of funds across borders has always been a concern. Although there are several means of transferring them internationally, the time taken or the convenience is being further bolstered by fintech companies. We have our first topic of the day, which is how fintechs are revolutionizing cross-border payments. And we have with us our luminary speakers. Please welcome and give a big round of applause for Mr. Adib Ahmed, MD, Lulu Financial Group. And our session will be moderated by Mr. Kishan Srinivas, in charge, Business Development Europe, NPCI International Payments Limited. So over to the both of you.
Audible? Audible?
Yeah, I can hear you.
Yeah, okay.
Okay. Thank you all very much. I would like to just probably add one line to introduce Mr. Ahmed one more time to all of you. I can never forget my first interaction with him, He told me that I was a career, my entire career I was in the hospitality industry and I was suddenly asked to lead Lulu Finance. So he came with the ethos of keeping the customer comfort and the customer convenience in mind and came into creating such a mammoth organization called Lulu Financials, which is renowned across the world, something that we all speak about. Thank you so much, Mr. Ahmed, for your time today.
The pleasure is all mine. Thank you.
I would like to start by asking you a question could you tell us a little bit about how Lulu has evolved, its journey and your vision for remittances overall.
Absolutely. Let me first begin by congratulating the organizers of this great event. Been told that this is the first time that we're coming face to face after the pandemic. And I think so India deserves such a platform because in the last couple of years, the amount of changes that we have seen in the fintech world in India has just been astonishing. And to be here and actually soak all those achievements that what we have done in the last 3 years is truly a feeling that cannot be expressed. So firstly, let me congratulate everybody, especially NPCI in many aspects, because it has given all the companies originating out of India a strong story to go and sell across the world. I think it's a platform that has made all of us very proud. So kudos to the entire team at the NPCI who has made that feeling, a proud feeling for every Indian. Coming to your question about Lulu Financial Holdings, we're an organization based out of Abu Dhabi, headquarters out of there. We're spread across 10 odd countries. We're predominantly in the cross-border remittance space. And just to give you a couple of numbers that tells you the area that we work upon. We work in around 10 countries, the entire GCC, barring Saudi Arabia, where we have interest to enter. In India, we are present in 2 of the licenses. We are an NBFC company and we are also a Forex organization. And in the Far East of the Asia Pacific, we are present in Philippines, Malaysia, Hong Kong and Singapore. On an average level, we do a transaction, a little over 14 million transactions every year, remitting a little close to $10 billion US on a yearly basis on the cross-border financial payments. Apart from this, we are also very strong in physical banknotes export and import. We move close to around $6 billion US every year across the countries of operations that we have. The core ethos of Lulu Financial Group was predominantly trying to make sure that we keep the cost at check on the remittance side. The group comes from a very strong retail background, so the interaction with the consumers were always very strong with us. And that led to our core philosophy at Lulu Financial Group, that we innovate value and we inspire experiences. Our core aspect here is to make sure that we continuously start innovating ourselves so we can find better value for all our customers. We at Lulu Financial Group still consider us as a startup. It's been 12 years that we've been in running, but we still have a mindset of a startup. Every year we challenge the status quo. Why should it be done in a certain manner? Why not it could be done in a better way aspect? And at every point of time we try to cut short the intermediary that we have in the process out. We believe in controlling the entire value chain. And I think so that's a mindset that we got from our retail chain. Why? Because from outsourced farming to farm fresh products to on the retailing side, the entire value chain is controlled by them. And in the financial side, we pretty much eliminate the same thing. We try to control the entire ecosystem so that we can keep the cost at check. It's been a good run. I think so. The run has been good because of great partners, And today in India, who better to partner than NPCI? It's a wonderful platform for us to partner. And it's been an ask, today with the launch of this Bharat bill payment system. It's been an ask for the entire NRI community for a very long time. And today it getting launched is a great achievement for us, Predominantly, why? Because it gives the consumer the entire control to control his entire payment spectrum. Earlier it was just the remittance where the NRIs remit money into an account here in India, and post which, they use the local channels to, further take care of their entire payment ecosystem. But today, the ability to do that directly from a foreign country is also a great element of help to the things, So it's a constant evolution. And I think so in the last 3 years, we've been more excited than ever before, because the amount of changes that we have seen in the payment landscape has been just great, and that has really helped us to stay more motivated, getting across, bringing out new products on a day-to-day basis. And it's been a great run since so far.
10 countries, these many billion transactions, fintech mindset and looking forward to the future. What more can you talk about, when it comes to the way Lulu is working in the global ecosystem? Thank you very much for that. One of the most important facets that I've always noticed whenever I've spoken to you or your team is that Lulu Financial uses technology as a forefront of its strategy.
Absolutely.
You give it a lot of importance, a lot of impetus. Could you just talk about how technology has helped Lulu Finance become this mammoth that it has grown into?
See, we started in the year 2009, and when we started our operations in UAE, we are almost the last entrant into that remittance space, which was already very much organized, which was already very much well established in the market. It was a tough task, where we had the brick and mortar setup, where organizations who were before us had a large setup of 100 or 200 odd physical touch points, where consumers used to come and remit transactions on a daily note, Whereas we thought it slightly differently. Because we were one of the last entrant, we said, why should we have an earlier mindset about how things needs to be done? It's a clean slate. How do we think about redrawing the entire landscape using technology as its forefront so that we would not be able to build so many physical touch points that is necessary, So today, with being in so many countries, I think in 1/3 of the time that many of the major establishments have achieved themselves in that market, we've been able to grow because the forefront of technology was very nice. And the technology was just not used to internally take care of the cross-border remittance. We grew beyond that. We grew from being a retail player into a B2B player. Today, we power major banks and also other institutions, also other technology players when it comes to remittance as a service providing instrument. We do a lot more into that case. We got into the capital space where we started taking care of the supply chain financing of things. We entered into the NBFC space in India. So all these were all cross integrated from one level to another. Because the technology was there, we could easily transform ourselves from one particular sector to another sector as well, So it has really, really helped us to look at, how do we capture more? And as I said, earlier we were looking at backward integration, and now we are looking at horizontal integration by we saying that, how do I influence the customer journey in every aspect, not just a remittance space, but also into other needs of a consumer on a day-to-day things. And we become an everyday company, where consumer needs to, there are needs of consumers for an everyday needs, and how do we fulfill those needs, How do we partner with banks? How can we become an extension to the banks, So a lot more areas have really opened up in the last couple of years.
That's great. Backward and horizontal integration, I think something for all of us to learn in terms of looking at a customer holistically. I think that's fantastic. So we were talking about this even before we came on stage, the G20 agenda, the UN SDG agenda of actually reducing cost of remittances worldwide, and you being such a significant player. Could you tell us a little bit about what Lulu Financial thinks about this particular aspect?
Well, the UN inclusion level, we categorize that into two angles. Predominantly the first one is financial inclusion, and the second one is about keeping the cost of remittance to around 3%, which is the target of the UN resolution that has been brought out. The first one I'll touch point on the first one, which is the financial inclusion. In the year 2009, we, along with the Central Bank of UAE, the Ministry of Labor, piloted a project which was spearheaded by the Ministry of Labor there, which is called the WPS, which stands for Wage Protection System. There was a lot of cry in the market that, the labor market or the blue-collar market was not getting paid on time because the banks were not able to accommodate them as a consumer. There was a large-scale debate and deliberation on this matter, and we all came to say that, we could still get them on a financial inclusion by getting them onto a plastic, And the whole idea came out where the program was launched, where it was made mandatory by the Central Bank of UAE to say that every blue-collar workers has to be paid through a financial institution, which is a bank or an exchange house in the market, And that led to a large opportunity opening up for us in the money exchange space. Today, we have taken the interest of providing the salary setup for almost 300,000 customers, issuing close to around 900,000 plastics in the market. So this really helps us. By this, a first step for us to understand the real aspect of a customer journey. It gives us the inside information of once the salary comes into the card, what does the end consumer do it? Does he just normally remit the entire space out? Does he keep a certain portion inside? If he keeps a certain portion, what does he do with all those money that we have? Which allows us to then start creating products that will help the blue-collar workers, whether it is a salary advance or, a salary top-up, a short-term loan. So these are many aspects. But yes, we are curtailed by the regulation that we are not able to provide that. But then we find partners who we can partner, like a larger financial institution who we can partner into getting all those things organized for the end consumer as such. So that's one side. When it comes to the keeping the cost low, we're very proud to say that the entire GCC market is almost one of the most least in terms of cost of remittance from anywhere around the world. When it comes to the Indian remittance space, I think so. The 21 closed with India clocking close to 85 or 86 billion US dollars as remittance into the country. GCC constitute to 18% of that one, which was close to around 20 billion US dollars. So apart from the US, the GCC is predominantly one of the largest market that remits into India, where we see the cost of remittance from US and Europe 3 or 4 times higher to what we see in GCC. In GCC, we are almost very close, the lowest it seems. We're standing at around 4.5%. Is it practically possible to come to that 3%? Well, I have my doubts, and predominantly why I have my doubts is because the year on year the requirements of compliance is going up. With that kind of cost being added into things, and for all those who don't understand how we operate in the market versus the US and Europe, in the GCC we are very similar to a bank without the lending powers. So we operate as a very focused network where we do only the remittance as an activity or payments as an activity inside each of the shops that we operate, or on the offline network, which is the Lulu Money platform that we have. Whereas in Europe and US, it's a more a mom and pop setup where you have a shop inside a grocery, inside a retail space, which is an add-on feature to somebody who's doing some other business. So it's not a very focused element of things, and that has led to a lot of pros and cons for us. And I think so in a conversation, I'll explain how it has become a big con for us. Why? Because a lot of banks lead to de-risking, and when it comes to de-risking and a large volume of consumer depend on us to make sure that they keep their costs low and also remit their money, because at the end of the day, why do the expatriate move out of their country or their comfort zone and move outside so that they can take care of their family back in India? So, it's very important that the cost be kept at a check, and to the factor that, they can easily remit the money back inside. Today with technology, where it used to take 24 hours or 48 hours to actually receive that money back in India, we at Lulu Financial is very proud to say that our TAT time is 15 seconds to India. So, even before the consumer leaves the outlet, his money is already credited in his beneficiary account back in India. So, I mean, the element is there, the core focus is there, but, with all around cost going up, it becomes very hard for an institution such as to even meet that targets, because, but the focus is still on.
Like I said, ladies and gentlemen, Mr. Ahmed always has the customer at the crux of his mind. You can see that all his conversations have always been revolving around customer problems and kind of owning it and creating solutions. So, great thing to learn. I think if you look at this theme, you're saying cost low, expanding global footprint, more transactions, reducing time, using technology. we kind of share the same ethos with NPCI and NPCI International. Could you talk a little bit about this partnership and India as a market for you?
Yeah, sure. But before that, even technology has its pros and cons, So technology has a pros and cons because, when I speak to my IT heads and guys, they say that, sir, the server was with us today, we move it to a cloud, and then I said, where is this cloud, and they said, there is a cloud, At the end of the day, here when we have the bill comes, it was more expensive than to maintain it with me than post it in a cloud, So, year on year, the cost of technology of maintenance also goes up very high. You need to have a backup system with large amount of transactions flowing inside, So it's a very tough act to control the entire ecosystem to keep the, and year on year, I think so, the remittance cost in GCC has not increased in the last 2 decades, I think so there was a very minimal increase in 2000, mid 2000, which went up by 2 to 3 dirhams, which is less than $1, whereas the cost of operations have astronomically grown up year on year, with the use of cloud services, with the use of backup servers, and so on and so forth. So it's very bad. And in India, the story is phenomenally great for us. Draft has become obsolete since the time that we started operations in 2009. Today, there is no use of draft. API connections became a norm since we started our operations in 2009, which was even more better for us. Today, with RTGS and many instant services coming through, the amount of time, reconciliation costs have really dropped down because of the use of these kind of technologies. I think so these are all becoming an adaptation, and more than us, we always need our partner also to be willing to adopt, and that's where the Indian story is, where most of the financial institutions on this side of the world also started to fastly adopt to the technologies that were available, because they also see the need to cover India, which is being such a large market across. The only way that they can cover and reduce cost was to go digital, And when they went digital, it really helped operators such as us also to embark on that journey and make sure that, we also bring our cost lower, So it's been a great workaround. As I said, with the journey with NPCI started for us in many angles. Today, with the opening up of the BPPS, which allows the bill payments to happen into India, it's going to be writing a new chapter for us. But there are still a couple of bottlenecks, that we see. Today, also to load your wallets into India, because of the MTS's license regulations that is acting in India, we are still not able to do that one. We still have to go through an MTO. When we go through an MTO, you're still adding cost to the end consumers. So again, the deliberation with the regulator needs to happen. We need to still improve on those conversations to make sure that, validity of an MTS's license, is it really required in today's age and time, with so many things coming through, is a question that we've been always asking. Getting middle people, avoiding maximum number of middle people inside will always keep cost at check, and I think so that's where NPCI plays an important role for us.
That's great. And what do you think? It would be unfair for us to even think of concluding this session without asking you, what are your plans? What is Lulu Financial's plans globally? What are your plans in India? How do you see the future unfolding? If you could probably give us your views, we would be really.
Yeah, I think for us it's a very exciting time. The plans for Lulu Financial Hold is to consolidate on the markets that we are still functioning upon. I think so there is scope of growth in the markets that we already operated is enormous. Saudi is a strong market that we are looking inside, and we are hopeful that, in the next 12 to 24 months, we should be able to have an entry into that market, which opens a large gate for us, which is the last remaining market in the GCC that we have not touched point inside. Asia Pacific, I think so there's still a lot of areas that we can grow. Philippines is a very similar market to that of India in terms of the expatriate population traveling out for work. The Asia Pacific into Philippines is very strong. It's been a very strong market. It's been a very open market for us. And of course, with the new central bank digital currency coming in the horizon, now that's a huge change for us, And I think so we as an organization needs to be ready to adopt that change into us. I think so working on those networks to make sure that, we are product ready by the time that, the central bank launches that thing. We hear that the European market is moving very fast. The talks between RBI is getting heated up year on year or month on month. Asia Pacific, there's been use of many cases. We work with many operators such as Ripple on XRP in many markets that we are operating inside, by which we see. Philippines is a core example that we do. We work with the regulators there as well to find out what is the end case use that can be done. The use of millennials, again, coming back to the consumers, the next generation of millennials, they work on more usage of those crypto and so on and so forth. And however we say that that is not the right aspect, the interest among the millennials seems to be on a very high note. Today or tomorrow it needs to be regulated, because as an organization we don't touch anything that is not regulated. So we are hoping that, that channel gets regulated pretty fast, laying out the right SOPs and standards so that, organizations such as us can get into start working on creating our own frameworks on how it should be used up, So I think so that's a lot of things. As most of the CEOs you must have heard, they all use the tagline, that we are like a startup, But in our case, I'm saying it from the bottom of my heart. We are like a startup. Why? Because if we don't have that mindset, we will just get, we don't want to be another Nokia story, where at one point of time you used to control the world, and another time, we losing the entire market share. So I think so there is a lot of disruption that is going to come in the cross-border remittance space. Even more disruption on the B2B space. I think so banks are moving away. I think so the moving away of the digital the physical footprint has also left a void among the consumers, where they find it a bit difficult to interact with the banks on needs of their own. I think so for us, it's a hybrid model, where today across the world we have 262 odd touch points, where a consumer can actually physically come and, have a conversation with us, Are we going to reduce that touch point? No. We're still going to keep that one. Are we going to increase more? Maybe not. But what are we going to do? We're going to increase the digital footprint in a much better manner. And a hybrid aspect of this too is really going to make sure that we're going to give an optimum customer experience that the customer deserves.
That's great. Mr. Adeep, just probably one final question from my side is, how do you see remittances play out maybe in the next 3 to 5 years? What's your...
Well, I've read it somewhere that, they say that migration is like gravity. It cannot be stopped. And I think true to this, before pre-pandemic, this statement held more value than how it has been in today's world, Today's world, I think so, one of the bad things that pandemic has caused is that people have become more nationalistic in their approach, where, they started stopping people from moving around, the cost migration has been stopped to a certain angle, And I think so this is still going to come back, It's very hard to stop a migration aspect where people move to different parts of the world for different needs. But at the same point of time, they make sure that they have investments, they have families. The needs are across boundaries, And it is very important that as long as that sustains, the need for cross-border remittance would always happen out, And the need is just not for family maintenance. It could be for many other aspects, The e-commerce payment, is an important aspect, Today, in the network that the Lulu Financial Holdings, we even work with social media influencers, where a lot of people use our networks to make payments to these kind of influencers in different aspects, So as we evolve into the new space of business in various sectors, whether it is retail, whether it is e-commerce, whether it is, the traditional sectors which are all getting disrupted, the need for payment is a single tone requirement across every industry as such, And that's where we feel that players such as us have a story to say. And I think so getting more and more involved and understanding what are the pain points that each of the organization vertical finds when they comes to making a payment. And if we are able to find an easier path for them at a more cost benefit, I think so our story will stay relevant.
solving a customer problem. I don't think there is any other organization that can ever go wrong if you're solving a customer problem. Thank you very much,
Thank you
Mr.
very
Ahmed, for your time, for sharing what Lulu Financial does, sharing your views with regards to what the future is going to look like. We really hope and wish you all the very best. And we look forward to our partnership with Lulu Finance, and wishing you all the very best and your
Thank
team
you
the
very
very
much.
best.
Thank you for having me here at this event.
Oh, it was
Thank you
a
very
sheer
much.
pleasure, sir. Thank you so much for your time.
Thank you very much. Thank you.
Thank you so much, Mr. Ahmed and Mr. Srinivas, for that really riveting conversation. We would like to thank our partners and our sponsors who have played a pivotal role in shaping this event, starting with our theme partner, WhatsApp, our co-powered by partner, Amazon Pay, our spend management partner, Encash, our in association with partner, Perfios, our payments partner, Cash Free Payments, our CEO's dinner partner, HSBC. Ladies and gentlemen, we all have been engulfed by the ease and convenience of the usage of digital means of payments, which bring transfer of funds at our fingertips and now have been available to a larger section of consumers. Next up, we have an important launch of a white paper on a very captivating topic, which is really, really relevant to India's economy right now, which is about how digital payments drive financial inclusion in India. And for this white paper launch, I'd like to call on stage Mr. Rajit Pillai, Chief Relationship Management and Marketing, NPCI. And joining him on stage is Mr. Sunil Bhatt, Associate Partner, Digital Financial Services, Payments and Distribution, MicroSave Consulting. So can we give them a huge round of applause, ladies and gentlemen? Can we now launch this really relevant white paper, which is on how digital payments drive financial inclusion in India? Ladies and gentlemen, a huge round of applause. It's a very significant milestone filled with a lot of insights and experiences and expertise on how digital payments is driving financial inclusion in India. All right, thank you so much, Mr. Pillai and Mr. Bhatt. On this note, I'd like to invite Mr. Rajit Pillai, Chief Relationship Management and Marketing at NPCI, to say a few words about it. There you go, sir.
Is this working? Is this working? Okay. First of all, welcome all.
This is happening in a white paper launch, so requesting you to all settle down. Anuj, in one of the chairs, I've forgotten my...
Okay, first of all, welcome all to this global fintech fest, which is India's or the largest across this country, this part of the world, in fact. And NPCI is proud to host it to the fullest extent. Today, in case we talk about superpowers, we have all heard about superpowers in terms of defense. We've heard superpowers in terms of economical power. But in case we have to draw a parallel and rank the superpower for digital payment landscape, it will be only India who will be standing tall compared to even the Western countries. We have moved from a paper-based paper-based age to the digital payment world in the past 7 to 8 years. Gone are the days of telegraphic transfers or CMS clearings. 7 days of metro cities for a clearing, 21 days for a non-metro, and infinite waiting for remote areas. It all started with CTS and NFS, and then came the mother of all, the IMPS, followed by APS that changed millions of lives in the lower spectrum of the society. And now, the father of all digital payments, the UPI. This digital revolution is led by collaborative efforts from the ecosystem, including the government, the regulators, the financial service providers, the banks, the fintechs, and these efforts can be seen through the launch of PMJDY, Aadhaar, the India Stack, the differentiated infrastructure, the small finance banks, and the payment banks. NPCI has been at the center of this remarkable journey and has made significant efforts to build an open and secure digital ecosystem, leading to a path-breaking digital payment solutions being offered to the masses. We have enabled the public and private sectors to drive innovations, improve the service delivery, and build a variety of user-centric digital payment solutions. This white paper has been made in partnership with Microsave Consulting to showcase the role of digital payments in driving financial inclusion in India. This white paper highlights that India's payment systems are dependable, durable, and successfully accepted by the masses. This document provides evidence-backed insights on the evolution of digital payments in India and the different barriers and triggers in the state of play for the service providers and the users. It also covers critical use cases that can lead the trajectory of the change towards digital payments for the mass market and the collaboration needed from the different stakeholders. We hope you will find it relevant and meaningful. Please connect back for further conversations or insights on how we can deepen India's digital footprint. Thank you.
Thank you, Mr. Pillai, for rendering that clarity about the white paper. Now, to actually elucidate and demystify the different facets of this topic called How Digital Payments Drive Financial Inclusion in India and get into more specifics, I'd like to call upon stage Mr. Sunil Bhatt, Associate Partner, Digital Financial Services, Payments and Distribution at Microsave Consulting. So a big round of applause, ladies and gentlemen.
Yeah. Good morning, everyone. Thank you for having me here, and it's really a pleasure to be here. And hats off to the organizers of this event. No doubt, in the corridors, people are making parallels with the Singapore Fintech Festival. So I think really great. So I represent Microsoft Consulting, and I am here to speak about this white paper, and I represent my team here. On the outset, I would like to thank NPCI for their guidance and for their support in terms of providing support to launch this white paper. I would also like to thank RBI, DFS, and NPCI for their extensive data repository, which has helped us to derive rich insights in this report. And last but not the least, I would also like to extend my heartfelt thanks to the Bill and Melinda Gates Foundation for funding this study. Right. So the payments vision document, which came out from RBI in 2021, it had a lot of focus on access, right? And the payments vision document, which came out in 2025, it had focus on the 4 E's, which were essentially e-payment for everyone, everywhere, and every time. And this document has been the core motivation for us to come up with this white paper. Yeah. Yeah. So this pyramid is quite familiar to many of us. So this is the income pyramid of for the Indian population, right? And we are talking of 130 crores of population. And if you see, largely the population is divided into 5 different segments. So elite, affluent, aspirers, strugglers, and ultra poors, right? So the top 2 are the ones who have all kinds of services, right? So they are the people who I may say are spoiled for choice in terms of access to financial services, in terms of access to any products which have to be offered. But when it comes to the bottom 3, aspirers, strugglers, and ultra poor, that's where we face a lot of challenge, right? So this white paper focuses a lot on this segment. So this segment is fondly called as the Bharat segment, or the low and middle income segment, or the low and moderate income segment in a few markets. And if you look at India itself, right, so this is a 1 billion strong population. Even if I kind of rule out the ultra poor segment, which has a level of deeper challenges, the aspirers and the strugglers continue to command around 60 crores. And that's the market which a lot of fintechs, banks, financial service providers are targeting, right? And if you see, they have their own challenges. They have their challenges with respect to the kind of the kind of UI and UX. The ultra poor segment also lacks digital payments, and they do not trust the digital payments as much as we want them to do. And these are some of the challenges with which fintechs are kind of struggling with. And a core of this report is kind of focused on how to innovate for this particular segment, right? So yeah. So moving on to the next slide. So what kind of hinders innovation here? So if you see, there are 3 kinds of challenges or barriers which you see. So one is the customer level barriers, one is the provider level barriers, and the ecosystem level barriers, right? So the white paper also gets into the details on what each of these barriers are. To kind of briefly take you through, so customer level barriers. So cash. So I think cash is one of the major deterrents, I would say. So if you look at the demonetization, and now the cash has grown at a phenomenal rate. 32 trillion rupees is what the cash in circulation is. It's like an all-time high, and cash continues to be like a favorite of many of these LMI segment. So how do you kind of break this habit, right? Limited awareness, right? This is also something which LMI segment populations are dealing with. Close to 90% of India's population is digitally illiterate, right? And if you look at vulnerable segments such as women or old age people, there are only about 60% of people who have used internet. So if you look at the access itself, right? So the gender gap is almost 0 in terms of the number of bank accounts opened between male and female. But if you look at the usage, right, the gender gap is again 17%. So that's quite high for a country like India. So the report also gets into the details of how to kind of manage this gap. If you look at the provider level barriers, you see one of the most important challenge is one size fits all kind of an approach. So this essentially means I design a product for an urban segment, and I hope and pray that the same product will sell in the rural areas, which never happens, right? So we have like hundreds of thousands of segments. You divide it as per age, as per income, as per population, as per geography. So some level of customization is required, which doesn't happen, and that's why a lot of fintechs also fail. Lack of responsiveness with respect to the GRM. The GRM is the grievance redressal management. So that's also something which is really kind of a pain, because if you look at the kind of GRM which is available for for people, like nested IVR loops, like extremely difficult for a neo-literate or a number literate guy to get into it, right? So it's very, very difficult, non-responsive customer care. So all this kind of reduces their experience and kind of dissuades them from using digital payments. And if you look at ecosystem level barriers, so there is an excessive dependence on internet for all the innovations that we see. So if you look at the TRI data, it says 83% is the teledensity in India. But if you kind of come to the rural segments or the non-urban segments, it reduces. It's close to 60% or below. So how long can we kind of depend on internet, right? So NPCI has thankfully come out with a lot of solutions wherein people can access digital payments without using internet. So that's, I think, is great. Also, the other one is limited acceptance infrastructure. So if you look at the POS machines itself, the ratio of POS to per million population, so we are still lagging behind countries like an Indonesia or a country like UK, right? So we are far behind. So that needs to improve. And also cash in cash out network, Kiko network, right? So the recent report which came out from RBI May last year, it says 3.3 million BC agents is what we have, both including traditional agents as well as new age agents. But are these people really doing their job? Are these people really sustainable? Are the service providers really solving their problems? That's something we need to see. And the report also talks in details about this, because if the last mile has to be kind of pushed to use digital financial services, so these people, the agents, play kind of a major role. So what do you see? Like when you look at these kind of scenarios and the kind of products which NPCI has come out with, so I think it's really commendable. So below your screen you can see some of the products which NPCI has come out with, mainly for this LMI segment population. So here we have Aadhaar-based payments like AEPS, right? So the role that AEPS played during the pandemic for people to facilitate the withdrawal of their direct benefit transfers, it was really hats off to that innovation from NPCI. Similarly, Bhim Aadhaar Pay, right? So it's again a merchant version of AEPS. And if you see the growth of Bhim Aadhaar Pay, like 70% has been the CAGR growth for the last 5 years. UPI, when you look at the contactless payments, right, I don't have to speak about UPI. 6.57 billion transactions like last month. Month on month, it's increasing at a very, very rapid pace, right? And you have all the third-party players, the Phone Pays, the Google Pays, who are kind of leaders in UPI. BBPS with more than 20,000 billers. I think BBPS is sort of revolutionizing the entire bill payment structure in India, right? Again, 73% has been the CAGR growth here. And finally, the RuPay card, right? The homegrown card solution in India. It's the low-cost version. So you have seen the kind of competition it's giving to the likes of Visa and MasterCard, right? If you just look at the debit card, the market share, about 60% is what RuPay commands. So these are some of the solutions which NPCI has come out with, and which are really proud for India. And UPI is kind of followed. It's like the global leader, like IMPS was. Now UPI is kind of a global leader. A lot of delegations are coming to just kind of visit and understand how this was done. I think it's great. So the report also talks in detail about some of the recommendations, right? And I'll not get into the details of this. So what is required in terms of driving innovation for the LMI segment? And there are things like creating awareness, creating a positive experience for users so that people can use digital payments without much anxiety. A capability to trust digital payments. I think trust is one of the major factors which is sort of pushing a lot of segments away. And acceptance infrastructure, I already spoke about it. Even though it's growing at a very rapid pace, still compared to the population that we have, it's kind of still lagging behind. And also building a collaborative ecosystem is like very, very important. And the kind of platforms which you see are coming up, the super apps, the Open, the ONDC. So all these are a result of extensive collaboration, right, between multiple parties. So this slide essentially speaks about the kind of expanse that NPCI has seen as a vision for country. So like if you see the top four solutions, card, debit cards, credit cards, mobile wallets and UPI. So this is mainly for people who belong to the top 2 or 3 segments in India. But for the bottom segments, people who don't use internet or smartphone, NPCI has also been like thoughtful in terms of innovation. UPI 123 Pay just launched recently. I think it's going to make a lot of strides for the 40 crore feature phone users in India. APS, I spoke about Rupee cards and Bhima Aadhaar Pay. So these kind of solutions really, talk about the inclusive nature of NPCI and how they want to take the entire LMI population and the entire Indian population together when it comes to digital payments, so that digital divide can be reduced. Otherwise, we'll face a situation wherein only a few million population will be using like a majority of digital payments. So that's something which even the RBI doesn't want, right? When you look at the 4E kind of a framework. So yeah, so I leave you with this final slide, which talks about the journey of digital payments over the last few years. And if you see the names on this slide, right? So it has been a collaboration by multiple players: the Government of India, the Department of Financial Services, the Finance Ministry, and not the least, last but not the least, National Payment Corporation of India. So all these put together in in collaboration with the various private parties have been able to kind of put together the numbers which we are kind of currently seeing, and we must be really proud of this kind of an achievement. So with this, I leave you with the last slide, which which is the title of the report, and I hope that you take a chance to go through this very important report, and which kind of talks about the innovation for the LMI segment, and how it can be done at scale. So once again, I would like to thank NPCI for their guidance and support, and thanks for having us. Thank you very much. Thanks.
Thank you, Mr. Pillai and Mr. Bhatt, for that perspicacious presentation on how digital payments is driving financial inclusion in India. And I think we still have a long way to go, considering we have 40 crores mobile phone users, but 90% of Indian population is still not really aware of the digital payment mechanism. That was brilliant. Thank you so much. A big round of applause for this set of conversation, ladies and gentlemen. We'll be now heading for a quick break. Our next session is at 12:15 p.m. It's going to be on the realm of how banks prepare for evolving fraud threats. Once again, we would like to thank our platinum partners, beginning with Google Pay, our platinum partner PhonePe, our platinum partner Visa, our another platinum partner M2B Fintech, our platinum partner MasterCard, our platinum partner Falcon, and our registration partner NTT Data Payment Services. We'll see you on the other side.
like that. like that. You like it like that. like it like that. You like it like that. like it like that. You like it like that. it like that? You like it like that?
Council and Payment Council of India for collaboratively
Check, check. All right, once again, requesting all the guests to kindly get settled down. We have a really engaging and thought-provoking panel discussion coming up on the realm of how banks prepare for evolving fraud threats. So requesting all of you to kindly get settled so that we can begin the proceedings of the next panel discussion in a few moments from now. Thing is digitized, higher are the chances of cyber frauds or various risks, which grow as and when finances near digitization. However, the financial institutions have their own ways of coping up with any fraud threats that may circle around the finances they're responsible for. So let us learn and discover and understand more ideas about how the institutions are coping up with any fraud threats that may circle around the finances they're responsible for. Let us learn more about it on the topic of how banks prepare for evolving fraud threats through a panel discussion. I'd like to call on stage our moderator, Mr. Vikram Babbar, partner and lead financial services at Forensic and Integrity Services. So, Mr. Babbar, if I can request you to come on stage. FinCrime Compliance, lead AML COE EY India LLP. And joining him on stage are our respected set of speakers of the panel, beginning with Mr. Sean Ryan, General Manager APAC, Feedzai. Mr. Manish Agarwal, Executive Vice President and Head Credit Intelligence and Control, HDFC Bank. And Mr. Ganesh Jatadharan, Principal Officer and Head Anti-Money Laundering, Yes Bank. So let's fasten our seatbelts and begin this remarkable panel discussion. Over to all of you.
So do we need to wear it? Do we need to wear this? Yeah. Okay. Thank you so much.
Hello, hello. Hello.
Is it audible? I think it's audible.
Is it audible?
Just to speak, no?
Should be. Yeah, yeah. I think people can hear. Great. Thanks. Should we start? Okay. Great. Thank you and welcome to all the panelists. I think I'm quite honored and privileged to be here at the Global Fintech Fest 2022 and honored because I have a great set of panel with me today. I think the topic also is extremely relevant if you look at the way the last 2 years have gone by and even before that. The way we have looked at the pandemic, there have been significant changes in the landscape of the way the banking sector has gone through. And if we look at the way the risk landscape has gone through changes, that's even been more significant. 2-3 key changes which I have seen, and I'm sure everyone would agree to me, is the kind of digital transformation we've looked at from a financial services sector, sourcing of customers, customer experience, monitoring of customers, transactions, significantly being done through the digital modes now. So that is one key change that has come in significantly in the last 2 years. Data, I think that's another big change in the way we are now accessing information, gathering information. That has undergone a significant change, and the information is now being used from not even on perspective of how we need to interact with the customers from a banking perspective, also monitor the customers in that sense. And looking at the digital footprints, digital data availability, the kind of fraud and financial crime threats that have really come in that also has undergone significant changes. We've seen, I think I was reading some statistics around this. In the first 6 months of 2022, we've seen more incidents on cyber than we saw in the entire couple of years of 2020 and 2021. So you can imagine the way the landscape is really moving. So I think with that background, maybe Manish, I would first come to you.
Okay.
You are on the hot seat when it comes to one of the largest private sector banks of the country. So, we spoke about digital transformation. We're talking about how it's accelerated only. COVID has only accelerated all that, the pandemic. But like we said, there are threats around frauds. There are vulnerabilities that have also come up to the forefront. We've seen a lot of incidents that have been reported. How, as a bank, you're considering the fraud mitigants, specifically around digital channels, and especially when we are looking at the kind of volumes that are happening today from a customer standpoint. It's tremendous, enormous. How do you look at fraud mitigants when you see such a kind of voluminous transactions happening, your customers interacting on a daily basis, cross-border, all of that? How do you see mitigants around fraud?
So,
Yeah. Please go ahead.
so thanks, Vikram. Before we start, thank you everybody for joining in here. And it's a superb question, but I want to put some perspective, before we come to the real question. Okay. So if you see that COVID in a way, has provided us or given us a platform or an opportunity where we have preponed lot many things. Okay. If you see from an Indian perspective, probably 6-7 years back or 6 years back, not even completed 6 years, when we had the demonetization, we remember that what a long queue of the cash withdrawals that we had in the country. Okay. We went through the entire pandemic. Okay. But that situation did not occur. Okay. We did not see that people didn't have the money, because by that time, and I think we had learned the lesson, and we had understood it, that the digital, and if I can state in a Hindi, in a very very simple word, कि सारी कायनात लगी हुई थी डिजिटल दुनिया बनाने में. Okay. And this has been the mantra from the government, the regulator, and they have pushed it like anything, while the lot of fintechs have added. Okay. And specifically, if you see today, if you talk the digital transaction, today in India, the 80%, and I'm talking from the financial transactions perspective, there is an entire world other than the financial transaction which has moved to a digital platform. So, but if I have to restrict myself to the digital transactions which are from a financial world perspective, so 70-80% is being contributed by UPI. Okay, and NPCI is the main sponsor here. So you can see that they have created a platform, and it is such a simple and secured platform. And I think this is one thing. So while you must have read the numbers about the, last 6 months, the count of frauds would have increased, etc., you also have to see that the kind of transactions which are happening today. Okay, if I'm not wrong, the last one that UPI numbers which were published were more than 6.5 billion transactions in terms of account.
Yes.
Okay. Having said that, so while we state that, the transactions also have gone up, so the frauds, but we can't say every single transaction where the customer is defrauded, it reduces the confidence level in the system. So it is equally important that we make it more secure. Now the question comes that where is the problem? So at least from an Indian perspective, we can see that the government and the regulator have been very, very clear. They have worked on the simplicity, they have worked on the speed without compromising the security. So if you see entire architecture of a payment ecosystem in India, okay, you take it from the cards, whether it's a debit card, prepaid card, then your kind of transaction, whether it's an ATM transaction or it's a POS transaction or it's an UPI transaction, everything is today secured through a second factor authentication, which most of the Western world, if you see, they are still fighting whether they have to bring in the second factor or not. Not only that, you see the point of sale or the point of withdrawal, which is an ATM machine or the POS machine, they have changed. So now you have got the chip enabled, even the cards have converted into a chip-based cards. So a lot of security have been brought in. And that is the reason. It is simply like saying, why do you have a brake in the car? Why do you have a brake in the car?
Yeah, It's to really drive faster.
Yes, so
Exactly.
it has to drive faster. If you don't have a brake in the car, then you can't drive faster. I think these are the security features which have come in. They are helping us to drive faster. So now coming on to, if you talk about the frauds in terms of an increase in frauds, you will see that it is not any vulnerability in the system. What is getting hacked is the mind of people and the social engineering thing, and that is where the lots of frauds are happening. We don't have any scenario, at least touch wood if I can say, where any ecosystem breakout has happened. And even if you see that lot of data leakage that happened across the world, India has not been impacted because we had a strong two-factor authentication in place. Okay, so today the need that we have is to ensure that people are made aware about these social engineering techniques. I'm sure you would have been following the newspaper in last 7-10 days. You will find, okay, some large corporates, they have been defrauded. Is it a system vulnerability? Answer is no. So, yeah.
No, so I think very relevant points, and I was just trying to look at what are the takeaways from the conversation you just made, Manish. So I think clearly one thing is very important. When you talk about frauds and you talk about financial crime threats, it definitely impacts confidence, customer confidence. It impacts regulatory confidence. It impacts the entire organization as a whole. That means this is a very serious, there's a very serious implication when it comes to financial institutions like banks around these topics. But at the same time, when we're looking at the transaction volumes and looking at the way digitization has really gone through, you're saying that we are also looking at a lot of more security features as a country. We've really gone through that, which I would definitely tend to agree. And but having said that, I think there still are cases where incidents have happened. But I think what you're really telling is, and the root cause is a lot to do with awareness.
Lot to do with an awareness. And if you see today, the regulator is so clear that whenever you have to get into a payment eco space, whether you're a smallest player or you're a largest player, okay, there are criterias. There are specific circulars and advisories are in place which are mandatory. They are not obligatory in nature. That has ensured that the ecosystem is secured.
Absolutely. Manish, thanks for sharing those thoughts. But maybe I would like to take a cue from that conversation and maybe move to you, Sean. Because I think when we talk about frauds, we talk about threats, we also talk about how do we look at proactive assessments? How do you look at analytics in a big way? How do we look at behavioral analytics? And I'm hearing this term quite a bit now in different meetings. As a fraud practitioner myself, when I meet banks and I understand the way they are looking at monitoring of frauds, they talk a lot about how behavioral analytics now coming into play as compared to pure data analytics. I think it's a combination of things that are now coming into play. How do you look at the way transaction analysis, behavioral analysis now can be used more powerfully by the banks in really identifying the risk of fraud proactively? I think that is something which we would like to hear.
So thanks everybody. It's absolutely great to be here. Sean, I love the word awareness. I had a complete lack of awareness. I thought I was coming to a silent disco, and I arrived up and I found myself at the stage here, so I have complete lack of awareness here. So look, no, but in all sincerity, Manesh touched on a lot of points here. When we're talking about fraud, we actually need to be talking about customer. At everything we do, the customer's at the core. And when we're sitting down to understand how we can better protect customers, it needs to start first with what's the experience we want our customers to go through. Digital channels, digital transformation has gone to an exponential growth level due to the pandemic. Not just in here in India, but it's exploding right across Asia Pacific, and it's a global trend. And what we're also seeing, the knock-on effect of that digital transformation, is that there's a lack of awareness of the impact on customers. There's been a focus on just pushing a product with minimal awareness of what's the impact to the customer, because people are trying to push through customer experience with minimal friction, which I'm a complete advocate for. But what's really important is to have the awareness of what's the true behavior associated with these customer interactions. So traditionally, most fraud systems were purely after the event. They were a case of looking at an alert, there was a detection, an alert was kicked off. And that was on the basis of having very, very minimal information of understanding who that customer is. It was the payment information and a little bit of customer demographic. Now what we're seeing, this is a global trend, and this is something that is actually quite simple. I lost myself there for a minute. Actually quite simple. If we're able to understand all of the information associated with a customer, from the minute they're onboarded, right the way through to downloading the application, having the product, and actually have financial and non-financial events passing through that application or that digital channel. If we're able to monitor all of that financial and non-financial information in one place, have a true 360-degree view of that customer, we can actually monitor the behavior and know what good looks like. Rather than start focusing in on the knock-on effect of where fraud actually happens, if we focus on what real good looks like, we now have a view of, Sean, every Friday, my salary comes in, I make payments, I pay my utility provider, I send some money to my son, he's in college, constantly looking for money from me. It's every Friday, just before he's going out for the weekend, he's looking for money again. People know that this is a consistent positive behavior. So if we focus on that, using all the information that's available, right from behavioral biometrics at the start of the journey, which is core around digital trust, and again, trust is key here, right the way through to all of the events that's happening, bring all of that together, use advanced data science capabilities. We now have a true view of what the true behavior of my transaction, of my experience with your bank, with your financial institution, with your fintech. Then I'm able to say, okay, now I can manage what's happening. One of the big challenges is people are still running their functions in a very, very siloed fashion. There's a fraud team focusing on a digital channel. There's a fraud team focusing on a card. There's a fraud team focusing on payments. And even worse again, we have AML, financial crime functions, dysfunctional, silos, and away from the organization. I've worked in organizations where I've seen people, organized crime, defrauding my organization and washing that money back through my same organization.
Very true.
What's the challenge with scams? Everywhere it's scams at the forefront of everything. It's exploding. What's directly linked to scams is money mules. Now, if I was to turn around to the fraud department and say, how are you tackling money rooms? They say, sorry, Sean, that's not my responsibility. That's the compliance team's responsibility. So what we need to do as an institution, as an organization, as practitioners, is we need to start thinking holistically about customer risk, about fraud prevention, about sanction screening, about AML transaction monitoring, about the customer.
No, absolutely, Sean. I think very, I can say, good takeaways. And I would just like to summarize some of them for the audience as well. I think the first thing that you mentioned is clearly the idea or the way forward for looking at frauds is proactive assessment. Right? It's about understanding the different customer touch points in the bank and having a 360-degree view. And I think you very rightly identified that in many ways there is monitoring happening, and there is no question about that from an India standpoint. Like Manish also said, there's monitoring happening, but yes, there is a monitoring happening for cards separately. There's a monitoring happening for AML separately. Compliance. There's a monitoring happening for digital channels as such. And do we really get one platform? Do we get one view of the customer behavior, like you rightly said? How do we look at the behavior across? And I think that is something which is now going to move in. And I see again, the way I have been interacting with many banks, even globally. I think I'm seeing that unified approach now being discussed and spoken, and how that is being and how that is coming in from a perspective of one financial crime compliance unit, where you can get all of this to come together.
So just on that, a few years ago, we tried to do this about 10, 15 years ago, and we couldn't because the technology wasn't able to do so. I remember sitting down. I've been a practitioner more than I've been on this side of the fence as a partner. I've been sitting down saying, Sean, what information do I want? How many years information I want? I said, I want all the information that you possibly have. And my IT team says, sorry, I can't afford that. You've got 1 year of Teradata licenses, and that's about it. We can't manage the volumes. I remember doing business in mainland China, and with the same thing, all information is shown. The volumes of information, we just can't do it. That's not true now. Technology is not a constraint anymore. This is actually really, really simple. The only constraint that's going on is actually organizational change, organizational behavior, and bringing people together. That's the only challenge. The technology can do this, everybody. It's here. There's no excuses.
No, thanks for sharing your thoughts, Sean. I do agree, and I'll definitely come back on that change part, and I'll come back on that again. But I think that's an interesting step for me to move on to Ganesh. I think Ganesh, you again, handling, heading money laundering compliance for one of the largest banks again in the country. And I think the very interesting thoughts that came in from Sean as well. We look at money laundering compliance very separately or differently, when it comes to banks in India. Obviously, the idea is to look at suspicious transactions. But in many ways today, when we are looking at large fraud cases, I'm also seeing a lot of those fraud cases being investigated for money laundering. And that's been the trend. You look at any large incidents that have been reported for fraud, you'll also see some money laundering investigation happening alongside. But if I flip the product, and if I look at, these are the large ones, we all have been hearing about that. Mani spoke about maximum transactions going through UPI now. That's a different ball game altogether when it comes to that kind of product, when you see those kind of transactions. Do you see any challenges when you look at products like UPI, pay-through accounts? The suspicious transaction monitoring becomes extremely challenging there. What is your view towards that, and how, sometimes it could be common modus operandi. So it could, I could have a situation where there's a fraud, there's a mule account used, there's a KYC fraud, and then money has been transferred. Suddenly it takes the shape of money laundering. How do you see that transition from fraud to AML? Do you really look at those things closely, and how is your experience on that side?
Yeah, sure. Thanks, Vikram. Thanks, Sean. Yeah, good afternoon, all. Let's just divide the argument into two parts, right? And from the on the ground perspective of what's really happening from, say, fraud to AML and vice versa. So this is very simple. I mean, so fraud and AML are very clearly two sides of the same coin. So there is no doubt about it. So what is being fraud becomes AML, and what becomes AML actually, feeds off into fraud again. So there is no, question about it. And the question about coordination is really needed. Though there is a lot wanting to be done on the ground, but there is definitely, a lot of need and coordination that is needed between the various siloed teams currently that is there across at least the Indian banks, so as to speak. MNC banks, because of their MNC, culture and their processes are, different. I'm just talking for the Indian banking sector because by and large I understand that, it is pretty siloed, and it is siloed for a reason currently. It is siloed because the regulators basically for AML have their own, way of monitoring money laundering. And fraud is more, banks' own way to control, customers being defrauded. So that's the perspective as to why it is siloed currently, and rightly so today. Okay. So that's the reason why probably the coordination is lacking. But needless to say that very close coordination is needed. That's one. Now coming to the trends as to what do we see from the UPI perspective, or from the large the front page AML frauds that we see, right? Also the AML ED investigation of all these loan frauds, loan app frauds perspective, and how do we basically see those trends happen? So largely, again, there are two trends that we see here. The first trend is the trend of pay-through accounts / mule accounts. Pay-through is for these large corporate accounts being opened and money being flushed through. And I would talk for S Bank's perspective. I would easily say 25-30% of whatever categories I find as money laundering goes through these pay-through accounts. The next largest, or in my pecking order, the next highest is going to be these mule accounts. Mule accounts example is, I basically work for a proprietor, a small company, proprietorship-owned company. I'm a salaried person there. The proprietor, basically misuses my salaried account to flush through his own funds to be routed through for various purposes. Example, I need demand for high black money. So I basically use my salaried personnel to actually flush these money, and I withdraw cash through him and use it for my black money purpose, and the black could change to white and white could change to black, vice versa. So these are the two large trends that we see currently. And the second aspect of the UPI which you mentioned, So that's actually playing havoc currently. So the problem that we see as so the Indian private banking sector currently is, I have, say, these aggregator accounts, the payment aggregator accounts. Fintech is actually booming, right? So these fintech, example, all these, these fintechs which open these merchant accounts, right, gets parked into these fintech accounts, into these payment aggregators bank account. So as a banker, we would not know who's actually sending the money through. For example, I go to a portal, I actually go to an online application, and I, order, my food through, a marketplace from, from a restaurant through a marketplace. So as a customer, I go order through the marketplace to a restaurant. So there is actually a layer which is being created by design into this thing. So, layering happens in this industry by design. So unless banks work with each other, unless, the fintechs cooperate with each other, these insights cannot be shared with one amongst the other. And unless insights of who actually is spending the money is shared, there is no way that you can actually find out where actually the end use is happening. So there is a huge need for technological intervention. So technological intervention, like Sean said, is the need of the hour. Probably it's already there. It is for the banks to actually embrace it and make sure that the insights are being shared across one another. So that's my.
No, absolutely, Ganesh, and thanks so much. I think very important inputs. Like we first discussed, how important it is to look at the dialogue or the interaction between a fraud monitoring team versus a money laundering team. They cannot be looked into as silos. I think that's clearly the expectation going forward. But like you said, the trends around UPI, trends around pay-through accounts, and the way money mules are being exploited, that is something which is a core activity. But I think the biggest takeaway I thought was, how do you really bring the entire ecosystem together? Because how banking, sometimes it's about who's more responsible. Is it the banks who are having the transaction, the account, more responsible than the fintech who's actually allowing the pass-through to happen? Who's supposed to monitor? What is the end responsibility? Sometimes it gets lost between the overall activity, and we've seen that more often. So I think what you really mentioned is, how do we integrate, how do we collaborate more in the ecosystem to bring these things together? And clearly technology will play a key role, in this. I think the kind of conversations we had right now, Manish, you, Sean, and Ganesh, I think one common aspect I'm really looking at is, it's not just about one dimension. It's not just about how we can get more technology, gain better technology, or how we can get more awareness. I think it's about people, process, technology all coming in together. So maybe that makes me move to the segment on where I would like each of you to share your opinions. That if you want to bring about a change, today in how do you really monitor frauds and threats, what kind of changes you want to bring in, and if you can cover all the three dimensions, people, process, technology, that'll be a good way to go ahead. Yeah.
So thanks, Vikram. I think this is a very, very important item. People, process, technology. Okay. The last point which you told, okay, that who to be responsible and the responsibility is getting confused. If you ask me, my personal view is that the banks have to assume this responsibility. At the end of the day, money is going through the bank, okay? Whether it is a wallet or it's any app or etc., etc. At the end of the day, it's a bank. They are into the fulcrum of the transfer for the money. So they have to be responsible, okay? When you come to the process, I think that is an operational efficiency which is going to play a key role. When we talk about the various, common accounts or whatever we call, whichever name we give, it is important that at the time of onboarding, the right approach and right philosophy is applied. Why do we need not to give the common TIDs? We need to have the specific TIDs to the specific people, specific sets of merchant. Okay, that's a very, very important item. And trust me, it's a very old saying that bad days are called in a good days, okay, or a bad loans are written on a good time. So when there is a boom, it's the best time then that we can bring in these operational control. Okay. Coming on to the larger framework, I think Sean also touched upon is that there is a technology in place. That's not the point. That's not the problem. You look for a one technology option, you will find 100. Okay. What is the design that we have as an institution? Okay. And something on which we have been working on continuously, and a lot of work still has to go, is that this entire architecture have to be first bifurcated into uh, uh, two fundamental, structure. When you talk about the fraud risk perspective or a financial crime perspective, one, anything and everything has to have an authentication journey and an authorization journey. Okay, that's very, very important. So any solution that we look at it, we have to bifurcate that what is that it is going to serve me. Any journey at our space or at our workflow or all the products that we offer, we have to view it from this lens. Is there any place where we do not have any of them? Because one of them will be there. But the question is, how do I ensure that each and every journey has both of them? Okay. Then you can have various technology. You can have a behavioral biometrics, device authentication, IP authentication, various other techniques for an authentication. At an authorization, like you can definitely look at the velocity, you can look at the profile of the customer, the trend line, etc., etc. Then that becomes a very, very, I would say you will get a lot of books from where you can. But it is very important that these two steps are followed for each and every workflow. That's point number one. Point number two, which becomes, as we are talking about a technology, we are missing people. Okay. At the end of the day, it's the people who bring in the operational efficiency. Okay. How do you apply these thoughts? And that is where I think institutions have to invest, in the human resources as well. Okay. And the right kind of, and there is a lot of caliber, trust me. Okay. It's a question of how strong we personally believe to institutionalize. Okay. So we personally believe that these are the two things that we need to do, and then things will fall in place. The other item, as I discussed earlier, and so third very, very important item, when you institute the first two items is, and this I speak and tell to everybody, that we need to have a quantification criteria. And the criteria has to be very, very simple. And criteria has to be only simple three. I need to have a highest bad capture, lowest false positive, and the speed should not be compromised. So these are the three criteria on which any solution has to be evaluated and instituted.
Absolutely, Manish. Thanks for that. So authentication, authorization, like you said, critical. Investment in people, trainings is critical. And clearly quantifying, the way. And I would agree, in many cases I've seen where when banks are looking at new technologies, the kind of implementations that are done today, giving so many false positives, that's not really the most efficient, way of really looking at it. And I think then you spend more time,
Correct.
investments, efforts in resolving that more often. So yeah, thanks for bringing that up. But Sean, maybe, going back to you, and I think that is one important problem statement we've seen in many banks. So firstly, change that you were talking about, maybe I want to hear from you from that, and maybe one specific thing on how do we look at this problem of, false positives, transactional volumes. How do you see that getting resolved?
There's two key areas I want to touch in on, but before I start, I just want to acknowledge, this is an incredibly immature domain in banking. Fraud's been around for a while, but the world of financial crime prevention hasn't been around that long. It's only been a few decades. I remember back when I was working in Europe, less than 15 years ago, when one of the first EU acts for customer screening was put through, the third EU Act for AML. That's when, unfortunately that happened post that, really, really sad events in September a few years back. Sanction screening was not at the forefront of organizations' minds. AML transaction monitoring was the small team hidden in the corner. I can guarantee you the C-suite didn't know anybody there. Right now, I can guarantee you the C-suite know every single individual leader across the AML transaction monitoring team, every single person involved in sanction screening, every single person involved across the entire financial crime network, and that includes fraud. 6 years ago, it wasn't like that. Indeed, 3 or 4 years ago, it wasn't like that. There are two ways we can improve this domain. First and foremost, and Manish, you touched on it, is people. Because this is an incredibly immature domain, there is a lack of highly skilled people who truly understand the domain. And this is a real challenge. This is a global challenge, not just here in India, not just in Australia, not just in the US. This is a global challenge. Because it's a new domain, people are just getting used to the historical context of what's involved. Why do we have separate silo systems? Because we didn't need to bring it together because regulation didn't ask for it. Why did we have batch-based processes for the CDD process? Well, it's because technology only allowed to do a batch, and the regulator said to the banks, how far can you push it? And he said, we need to do an overnight batch. Okay, that's why the regulation is like it. So people is probably the most important part of the entire organization. Training people and having trust-based partnerships. This is incredible. The days of having a vendor is long gone. It's the days of having a partner you can truly trust, somebody that's going to be with you day in, day out. When the going gets bad, because believe me, these transformation programs, they're challenging. And they're challenging because of the people structure, and you want to be able to have a proper trust-based relationship. But the other key element I want to land with this, and if there was one area that I would like all of you to leave, and it's the importance of your information quality. Data is at the core of all of this. It's being able to uniquely identify an individual all the way through is down to information. Being able to monitor the customer behavior is down to information. Be able to use the latest and greatest in data science techniques, artificial intelligence, is down to information. There's no point in having the best data science studio team, PhDs, if you've got poor quality information. It's incredibly important to focus in on that.
No, I think that's very, very critical point, Sean, because I think we do talk about technology, AI, money, the kind of ML techniques that are being used today, and a lot of banks get mesmerized with these kind of features. But you rightly said, if you don't have the right quality of data information that you're really looking at, and again getting in data scientists to really look at the way your behavioral pattern analysis can be looked at from a red flag perspective. If you don't have the right set of data quality or data information with the right set of quality, all of this goes into...
So let's touch on a real world problem that's at the core of what we do, and we're very passionate about this, and it's a personal passion of my own: financial inclusion.
Yeah.
Okay. Now, financial inclusion is about getting onto the economic ladder for all fantastic reasons. Okay? No identity, no information. Can't get on the ladder because they can't get a credit portfolio. Can't open up a bank account because they don't have an identity to start with. Now, if we are able to bring in all the available information that's in your internal ecosystem, say, okay, well, they're not a customer, so they haven't been here, they don't have a bad track record, they don't exist. But bring in all the information from other platforms, from social media platforms, taking in questions of data privacy and so on. Taking in all of that unstructured information, there's a wealth of information out there, and bring in the behavioral biometrics data from the application. Bring all of that in at the start. You can start bringing up a profile of the person, manage that risk in real time to ensure that they're not a mule, to ensure that they're not fraudsters, they're just a genuine human being who's trying to have a better life to get onto the financial ladder.
Absolutely. No, if I read into the conversation, and the problems, and linking back to the problem statement of having, say, higher false positive, I think it's about what kind of data I really have. Secondly, what kind of data do I really gather, which is structured and unstructured both, like you said. And then looking at behavioral biometrics in a way from the application standpoint. So that could really enrich some of the information I have, and that could really help in reducing some of the false positive. If I read
and continuously monitor in real time. Yes. We're talking in milliseconds here. Again, because the technology can do that today. Bring all of this information together and monitor it in real time. Sure. You manage risk in real time, you can actually do greater things. You can take more risk. The more control you have of risk in real time, the more risk you can take.
Oh, thanks so much, Sean, for that valuable inputs. Ganesh, over to you. Like I said, three dimensions. What kind of change do you think banks should expect now in India to as a way forward?
Yeah. So the challenges that so basically the challenges we face drive these changes, right? So the challenges. So currently the list is looking like endless. So I mean there is like a list of endless challenges that banks face because the context, like Sean mentioned, is completely changing. What we saw 3 years ago is changed now. What we saw 10 years ago is changed now. What we saw last year is changing now. From a market perspective, way money launderers change their modalities, the typology is changing. So we have to actually catch up on that. So that's one which is happening. The challenges internally the banks face in terms of the dependencies we have, so in terms of the people challenges we have, in terms of technological challenges we have, in terms of convincing a top management to actually provide budget. So there are like so the list is endless. So, I just probably share what we did in the past year or so in for practical changes that we did past 1 year. Could be some examples that people can take away. One from a so I'll do it from an order of process, people and technology. I mean, that's the easier order, I thought. We actually did things. Technology is a little harder for us to crack for some reason, right? So from a process perspective, what we simply did was, see, process change is the simplest that you can actually tackle. It's about a reduced dependency. These can be reduced by creating some very strict tags are people responding to you, and the way you ask information should also be very clear. Just have simple formats so that people know what you're asking for. Say for example, if I need to do an enhanced due diligence about a particular customer because I find it suspicious, the clarity of information that I seek should be clear. That's one. And the response tag that my branch should actually come back to me should also be very clearly followed. That's a very simple thing that we have done, and it's yielding results. So that's one process change example that we did. From people side, what we have been doing in the past 2-3 months is extensive training about about your EDDs and CDDs that the branch should do, and how the AML team needs to interact with branch. So that's been happening. As we speak, we're having weekly trainings for branch. We have a very strong branch network in India, so we have got weekly trainings to build capabilities at the branch level. To make them understand the meaning of pay through accounts, because pay through accounts I understand it really well. My team understands really well. The branch who actually onboards these pay through accounts, wherein crores of money is being flushed through, right? It just clearly means that the branch does not even understand why they are onboarding that particular customer when they are not supposed to onboard that particular customer, despite having done a KYC. So that's the people aspect, the training aspect. Technology is like a wide game, which is actually which is open, starting from KYC, starting from false positive, interaction between teams, interaction between banks, interaction between the regulators and banks. So it's like a wide open space which is there. So it's like one step at a time. So currently we're looking at internally to see how fast I can do things, simple things like false positive, simple things like I have an AML system. How mature is the system is something that we are currently looking at.
So thanks, Ganesh. Yeah, sure.
Just on that, because you mentioned an important factor that we haven't really touched since the regulator. So previously the regulator wasn't that concerned about fraud with the amount of scams that are going on. It's a global issue. It's a regulatory issue. What we're finding is that the regulators, the most progressive regulators, are far more open actually to sit down and understand what's the capability from a technology perspective out there. Because again, why was the regulation in a certain way 4 or 5 years ago was because that's all the technology could do, and the banks pleaded with them, guys, I can't have 10,000 people punching through these alerts every single week. It's going to kill us.
Right.
So now what's happening, we're having very, very progressive conversations with regulators globally. And in Asia, I find them to be far more progressive than elsewhere.
I would agree, yeah.
It's great. So by understanding what's the art of the possible, we can actually do the impossible.
No, absolutely. Thanks for that. Thanks, Ganesh, for your thoughts. Maybe we just have enough time and for a couple of questions from the audience here. I'm just mindful of the time as well, but We can take a couple of questions if there are any. Any questions? Yeah.
Hello.
Yes.
Good afternoon. It was a very fine discussion about the fraud and AML sector. Myself, Sanjeev Misra from Indian Post Payment Bank. My question is that everyone is talking about the UPI and the scale of the transactions happening in a UPI. And we all aware how kind of the transactions happening in UPI. So can you throw a light or guess how much transactions under UPI that circular transactions like you said for AML, for pay through or money mule?
Ganesh, you want to take that?
Yeah. So the transactions that, personally speaking from S Bank's perspective, we are looking at transactions which are 100 million plus in a month. So that's the magnitude that you are talking about, which means, the way Manish mentioned, if banks were to basically do this monitoring, you can imagine the amount of alert that it's going to generate, and imagine the amount of the amount of control that one has to basically put in place. So it's imperative that we all work together. So it just cannot be done by a single entity because of the humongous volumes of transactions that just flows through. I mean, it's 100 million plus just in a month for a single bank. So you can imagine the multitudes.
I won't touch on India specific, but on similar vein, what we're seeing happening as well globally is regulators are starting to look at not just monitoring your domestic or your international payments for sanctions, and not just monitoring financial transactions and cash transactions for your suspicious transaction reports or suspicious activity reports. Domestic sanction screening is coming, right? Can you imagine trying to screen every single domestic sanction for screening? It's off the charts. Absolutely off the charts. We're talking about in India having to have teams of maybe 50 to 100,000 people managing alerts because the quality information's not there.
Yeah.
The only true way you can do that is start bringing this holistic capability together by bringing all of this information that we spoke about across the full customer life cycle together. When you do that, you can start solving these problems. It's already happening in some countries in Asia.
I'm sure, yeah. Any other question we have? Maybe we can take one more. Sure.
Hi, this is Shirish from Fintech. My question to both the bankers on the panel is, what are the specific skills that you see lacking in your fraud monitoring teams or in your AML analyst teams, and how are you sorting that out?
Thanks, Sirish, for asking. Manish, you want to go first?
Okay. Hi, Sirish. Thank you. So I won't say it's lacking. Okay. I think it's about the institutional willingness, how you want to institute this. Okay. Because please understand, if you want to bring in any challenge or any change, it is very important that it has to come from a bottoms up. Okay. So acceptance. So what actually happens, and this is the philosophy which we are having for last 25 years. Okay. Are you going to chase the numbers, or you are going to ensure that the right numbers only come in? If you have that philosophy in place, okay, things will fall in place. Then the individual is only an incidental, sorry for using this phrase, because you need to have that philosophy in place, that which way you want to run it. Because no individual is less intelligent, trust me. It has to be driven from the top. And sorry, if I may add the one point which my fellow colleague from the Indian Payments Bank mentioned it, I would only want to say, though I don't handle that particular piece, but these things cannot be, whether it's an UPI or any other business, okay, or any other payment pattern, it cannot be tracked in form of any percentages or a BIPs. It will be far, far, far lower. So trust me. So the benefits that you will weigh against the problem that you will have will be far lesser. Idea is how do we ensure collectively that even that smaller number is also reduced to zero.
Yeah. So a view which is complementing to what Manish is saying is, currently, skills are there. We are managing it well. It's going on. But when we look at the future, the way things are going to pan out with the UPI boom that's happening, the payment space which is booming. I think we need skill sets across the three fronts. People, they need to be trained about these financial crime aspects across the bank. And I mean, people, it's not just the AML and financial crime team, it's actually the front force, there is on the field, top management across. That's one. I need also people who understand these technology to actually implement them. So that's, something that we'll have to build. I need people who will be ambassadors for process change also, who will actually, implement these change initiatives. So for financial crime specifically, because it's not like a normal process change. I have a projects guy come and do process re-engineering. It's not that we're talking about. It's about understanding, AML, financial crime space. Accordingly, have those skill sets built in. I think there is a huge demand, so as to speak, in the market. That's why you see a lot of attrition happening in the market currently. The attrition across the banking sector, across the financial services sector is actually, pretty high, fueled by, all these, great resignation which is, happened currently. So while we are, doing okay for the minute, but I think the moment you take your eyes off, it's just going to be a big challenge. That's true, Shirish.
Thanks, Ganesh. And with that, I think we would like to conclude the session. Thank you so much to all the panelists for taking the time, and thank you so much the audience for really being here and being part of this most important and very enriching conversation on fraud threats. So thank you so much. Thank you.
Thanks.
Thank you, everybody.
I'm coming back for the silent disco.
Yeah.
Thank you.
All right. Thank you, gentlemen, for that really insightful conversation that you maneuvered. Ladies and gentlemen, we can give them a huge round of applause. And it's also time to thank our partners and sponsors, beginning with our theme partner, WhatsApp, co-powered by partner Amazon Pay, spend management partner Encash, in association with partner Perfios, payments partner Cash Free Payments, CEO's dinner partner HSBC, our communication partners Caliera, our banking partner Standard Chartered Bank, a diamond partner PayU, our diamond partner AWS, a diamond partner Kia.ai Infrasoft, a diamond partner Paytm, our networking partner Buddy Loan. And I'd also like to request all the viewers and listeners to kindly download the app on Play Store and Apple Store called Global Fintech Fest to get all the updates, happenings, actions of this power-packed conference spanning across 3 days, across multiple halls. And for our next panel discussion, which is on the realm of how wider acceptance of digital payments is rewriting India's MSME growth story, we have a special video message by Shri Shailesh Kumar Singh, Additional Director and Development Commissioner, Ministry of Micro, Small and Medium Enterprise, Government of India. So can we have that special video message being played on our screen, please?
Good afternoon, everyone. First of all, I congratulate the National Payments Corporation of India, Fintech Convergence Council and Payment Council of India for collaboratively organizing the third edition of the Global Fintech Fest during 19th to 22nd September 2022 at the Geo World Center, Mumbai. I understand that it is one of the largest fintech events. As you all are aware, fintech is growing and has the potential to become the solution for several issues. Fintech is raising the bar for the transformation of the financial industry, be it digital banking or wealth management or capital markets. This growth was accelerated by the increased demand for digital financial services and e-commerce amid the pandemic. New areas of innovation have continued to emerge across the fintech sector, including payment facilitation with the help of various fintech models. With a view to provide digital solutions to MSMEs, the Government of India has taken various initiatives to provide digital experience to the MSME sector, such as Udyam registration for online registration of enterprises, for delayed payments, the MSME Samadhan portal, integration of Udyam portal with GEM, the government e-marketplace, TREADS, eShram, National Career Service, and the Skill India portal for providing G2C, B2C, and B2B services. In my opinion, disseminating knowledge is an important mechanism to catalyze higher usage of digital financial services. MSMEs require training in how best to leverage digital payments for business growth and expansion, and how to avail of benefits in terms of forward and backward linkages. The Ministry of MSME is mobilizing institutions at various levels and organizing targeted awareness campaigns and knowledge series in association with field offices and various state governments periodically. Fintech has the potential to contribute significantly in the country's growth, in which MSMEs can play a pivotal role. I wish all the best to all the participants of this global Fintech festival.
All right. Folks, that was a very promising and compelling message from Shri Shailesh Kumar Singh ji. Folks, acceptance of digital payments has seen unparalleled growth across all the demographics, and it has been among the top contributors to rewriting India's MSME growth story. This growing phenomena can be explained in depth through our next set of experts in the topic of how wider acceptance of digital payments is rewriting India's MSME growth story. This session will be moderated by Shri Abhishek Swarnkar, in charge Credit Card National Payments Corporation of India, NPCI. And joining him on stage will be a set of speakers, beginning with Shri Pulkit Trivedi, Director Strategic Partnerships, GPay. A big round of applause. And joining him on stage will be Mr. Shri Nitesh Ranjan, Executive Director, UBI. We'll also have Shri Ram Keval Ramani, Co-founder and COO, Credible, and Shri Dinesh Pahadia, GM, Rico, joining us on stage. So over to all of you.
Yeah, so that's mine. A very warm welcome to all esteemed panelists at Fintech and all Fintech enthusiasts in Global Fintech Fest 2022. We are gathered to discuss here how wider acceptance of digital payments is rewriting India's MSME growth story. India's digital story has gone a long way in a very short span of time. Digital payments has increased 160 times in last 2 decades. India ranks number 1 globally in real-time digital transactions, and today every 2 out of 5 transactions in India are digital. It is estimated that by 2026, every 2 out of 3 transactions will be digital. BCG PhonePe study shows India's digital payment market, which is around $3 billion, will triple by 2026. MSMEs are backbone of Indian economy. Approximately 64 million MSMEs are contributing to almost 30% of
India's GDP, around 50% of total exports, and it is generating around 11.10 crore jobs. As the digital payment ecosystem continues to grow in the country, the businesses and individuals adopting digital instruments such as unified payment services, Bharat QR wallet, etc., the MSME industries has also begun to walk the talk and digital payment initiatives. MSMEs have increasingly recognized the importance of adopting digital technologies to reduce inconvenience to their customers and suppliers. So taking this subject forward, we have an esteemed panel of distinguished guests. Let me start the discussion with Mr. Pulkit Trivedi, Director Strategy Partnership Google Pay. Pulkit, Google Pay is one of the largest players in UPI space, and the consumer behavior which we saw in the pandemic, it continues. More digital and less cash is continuing. Pulkit, if I can ask you here, what do you think how digital payment will transform the MSME at macro levels, and do you foresee any challenges?
Firstly, a warm welcome to everybody. I think what makes India different is what you see here in the corridors in this convention center. Like, I'm amused to see the energy of everybody here in the conference. And this is what especially makes India different as a country. The sheer energy, the sentiment, the mood is very, very upbeat. And now if Abhishek, to your question, I think, look, MSMEs globally are very pivotal to the economic productivity, the social development, and the overall progress of each and every nation. And MSMEs actually drive 70% of the global employment. In OECD countries, they contribute to more than 50% of their GDP. And if you zoom into India, it is no different. The India retail industry is about $1 trillion, and guess what? 85% of that GMV of the $1 trillion is actually contributed by SMEs. So make no mistake, this is like a really, really large opportunity talking about. And if you really go back in history and time, unlike any other segment, actually digital payments was the first foray that digitization began to happen in the SME sector. They had no websites, they had no apps. In fact, digital payments was their very first foray or introduction into the fold of digitization. And this, to me, will be the building block of taking the digitization agenda of SMEs forward in a very, very big way. In many different ways, in ways that probably one could never have imagined. Things like how customer experience will be delivered by SMEs moving forward, how they will basically adopt more digitization into their business, whether it is supply chain management or customer relationship management, or the biggest opportunity of all, which is access to credit, which has been a big, big challenge in the many years. But if you speak about challenges, I think there are many challenges. There are incredible amount of challenges, but a few of them that stand out are that, look, I think the biggest challenge is about the awareness, about what digital payments could do, and the things around like what the micro and the small businesses always are in this unbelief mode where their perception about the transacting costs related to digital payments, not just UPI, I'm talking about payments as a whole, they believe that these digital payments are more expensive to them as a business and cash. And this is a myth that needs to be broken over a period of time. We as industry, we as the ecosystem players need to do much more in terms of building awareness on what digital payments, how they could benefit even micro the SME space.
Great. So in fact, so the vision of India making a 5 trillion economy, I believe MSMEs will definitely play a very, very pivotal role. So my next question is to Shri Nitesh Ranjanji, ED Union Bank of India. So the prospect of MSME getting affordable access to finance are very bright due to continued governmental focus. Digitization of trade records like GST, and also with schemes like Mudra and CGTMSE by SIDBI. So my question to you is, do you think digitization of payment will reshape and transform the digital lending landscape and will provide easy access to credit to MSMEs?
Yeah, thank you for inviting me here, first of all. Taking a thread from what Pulkit said, there is a huge contribution by MSMEs to the economy, including the GDP, exports, and the employment. But the fact also remains that MSMEs as such have their unique problems. So just look at the size of MSMEs. So estimates say that it's maybe 60 to 65 million units are there, of which almost 50% are into rural and urban markets. And I think every market has their unique problem for the MSMEs, leave aside the credit part. The good thing is that the formalization is happening gradually. So I think we used to hear that 10 to 12% is the formalization for formal sector credit for the MSMEs. But if we take Udyam registration data as a proxy, almost 10 million Udyam registrations has surpassed now. And if we then factor with the 60-65 million units, then from 10-12 we have now reached to close to 15% of formalization of credit for the MSMEs. Having said that, as I rightly said, that MSMEs have their own unique challenges. Now, if I look from the bank perspective, whether it is MSME or any other sector, for giving credit, a bank or lender has to do the credit underwriting, which is the risk underwriting. For the MSME, if a lender has to do the risk underwriting, the availability of data is very poor actually. And that is again by the nature of MSMEs, MSMEs are not like organized enterprise. So you have mom and pop shops, you have 2%, 5% enterprises across the country. They are more family members. They don't keep any formal account. There is a very small segment of MSMEs who actually keep very formal accounts. Otherwise, it's all what we call the kacha accounting. And any lender will not have faith on those kind of data. So that is one big problem. And in order to cover the risk of data not being available or rich data not being available, lender will require a collateral and security, which again is a problem with the MSMEs. So these two problems are genuine problems with the MSMEs. Now how the digital payments is addressing these issues. With the digital payments, and as Pulkit said, the adoption is actually increasing, and we have seen during the pandemic, in fact, the adoption of the digital payments by the MSMEs have been the highest across all sectors. So with the digital payments, we bankers and lenders will get more data of the enterprise. So we can, with the data, we can see what is the kind of sales, whether there is any seasonal pattern in the sales, whether there is any concentration into the sales with few data and this. So all these data will be very rich for the lenders to use for the underwriting. And I think that is what will be bringing a good solution for leveraging of digital payments data and other data for underwriting and lending to the MSMEs.
Thank you, sir. So they say data is the new oil. So the entire, there are a lot of developed economies which got developed because of oil. So now that fuel will be data in the coming scenario. So my next question is to Mr. Dinesh Pahadia, GM RICO. Sir, in the digital transformation, government and various government agencies are playing a very, very crucial role. So I would like to ask how government of Rajasthan and RICO are laying special emphasis on promotions of MSME in the state.
Thank you, Mr. Abhishek, and thank you very much for inviting me forum. I would like to tell you that government of Rajasthan and RICO are laying special emphasis for development of MSME. Number one, on 17 September, last Friday, government of Rajasthan has launched new MSME policy 2022. It shows that the government of Rajasthan is very keen and it's a focus on the MSME sector. Besides this, we have MSME Facilitation Act 2019. Under this act, all MSME just apply on the online portal and they will get the acknowledgement. There is no approval and no permission is required by MSME for the 3 years. So they are free from all kind of permission, approval, inspection under the state laws. So this shows the government of Rajasthan is very, very keen to promote the MSME sector. As far as the RICO is concerned, we are now laying special emphasis for development of MSME in the RICO industrial areas. And we are now carving out the plots of a smaller size, say 250 square meter, 500 square meter, 700 square meter to promote and to MSME sector. Earlier, we used to have a larger size of plots, maybe 1,000 square meter, 2,000 square meter. Beside this, government of Rajasthan, under the new policy, that is the Rajasthan Investment Promotion Scheme 2019. Under this policy, special set of incentives available to MSME sector. That includes for water harvesting, for capital subsidy, investment subsidy, interest subsidy. These are the incentives we are providing to the MSME sector so that they can get a better deal in the state of Rajasthan. So in this way, government of Rajasthan and RICO are laying special emphasis for development of MSME sector in the state of Rajasthan. As you may be aware that RICO is also providing the turn loan facility to the industries. And out of our total portfolio of 3,800 crore, most of the portfolio is to the MSME sector. So it's a very, RICO and government Rajasthan is very keen to promote the MSME sector in the state of Rajasthan. So this is the way we are promoting the MSME sector in the state of Rajasthan. And beside this, now RICO is developing special industrial areas for MSME units also. And other industrial areas, we are also keeping some plot reserved for the MSME sector. So this is the way we are promoting the MSME sector in the state of Rajasthan.
Thank you, sir. In fact, I am from up north. I am from Gurgaon, and I have seen a lot of these industrial plots in Rajasthan, Bhiwadi, and all that area.
Yeah.
So I would like to congratulate you. The kind of work Rajasthan government is doing in the space of MSME, it is truly commendable.
Yeah, thank you.
Ram, my next question to you: new age fintechs are giving boost to MSMEs, and the whole digital ecosystem is resulting in better cash flows and overall better margins. So if I can ask, if you can give you some insight, what are your views on the impact of digital payments in transformation of the supply side and the demand side for the MSMEs?
First of all, thank you so much for having a part of this panel. So today, if you really look at it, consumers or customers who render goods and services from MSMEs, their first mode of payment today is digital payments, right? Especially since COVID and how well UPI has done. That's evident in the last 3 years. Adoption of digital payments by MSMEs has, enabled them to actually access new avenues of growth. You take e-commerce platforms. So today, through e-commerce platforms, MSMEs can, grow and reach out to more customers, geographically, not only nationally but also internationally. And this is a big boost for their revenues as well as, for them being competitive in the market. What digital payments has also gone and done has enabled them to manage their business better, especially in the inventory management side. Because they have real-time transaction history, they can manage the inventories better, which again leads to efficiencies and profitability. And lastly, if you really look at it, what digital payments has gone and done it has enabled them to get access to formal credit, right? Especially for MSMEs who are, underserved or new to credit. For them to get access to credit is a big thing. Today you have, new age fintechs, NBFCs who've written credit models that are based around transaction history or cash flow based credit products. So this actually enables them to close the credit gap, which helps them to grow faster. Moreover, I think what MSMEs can now do because of, a digital payment footprint is to avail more and more services, banking services such as insurance, Forex, investment products. All of these things actually help MSMEs to grow faster, which in turn is actually helping the economy to grow faster.
Absolutely, Ram. In fact, at NPCI, National Payment Corporation of India, I can proudly say that we also have contributed to the digital transformation of the country. From UPI to Aadhaar-enabled services to FASTag, so the team has created, the NPCI has created an ecosystem which is helping MSME in general and the whole economy in particular for the growth. In terms of MSME, in NPCI, we have co-created a product called RuPay MSME card. We have co-created with Ministry of MSME. And I am more than happy to tell you here that Union Bank of India is a very strong partner in that product. So we are giving this card proposition to all the MSME entrepreneurs, which has very good benefits for the MSME entrepreneurs. So sir, if I can ask you the next question. Union Bank was established in the year 1919, and you have seen radical changes in how payments have transformed over the year. If you can, sir, please tell us how Union Bank is simplifying the overall banking experience of MSMEs and how significant is focus on digital payments for MSMEs.
Yeah, so actually Union Bank is not only simplifying for MSMEs, but Union Bank is simplifying for all classes of customers. And today we believe that digital data and analytics is actually going to drive and simplify the entire banking and lending experience. And that's how, as a vision, we have that over the next few years, over 50% of our retail loans and retail relationships should be driven by the digital channels only, which is presently hardly into high single digit. So if you look at what we are doing, I'll just share a few examples. One, from the perspective that how we are leveraging the data for lending to MSMEs, and secondly, that how we are actually enabling MSMEs to do more and more digital transactions. So on the first part, we had complete straight-through process for the business loans or the small borrower size. And when I say straight-through processing, it is like a customer, a prospective customer can from anywhere without visiting the branch of the bank, without talking to any employee of the bank, accesses the mobile app or goes to the website of the bank and punches in a few data points about himself or herself, and the entire thing gets verified and business rule engine runs. And if it meets the criteria set by the bank, the loan gets sanctioned. And not only that, immediately the amount gets disbursed into the account. So that's how we have done, and we have done almost 10,000 or more than that accounts under this straight-through process. Secondly, one bigger problem that we have solved using data is about the renewal process in MSME. So, you know, as per the regulatory norms, every loan has to be renewed, reviewed every year. And it's a huge problem actually. And I'll tell you the extent of the problem that of all the MSMEs who bank with us, over 90% of them have limits up to 1 million INR. And you know, these 90% of the customers, MSME customers, have to come to the branch every year, submit their documents, and to get the renewal process. And from the bank side, as well as the borrower side, it's a quite manual and time-taking process, loss of man hours from both sides and opportunities. So what we did is, using the data which is available through their account statement, cash flow, and the GST data, and we found that out of this pool of 1 million, up to 1 million limit MSMEs, almost 80-85% have these kind of rich data. So we use that data, analyze the data, and based on that we decided, our business rule engine runs and say that yes, this account is good for renewal, showing the turnover, cash flow, everything. And a message is sent to the customer that, okay, are you okay for this renewal digitally? Customer has to just put one click, and then it comes to the branch head, and branch head has to do the second click. So in a sense, it has simplified the process in such a way that what used to take many days now actually happening at a click of button. So these and many things we are doing now. And as I said about the business loan, right now it is for the small business loan. Now we are increasing the ticket size for that, which will also happen through a straight-through process. Secondly, on encouraging how MSMEs actually use digital payments, one you rightly said is about the MSME credit card, and we are very proud at Union Bank of India that we associated with NPCI and the MSME ministry to co-brand and launch this MSME card. And it's getting good traction today amongst the MSME borrowers. And what it also is helping, that it's giving good data to us about the uses. Otherwise, some of the transactions for the MSME entrepreneurs like travel and all these things were not getting captured, which is now getting captured through the credit card. On top of that, you know, it is actually a credit card. It's not a CC limit where for every time you use the limit, you have to pay the interest. So you have a 50 days grace period. So that is another added advantage to that. We have also been experimenting with a soft POS experiment. So taking the physical POS to your mobile being the POS machine. And that is a real problem across the nooks and corners of the country, because making available the physical POS as well as the servicing of that resolutions, it is a big problem. So right now we are testing with the soft POS, which is just an app in the mobile phone of the same MSME customers. And through that, any NFC enabled card, and today most of the cards are getting NFC enabled, NFC-enabled card can actually that handset will actually work like the POS machine. So that is going to solve another problem. Then obviously we are pushing for the QR code adoption at the smaller level of MSMEs, including the street vendors. So these are the few initiatives we are taking using the data. Thank you.
Glad to hear, sir. A big bank like Union Bank of India, which is present across the country, and with the technology, it is bridging the gap between smaller cities and the metros. So very good to hear, sir. The technology is helping MSMEs, entrepreneurs, and generally people, Union Bank customers, and it is helping the entire economy. So very thank you, sir, for the statement.
I'll just add one point, which is very interesting in terms of adoption. So I said that the renewal for MSME, which we have launched for up to 1 million of loans, which is just a one click by the customer, which used to be several times visit of that customer to the branch. So when we are doing the pilot in, I think, eastern part of the country in Varanasi, one of the customer having around 1.2 million limit, he came to us and he told us that you please reduce my limit to 1 million so that I am also covered into this and I have to just give one click for renewal rather than coming to your branch several times for this process. So that is the adoption for the digital actually.
That's very awesome, sir. So taking the discussion forward, in the digital revolution, banks and fintechs, they are working side by side to creating this revolution. So my next question is to Pulkit. Pulkit, as of 2022, Google Pay or GPay is present in around 46 countries. It's a truly global organization. So if you can tell us here how GPay is doing in the space of MSME and how are you helping MSME in this digital journey?
Sure. So many of you may not know, but unlike what we think of American tech companies, let me share that we are very proud that we built a bespoke product on the UPI rail called Tez and launched it in 2017. And we are incredibly proud of the partnership that we built with NPCI, banking partners and fintechs to very humbly be a part of this incredible growth story that we've seen. Having said that, I think some of the things that we did at Google Pay was that we tried to take a very localized approach for India. And having said that, we launched Google Pay in 8 languages. Recently, we added something called Hinglish, which most of us use in our day-to-day lingo. And this is also in line with what Google India is trying to do in India in terms of driving internet adoption and also making sure that while this adoption around the internet is, while more users are coming on board the internet, they have meaningful ways to engage with the internet. Because beyond the 350 million people in India, the next slew of hundreds of millions of users don't understand English. So how do you not just make content that is available in their vernacular language, but also make the interface with the smartphone easy? Things like speech to text. And we are bringing some of that goodness even to Google Pay. So last year we launched in partnership with you where somebody could just enter their phone number while talking to the phone, validate it, and make the payment happen. Having said that, I think we truly believe that this actually is a flywheel between consumer adoption and how SME embrace digital adoption. So on one hand, you have to build trust, you have to drive simplicity of usage for users, who in turn will drive the demand side for SMBs to make sure that they are actually providing or adopting digital payments where consumers can come and pay to their. Not only this, at Google India, we created a $10 billion India digitization fund, which is meant to drive the next level of the digitization agenda, including in the payment space in India. One of the other things that we did in the pandemic, which was incredibly useful, was that we launched something called a nearby feature, where on Google Pay app, you could actually look for the nearest store while you were in your house. You could see whether the store is actually maintaining pandemic protocols, safety protocols. You could see whether they are open or closed, and you could even call them. So it was kind of trying to build a quasi-commerce experience. And we are incredibly proud that we were the pioneers in terms of launching what we call the video KYC back in 2019, when we launched the Google for Merchant app for millions of consumers in India. So I think we truly believe that this agenda of driving the next phase, not just driving digital adoptions agenda, but the next stage of digitization in the SMEs is going to be a partnership effort between fintechs, technology players like us, banking partners, and the government. And you, of course, Abhishek, you are the center of driving this whole agenda. So many congratulations.
Thank you. So in fact, so the entire ecosystem, breaking the language barrier, bringing the digital ecosystem, digital revolution from India to Bharat, I think that is going to change how we see how we are doing digital payments right now in the country. So for the next question, Ram, I would like to ask you, Credible is one of the largest working capital tech platform, and currently it has disbursed around 5 billion working capital annually. If you can please throw some light on innovations that your organization has done at Credible for MSME sector.
Right. So, currently we are disbursing about 5 billion in working capital to about 200,000 borrowers, of which about 80% would be the MSME sector. What we've gone and done is we built a platform, a growth app for MSMEs that essentially allows us to provide 3 pillars of growth for MSMEs. The first pillar would be cash management and business intelligence tools, where SMEs can use the app to e-invoice, to collect payments, to make payments, to check their balance sheet in real time, and also have a predictive cash flow tool over there so that they can actually manage their business better. The second pillar is embedded finance. Here, what essentially MSMEs can do within a click of a button is avail a plethora of banking products such as credit, insurance, forex, investment products, so that they're enabled to grow efficiently, right? And they're no longer needed to go to a physical bank and go through the entire tedious process of availing these products. The third pillar to upscale is essentially trade enablement. Because the platform is connected to, like I said, about hundreds and thousands of small businesses as well as large enterprises, today SMEs can use the platform to actually trade within each other. All this is enabled for the MSME to actually grow efficiently. And that's where we are seeing the maximum traction and the need of the hour, especially for the MSME sector.
Great. In fact, so when I see, in fact, in this panel also, so we have Sir from Union Bank of India, which is there for almost 100 of years, serving MSME and the country in digital payments and overall banking. We have Ram and we have Pulkit in the new age economy, and we have Dinesh Sir, who is helping Rajasthan government in building an infrastructure for MSMEs. So Dinesh Sir, I have one question for you. RICO has played a very important role in the industrial development of Rajasthan. I would like to understand how Rajasthan government is leveraging fintech for promotion of industries in general and MSMEs in particular.
Thank you. I would like to inform you that Rajasthan government is nowadays emphasizing on the development of digital and IT. Rajasthan government has set up one of the largest and best state data center in the state of Rajasthan. And most of the state government websites and data is available on the state data center. And it is one of the modern state data center. Second, Rajasthan government has launched a portal, single sign-on, SSO. So every citizen can log in on that SSO and can avail the services under all state government services, whether it's a RICO, whether it's a UDH, whether it's a JDA, any department, any state government department, they can avail the services through this SSO login. Besides this, government of Rajasthan has so many e-mitras. These e-mitras are located in the city as well as in rural areas. Any citizen can go there and avail the state government services, whether it's the payment of the water, whether it's the payment of the electricity, whether he want to take the land records, any services which is in the domain of the government for the citizens. Besides this, as far as RICO is concerned, RICO is taken a digital payment system. RICO, nowadays allot the plot through e-auction system. And in the e-auction system, in 2019 and 20, RICO allotted only 1,200 plots. But during this COVID, 2020 and 2021 and 2021-22, in 2020 and 2021, RICO allotted more than 2,800 plots. And in 21-22, we have allotted more than 2,600 plots. It happened because RICO adopted the technology. In e-auction, anybody can apply for the land from anywhere in the world. And we accept the digital payment. We have a 3 payment gateway, one HDFC Bank, one ICICI and SBI Bank. These 3 payment gateways we have availed, and anybody from anywhere can apply for the land allotment. He can make the payment through these 3 payment gateways. And beside this, we are also provided the side plan of the plot, 360-degree view of the plot, then the Google image of the plot. Everything is available on the website. So any entrepreneurs who is interested to buy a land in RICO industrial areas, there is no need to physically interact with any officer of the RICO. He can go to the RICO website, RICO ERP system. He can see the plot. He can see the Google image of the plot. He can see the 360-degree image of the plot. He can see the site plan. He make the payment through digital only. And he can allot, RICO after the bidding system, allot the plot. So this is the way how RICO and government of Rajasthan is laying special emphasis for the digital payment and fintech activities. And you know, RICO is also nowadays providing the term loan activities through online. So anybody is interested to avail the term loan, he can apply online, and the RICO system will allot sanction the loan through the online systems. So this is the way how the RICO is adopting the technology, adopting the fintech.
Thank you so much, sir,
Yeah.
for that wonderful insight. So with the permission of panelists, members, can we take a couple of questions maybe? So if anyone has any questions for the discussion or anything which is related to digital payments or MSMEs, I mean, you can ask the questions. Yeah, sure. If you can, Mike.
Hi, I'm Devdut. I work for Axion, which is a financial inclusion company. My question was related to the whole language barrier that we were talking about. I think Google Pay and the rest of the apps are doing great, UPI is doing great, but we still see a large gap in the way people in the rural areas or even elderly people in urban areas are able to use this system. So what is your view on how can we accelerate this gap as soon as possible?
And your question is to which panel member?
It's an open question,
Open
so
question.
yeah.
So
let me take that, Abhishek.
Sure.
So look, sorry, I forgot your name.
Devdut, I'm from
Devdut,
Axion.
nice to meet you. This is one of the hard problems that needs to be solved, and I can assure you that Google is committed to solving this language barrier, and it's not about just about making Google Pay easy. It's the journey where you have to make the interface with the device in a way that the user is comfortable interacting with. And that thing has to basically break the language barrier where you are making you move away from, let's say, an English keypad, as I said, to speech, to text form. I can tell you a dominant change in behavior that we are seeing on Google search is we are seeing an increasing growth on voice-based queries on Google search. Now that's a very big leap in terms of breaking that language barrier. You don't need to type. The other thing that you need to do, therefore, is when somebody interacts with their device, how do you show content in the language that they understand? And today, if you really see, 75% of India's mobile internet traffic is actually video, and video is at the forefront of solving language. Now we are taking some of these learnings and bringing it to an experience that we are building for payments, and we have to make the whole interface and the experience very, very immersive. And as our mission statement, if you really read the Google Pay mission statement for India, our mission is to make payments simple, reliable, and fast for users. And simplicity is where the whole engineering prowess of Google is dedicated to make that whole interface of using Google payments very, very simple across age barriers, social barriers, demographic barriers, including how people use in India. So this is a journey. This will get solved over the years. As I said, one of the leaps that we made was you just, pronounce your bank account number, and that gets entered onto the Google Pay app, and you can make the payment. Now, these are some of the simple measures that we are taking to solve for some of these barriers.
Great.
Anybody else?
So any other question? Sure. So please keep your questions brief and let me know to whom you are asking the questions.
My question is for, it's an open question,
Sure.
but it's specifically about the credit crunch that MSMEs face. I understand that you're talking about digital payments, how it will support the MSMEs, but particularly during the phase of, say, a pandemic or demonetization, the worst hit tends to be the MSME segment. So what kind of data, you've spoken about embedded credit, etc., but how do you see the MSME sector becoming more capable of demanding credit from the lending sector? How do you see that trajectory happening?
So one thing is that definitely, as I said in my opening question also, that there is a greater formalization of MSME happening, and that is driven by the government efforts, regulatory efforts, and the entire ecosystem of the lending players. And that's how from 10 to 11% of MSMEs getting access to formal credit. Today, as I said, if I take Udyam registration data as a proxy, it could be over 15% of MSMEs are getting access to formal credit. Now, if I ask in this room, and if you can raise your hand, 2 years ago, how many of you could have thought that MSME will actually choose the lender? I want lender A, lender B or C, unlike going to a particular lender and struggling that. I don't think anybody could have thought of that. Today, actually, we are entering into that era. So, and somehow we are not giving heed to what government has done for us. So apart from Aadhaar, which has been very revolutionary, the three other important part of the digital India stack, the UPI driven by the NPCI, account aggregator framework, which is bringing the data in a trustworthy manner, in a scalable manner, and the OCEN framework, which is actually bringing the loan service providers and the lenders together. I think this troika of UPI, account aggregator, and OCEN framework, this is actually going to democratize the lending to the MSMEs. And as I said, MSMEs will have a choice of selecting a particular lender, and we are not far from there. There are pilots going on right now on the GEM Sahai using the OCEN framework, and right now we are working on the similar kind of product for the GST Sahai, where the lenders will take the GST data and send the offer to the MSME, and MSME will choose, yes, I want bank A because of this interest rate and these services. So I think we are transitioning towards that, and the transition is happening very fast. I think next couple of years, we'll see many use cases of this, and that will help us increase the formalization of MSMEs very faster way.
Great. Yeah,
So-
just to add to that,
Sure.
I think there are two other things, right? So if you look at 4-5 years ago, a lot of the banking services were analog in nature. And I think with the advent of the rise of fintechs, bringing technology in, and the partnership between banks and fintechs, I think that's only going to increase and improve the credit disbursement to the MSME sector.
Sure. So we have limited time, so we will again come to Q&A in case time permits. The closing remarks and the last question to the eminent panelist. Let me start with Ram. So what do you envisage Indian MSME journey in next 5 years through the lens of digital payments?
So like I said, I think with the partnership between fintechs and banks, MSMEs are, obviously going to get access to credit, which I think is one of the most critical aspects for the growth in the MSME sector. Because today, if you look at it, 63 million MSMEs out there, less than 15% have access to formal credit. credit gap is more than 350 billion. So it's a huge number, right? And I think what's going to play a massive part is going to be the rise of embedded finance, right? Now, embedded finance or banking as a service is essentially, non-banking companies providing financial services at the point of sale, right? So if you look at in the US, you have companies like Spotify, or you have, Grab in Southeast Asia, which is a ride-hailing firm. They have been pioneers of providing embedded credit to their customers. And if you look at it today, more than 50% of the revenues is actually coming from embedded finance. And so if you look at it, 5 years hence, you're looking at MSMEs within a click of a button getting access to credit, insurance, forex, and whatever else that banks sell within a few clicks. And I think that's going to be a game changer. So I think embedded finance / banking as a service is the future, and none of it is actually possible without the adoption of digital payments.
Nitesh, sir, same question. How do you foresee as in the future of digital payments for MSMEs and general in next 5 years?
So see, digital payments itself is increasing from low double digit today. 75% of the all transaction for the MSMEs is happening through the digital, and 25 around is through the cash, and it's going to leapfrog. So I don't have any number for the MSMEs, but if I take a proxy again, and if I use the BCG data, they said from 2018 to 2021, the number of transactions per savings bank account for individuals has increased 2x, And the prediction is from 2021 to 26, that in the next 5 years, the number of transactions in the savings account will increase 8x. So from around 70 today, it's going to be close to 600 transactions per account, which means that similar kind of reflection will happen with an MSME. So you can just imagine the richness of data. So what this digital payment and the data will do, one, I said that MSMEs will choose the lender. And second, as a lender and what we are doing in the MSME space today, I can visualize that the small borrower accounts, let's say 20 million or 50 million, or simplicity, let's say 20 million, which is again guaranteed by the government agencies. My belief is that in the coming years, now it is whether it is 2 years or 3 years or 4 years, that time will tell. But very soon, small borrower accounts, for that MSME will need not come to the bank branches. It will happen at their place of work, at their enterprise, at their home, and with the minimum possible time. That's what I can visualize. And this is the space, let's say even if we assume 20 million of limit, this is the limit which will actually cover huge population of the MSME in the country.
So speed and pace is going to be very important in coming 5 years. So my last question, sir, Dinesh sir. So what do you think digital payment future in Rajasthan per se and overall? So what are your views on digital payment for MSMEs, which is for next year in Rajasthan and overall?
Yeah, thank you. Government of Rajasthan decided to set up industrial areas at every subdivisions. So in the next 1 year, we are going to set up 147 industrial areas across the state. And most of these industrial areas will be for the MSME sector. RICO so far has developed 390 industrial areas. And now to promote the Fintech sector in the state of Rajasthan, so far RICO has already promoted agro, IT, and gems and jewelry, textiles. But now we have realized that this Fintech is another sunrising sector. And to promote this industry and to attract investment in the state of Rajasthan in Fintech sector, RICO is developing a Fintech park at Jaipur. This park is very near to Jaipur International Airport. And the size of the park is 95 acres of land. But we will be promoting the verticals. And so far we have already planned about 36 plots ranging from 1200 square meter to 18,000 square meter. And some of the plots we are keeping reserved for the MSME sector so that they can set up their digital payment system or they can set up their back office or KPO. We are also inviting investment from the banks also for the digital payment, transaction, credit payment, blockchain, so many other activities involved in the Fintech sector. And RICO is already, sanctioned 230 crore rupees for development of this fintech park. We will be developing the approach road, internal roads, sewerage, water harvesting system, smart power system, smart water supply system. So the focus is on fintech sector in the state of Rajasthan, and RICO is committed to develop this fintech park and to attract the fintech companies in this fintech park. And the studies, the location of this park is very strategic. It is very, very near to Jaipur International Airport. It is hardly 1 kilometer away from the Jaipur International Airport. So my request with the audience and the CEOs and companies present in the hall, I would request if any company is looking for their new operations or expansion of their activities in the fintech sector, I think this fintech park Jaipur would be an ideal location for them. And I am sure that this will be the one of the largest and first fintech park in the North India.
Great, sir. So, for this amazing discussion we had, the last question I would like to ask from Pulkit. Pulkit, again the same question. Where do you envisage the Indian MSME journey through the lens of digital payments in the next 5 to 10 years?
So Abhishek, as I said, this is a flywheel between consumers and SMEs. And I believe that we do about, 200 million transactions a day on UPI. I'm very confident that this number will be a 2 billion number per day. And this, in turn, will enable MSMEs to be more agile in terms of, one, serving their customers via the digital payments apps or surfaces. In my view, I think a dominant portion of that growth is going to be driven by MSMEs, number one. Number two, I think, as everybody has spoken, I won't dwell more into it, but credit is a big interplay where digital payments can actually be the rail that can solve the credit problem in India. I also believe that there are 2 or 3 very important factors that we should remember which will make MSMEs more agile. And when you think about this, payments and commerce are actually now converging. So you see a lot of commerce companies globally getting into the payments domain and vice versa. And China is a great example of this. I believe that digital payments is the first point of entry which will enable MSMEs to compete in this whole online commerce space very, very effectively in the next few years as we build on this platform together.
Thank you. Thank you so much. So it's a wrap. Thank you so much, my eminent panelist. And this was indeed a very fruitful discussion. And also I would like to thank the audience for being patient. So thank you so much for such enthusiasm. And with that, I would like to end the panel discussion. Thank you so much.
Thank you, sir.
Thank you.
Thank you, Abhishek.
All right, thank you panel members and moderator for that super engaging conversation. We'd like to thank and acknowledge our partners who've really enabled us to pull off an event of this proportion, beginning with our country partner, UKFCO, our country partner, Kingdom of Netherlands, our credit score partner, Pesa Bazaar, our conversational commerce partner, Carix, our P2P lending partner, Faircent, our VIP lounge partner, Cred, and our insure tech partner, Cover Genius. Folks, as the sun rises every morning to shine beautifully over the world and bring light and positivity, the banking sector has also risen magnificently and has become a strong industry which is highly lucrative and giving high returns in multiple ways. Let's hear more about this facet on the topic that every company will become a fintech company, the rise of banking as a service, with our moderator, Mr. Shashank Shekhar, Head of Consulting at the Digital Fifth. We also have the following speakers joining us for the session, beginning with Mr. Sumit Agarwal, founder and CEO Vyapar. We have with us Mr. Jitesh PV, Head of Digital Federal Bank, Ms. Aditi Olman, Director, New Initiatives Cash-Free Payments, and we are also joined by Mr. Rajesh Mirjankar, Managing Director and CEO at Kia.ai. So over to the panel members. Yeah.
Hello, 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 hello.
Hi, am I audible?
You are.
I have to use the mic to speak, is it?
Yeah. Hello, hello. You can hear me?
Yeah.
Check. आ रहा है ना? Yes.
This is.
Hello. Good afternoon, everyone. Hello. I hope people can hear me. Yeah, great. I know it's very difficult to have a session after lunch, and especially after good lunch, but definitely we're gonna have an interactive discussions around the topic itself is a pretty interesting, which primarily talking about making every company as a finance company or fintech company, right? Delivered through the banking as a service platforms. So that's the primarily we are going to explore the various aspects of the banking as a service. So we all know that, like in the last 5 to 8 years, I think I'll put it across that how the APIs has completely transformed the banking, right? And especially after coming the fintechs have started working very closely with the banks to deliver the various solutions around these banking APIs, right? But integrating with the banking APIs, the innovations around these APIs, and building new business model around APIs has always been an area of expertise, right? And that's where the new business models has evolved. Apart from the various other business model, if talk about from the API banking or open banking, like neobank and embedded finance and everything, past like banking as service also has been emerged as one of the key business innovations and which driving the rest of the other business model. So that's the area we are going to explore along with the panels who are sitting with me. So I'll just get started and I'll start with the Jitesh himself because when you are talking about banking as a service, there is a bank behind it, right? You need to have the APIs which is coming from the bank. So how, Jitesh, do you see entire the banking as a service evolutions? Because bank mostly working with the fintechs, right? And been transforming various business models. But as a banking as a service, what do you think that this thing's gonna evolve further to drive the various other business model? And what are the challenges that you see in setting up the right kind of the BaaS platforms as a bank, right? So that's what primarily I would like to hear from your thoughts.
Thanks, Shashank. Good afternoon, everyone. Good afternoon, fellow panelists as well. And the question is on BaaS. So I will start with a quote from Bill Gates in 1994. He said that banking is necessary, but banks may not be. So that's a premise on which banking as a service evolves today. So as far as I see it, today, see, Federal Bank is working with large number of, we have created an open bank ecosystem where large fintech partners work with us like Epify, Jupiter, OneCard, and many other fintechs are working with Federal Bank. And basically this is on the API banking service, open bank or API banking service, where they consume the APIs and build services, customer experience for the customers. But when you look at banking as a service, basically the future is evolving to be banking as a service. As rightly mentioned, the topic, every industry or every company you see may want to become or will become a financial entity. May not be a fintech per se, but they will start to offer financial services through their platform 100% in future. Maybe need not be in 2023-24, but going ahead in the next 5 years, I am saying that banking as a service is going to emerge as one of the key derivatives in the banking industry. And as far as the bank is concerned today, in evolved digital ecosystem, a bank cannot actually survive by itself just by having the legacy business models and contemporary banking models. Brick and mortar models are actually slowly dissipating. So banking as a service is here to come, but there are certain challenges. As one of the key aspects of banking as a service is basically the challenges or the regulatory and compliance aspects of providing banking as a service. So one important aspect of banking as a service is the regulatory aspects, mainly certain guidelines on the applications when an entity or when a fintech or when a company is actually wanting to implement certain or integrate certain APIs and provide certain services to customers. They also need to go through certain regulatory compliance, which is currently in India DPSC control. If it's a mobile application, you need to have DPSC controls. You need to have certain cyber security aspects. You need to have cloud security. You have a lot of other security aspects which a bank actually is having is currently mandated in the country. So it's not easy for an entity to just become a consumer service and actually offer services to their customers, but it may take time. They have to actually evolve, and I think regulations around banking as a service, whether the entire guidelines are applicable for each and every service or somebody providing one service versus somebody providing a number of services, what are the frameworks, whether it is lending versus a payments company, do we need to have a similar set of controls, etc. Will be questions which will be asked or will be actually answered in as we go ahead. So personally, I feel that bank as a service is going to be staying here, and banks will play a pivotal role in this because end of the day, only banks can actually provide that. So every bank, basically today, few banks are already there. Some of the major banks are already there, but other banks are also interested. Many banks are actually shown their interest. You would have read in various newspapers, digital media that many banks are showing interest to create operating an API banking platform. Every bank in the country will explore that, and I hope in the next 5 years we'll see banking emerging in a large scale in the country.
Yeah, thanks, Jitesh. So I think in India, at least in the last couple of years, we started seeing the phenomena of the BaaS exploding and widely. Now internationally also, if you look at it, I think when Plaid was acquired by the Visa, I think it made worldwide news and brought that such kind of the platforms in the picture, right? And I think the similar scene that we can see in the country where that you have the existing players on the BaaS who started as a pure play as a BaaS players, right? Working closely with the banks. But slowly we have started seeing that some of the players who has been experienced in building their own API stacks in the partnership with the banks and all this thing. And then slowly they started exploding and converting themselves as a platform and releasing as a BaaS service provider. So I'll come back to Aditi, who is a cash-free, and which is again has been pivoted into a kind of you can call it a BaaS. So Aditi, how do you see the such players? Why do such players is taking an advantage of their existing stack and then moving to provide the BaaS? And what kind of value proposition these guys playing, which will be like different than banks themselves providing as a banking as a service, as well as your counterparts who are pure play started as a BaaS?
Sure. Thank you so much for the question, Shashank. So, actually taking a step back, just like Jitesh had said, right? So what was the inception of banking as a service, right? There are a lot of platforms, right, who were providing various vertical specific or horizontal services to their customers. And then the inception came from the customer, where a customer today wants a very, very seamless journey. For example, if there is, let's say, an SME who is availing payroll services from a payroll platform, so they don't want to juggle between 2-3 different systems to get their payroll processing done, right? Similarly, if there is, let's say, a pharmacy specific SaaS, right, which is today helping with the invoicing, accounting, etc., the pharmacy then does not want to again go back to a different system to actually do the payouts of the account receivables and payables and so on and so forth, right? That was the inception. Now, when the inception came, gradually all the platforms realized that there's an this is a very important aspect of the customer journey, right? To facilitate not just payments, but also banking products, right? Now, when that came into play, these platforms, had a choice that either they have to then go and do multiple integrations. For example, if we take the example of cards, right? Cards for payroll or expense management or any such use case. If a SaaS provider, right? A SaaS provider's core job is not financial services. It is not banking alliances or banking partnerships, right? Their core job is to actually understand the underlying customer need and solve for it. That's where players who have been in the fintech space, who've been in the API banking space, for example, we at Cash Free have been in the payment space for a few years, partnering with banks and, really building that infrastructure. So that's where we believe that we are at that opportune moment, right, to provide that plug and play ecosystem, right? And like Jitesh said, it is always in partnership with banks, right? It is always, so bank is the bedrock, but essentially because of our experience of having built those relationships with banks, having built that infrastructure with banks, we believe that fintech companies can then also fuel that, right? So it's never either or, it's always and. So that's how we look at it, and we feel that that's only going to be various players from various modes. Right? There would be pure play VAS players, there would be fintechs and payment aggregators and payment companies that will come into the space, right? And it's a huge market where everybody can kind of really capture the market. And I actually think of it as a way of enabling better digital ecosystem, right? Better banking ecosystem for both B2C and B2B. So that's how we look at it from a banking as a service perspective.
Thanks, Aditi. So I think I'll come back to you with my counter questions, but let me just run through that with other panelists. So I think we have been speaking about that service provider, right? The guys who are providing the APIs, banks are directly as a player or maybe partner like in a cash free. But let's look at that. Who are the consumer? Who is going to consume their services from their side? But that's make the best, and that's where the subject that we are talking about. Every company will be fintech company, right? Every company who may not be in the financial services will start the financial services. So coming with Sumit, so Sumit, you are running a SaaS platforms for SMEs, providing the various solutions to this your SMEs, from the accountings to the billings, expense management, anything. How do you see that, and you have been working around that financial service enabling, so how do you see that banking as a service platforms helps company like you to bundle the financial services on your package to go deeper with these customers?
Sure, thanks Shashank for the question. So Vyapar, if you look at it, it's a billing and accounting, inventory management, GST solution for an MSME. The people who use it are really small traders, wholesalers, distributors, manufacturers that we deal with on our day-to-day life when we are going on the road, right? If you look at the ground reality of the country, more than 70% of the businesses are all still using paper pen to manage their business. There's a huge gap in the adoption of technology on the ground as a ground reality. Though payments is one section which has picked up really well, but still when it comes to billing and accounting, still the gap is huge, right? Now that is the first problem to solve for, and that's where we as a company are giving our spending our whole of time to get it adopted and digitize the businesses. Now coming to the next section, once this gets adopted, next comes the place where the banking, financial services starts getting to actually get distributed in this ecosystem as a whole. Otherwise, we always keep struggling or fighting with the challenge of how do we find the right customer, how do we take it to the ground, to the wholesaler, distributor, so that everybody can actually use these services. And very critical that with these solutions like Vyapar or there are many other products who are solving this problem. These solutions have to be integrated in depth. Like for example, if let's say a business creates an invoice, now invoice goes to his customer, that invoice should have the payment link. When the payment gets done, the money should come to the merchant's account directly. After the money comes into the bank account, it has to get reconciled with his invoice and the payment into his accounting system. Unless this whole cycle and the loop we are able to create and solve seamlessly, this adoption will continue to be the challenge. Now, how BaaS helps? That this is the place where BaaS and all the payment solutions that we are working on helps, because this cycle of completing the payments coming into the bank account, reconciling all the money that has come into the bank account with their actual real accounts which go to the CA. So that whole cycle gets completed and the effort of the complete ecosystem reduces. And this is not just the first, this is just the beginning. After this, once this information starts coming to the system, that gets added with the invoicing details, their purchase history, their expenses, and their bank account details. This as a whole becomes the actual data point which we all look for to actually start providing the lending services or the capital needs of that business.
Thanks, Sumit. I'll come back to for more use cases because
thanks.
You as a place that is in the ecosystem, you're directly working with the customers and providing this bundling of services. Jit has already spoken about the regulatory oversight of the banking, right? And wherever the banking services are there, the regulatory oversight is there, and that's why it makes it more complex. But when banking as a service being delivered from the third-party platforms, I'm talking about like more as a platform side, when the cash free or anybody else. You still need to take care of the regulatory oversight. So I'll come back to Rajesh. So your firm is very much into the RegTech and also working very closely with the banks and all this thing. How do you see that entire the API stacks or from the regulatory perspective complement the entire the banking as a service platforms? How do you see that entire the merging of both and then catering to the services in the banking, ensuring also the compliance part of it, including data privacy and everything?
So I think, like Jitesh mentioned, the regulatory part is where banks need to keep coming, fintechs need to be coming back to banks, and there was a mention also about the fact that banks are going to be the foundation of, as you mentioned, of what we're looking at, as Aditya mentioned. What we do as a company is to provide solutions to banks that provides the regulatory compliance using artificial intelligence, using various complex peer group analysis, etc. And this is owing to the fact that the bank has the entire data repository of the customer. It also has the customer behavior, and it also has the responsibility to report these anomalies, if any, to the regulatory authorities. So when we design these solutions, we have looked at providing, let's say, banking as a service in a manner where the service is available as a microservice to firms that they can easily consume. Fintechs are able to easily consume. And importantly, what we've focused on is to make sure that we are able to be servicing, we will be able to service the each part of the customer journey, whether it is originated at the fintech or whether it is originated at the bank, or whether it is being conducted at the bank, to make sure that the regulatory API is a seamless one that is available at any point in time. The same refers to the fact of even the banks having huge amount of data that can easily serve as an alternative data strategy that could be used for onboarding customers, whether it's for credit or whether it is for otherwise any sort of profiling of customers. And again, there to provide this as a banking as a service for firms that want to onboard customers onto their platforms, it's something that is very useful. And I think in terms of how Web3 has evolved over a period of time, and it's still evolving, one thing I wanted to just again clarify that regardless of whether it's Web 1 or Web 2 or Web 3, data would still be the base of whatever people would seek from the banking systems. So the focus on the API integration is going to remain, but I guess the way core systems today service the data will come through microservices, and there will be far more scalable services when you look at data provisioning done for banks.
Thanks. Okay, so I'll come back to Jitesh again. So Jitesh, we are talking about every company becoming in a fintech, and that's where that entire embedded finance phenomena has evolved. Now, in that space, one hand you are the bank. Earlier, the bank has always faced the challenge of technology limitations, the capabilities to roll out that APIs which fintechs may be needing. But now this banks also has evolved into their technology agilities, right? Now, on one hand, banks also trying to be in a banking as a service to such players who can providing the embedded services. On the other hand, you have also the aggregators, right, themselves as a building a business model around that. How do you see this as a competition, or do you see that's kind of the evolution of the business model itself within that API integration space?
Yeah, so see, these two models are actually the second model, which say in the API marketplace, which is actually evolving in the country today, mainly because, see, again, end of the day, as when I look at it from a point of view of a bank, even if the aggregator goes and integrates with the fintech, end of the day, responsibility of the customer or the compliance regulation and all the responsibility lies with the bank as an entity. I am responsible. Even if a marketplace sells a product to a customer, the ultimate responsibility for that particular customer is the bank. So that way, marketplace are actually currently no regulations. There are not big regulations. Maybe in the payment space, of course, you are seeing payments. Mainly the aggregation of the banking services happen in the payment space. But from when you look at the lending or maybe other services which are actually pure play banking like deposit or investments, etc., it's basically it is not actually, it is coming up. There are a lot of players who are starting to actually create such ecosystems. So from a integration from a bank perspective, from a API banking perspective today, I think there are multiple fintechs who are coming and working with us. where the bank has a comfort that actually data resides with the bank and the entire visibility of the integration is with the bank. Bank actually determines what type of security should be there, and we actually dictate terms as far as what security is required, and we also go in compliance with all the regulations which are applicable for the bank. The partner or the fintech also will be equally responsible for creating the same amount of security in their application. But when it comes to aggregators, it's not a competition. To answer your question, it's not a competition, it's actually complementing the bank. See, when an aggregator comes into the picture, it allows the services to be actually given to customers much faster. It will be a superior experience for the fintech also. Today, fintech is dependent on the resourcing from the bank side. Bank has to actually handhold each and every fintech, and that's a big challenge. Every fintech today faces the agility from banking partners. While in the marketplace, the difference, it will be completely different story altogether because it could be much faster rollout for the customers. But of course, there are other questions on, okay, the visibility of the data, who the partners. When an aggregator deals with multiple partners, there's a competition. Basically, as earlier he was telling that the partner itself or a BaaS player itself becoming a service provider in future. These type of risks are there in the aggregator model. So as long as the aggregator says neutral, they are willing to say that, okay, I will not change my model, I will only be an aggregator, then it's all fine. But the moment they feel that, okay, why am I doing this? Why don't I become a fintech or my own? Then it actually contradicts the entire, there's a conflict of interest between the fintech and the partner. So fintechs also may not be so comfortable as long as they don't have the visibility of their data secrecy, their privacy, confidentiality of information being sent through them, how many number of customers are being sourced. All this information, fintechs also want to ensure that this is actually confidential. So that is one challenge in the marketplace, in the aggregator space, but I think it's a good move. If aggregators comes in, it's a job easy for the banks rather than I struggling in each and every integration. But my aggregator will do that. But there is plus and minus on that.
I think rightly you put it. So I'll just maybe come back to Aditi to pick it from there. So when you're working with the multiple banks and multiple partners, right? And if any customer is looking for some banking services from you, how do you work with this partner that which banking APIs or which banking partner services that you need to provision for them, right? And how do the entire the business model works with that partner companies and the API aggregator and the banks behind? If you can just throw light and the audience will get in a more gradual, because it's a very complex subject, right? It's very difficult, like, okay, BaaS, but how does it works, right? If you can just guide.
Sure. So at the offset, I want to mention that it is a very evolving model, just like Jitesh also mentioned. It is an evolving model also because from a regulatory standpoint, from an operational standpoint, there's a lot of aspects that need to be taken care of. Having said that, to answer your first question on which banking partner. So if we take an example of, let's say, again, it's similar to what you see in card issuance. Today, let's say a fintech wants to start issuing cards. Depending on what is the requirement of the fintech and which banking partner can really solve that need, right? So essentially the way we envision building this out is to make it a very easy plug and play for the fintech, right? While we do the heavy lifting of all the integrations in the back end and provide that option. So for example, coming back to the card issuance use case, if there is a certain kind of KYC process that the fintech prefers, right? If there are fintechs that are, let's say, serving tier 2, tier 3 audience where they prefer, let's say, a biometric KYC for card issuance versus somebody preferring, a video KYC, right? So there'll be a lot of aspects that will go into deciding which partner to go with, right? And from a engagement model and commercial model, it'll obviously be like how aggregators work today, even in the payment space, right? So it's essentially, even for the commercial model, the basis will be on the basis of what our banking partners work on. And essentially on top of that, obviously the fact that we as an aggregator or as sort of a BaaS partner are bringing in certain value addition in terms of go-to-market, in terms of ease of integration, etc., etc. So accordingly, a business model will evolve, right? So I think that's again very closely knit. So I strongly believe that the aggregators and the banks have to work really closely together. At the end of the day, the bedrock, like I mentioned earlier, is the bank, right? And we essentially believe that just like in the payment space, it has evolved. Even in the banking space, this will evolve in a manner in which aggregators will actually support banks and also support the partners to go to market and sort of tap into that market faster and really, bring in, let's say, a lot of underbanked, unbanked population into the fold of banking. That's how we look at it.
Thanks, Aditi. So you already spoken about the evolution of this from the payments or the card issuance, which is now a kind of matured platforms. But how do you see that entire evolutions moving to the liabilities side of like saving account, where the banks has already built that kind of expertise and they're working with the neo banks and all these things. But I'm coming as a BaaS player, so liabilities side and maybe lending is a complex, right? Building and a kind of the aggregation into the lending. So how do you see that entire transition to the remittances and rest of the other things in the next 3-4 years?
Right. It's funny that you ask about savings account, because just before this panel, I was discussing the same point with Jitesh, that we do see that as another space where we believe there is a lot of value that can be brought into the table with aggregators. Of course, the critical thing that needs to be looked at in liabilities, especially in B2C banking products, is that data privacy is supreme, right? So how do we as entities ensure that? I do believe that a lot of fintechs are also they already have a very high level of data security and compliance, because of the fact that we are dealing with consumers' money, right? Payment aggregators and fintechs that are really working with banks very closely. But I think from an evolution standpoint, if you take the example of lending, for example, you can already start seeing this trend, right? So we are already working on what we call as an embedded lending stack, where we partner with NBFCs, right? And again, make it a very plug-and-play experience for platforms such as, let's say, Vyapar. Sumit just mentioned that Vyapar is also looking at how do we enable lending, right? So in such cases, how do we work with these anchor partners, right? And make it very easy for them to tap into their customer base. So let's say if they have 100,000, 200,000 merchants, right? These merchants are regularly using, the GST billing invoicing platform. In that flow itself, right? They require, they require a loan, right? They require working capital loans, right? How do we enable that? So keeping in mind the regulatory aspects. So of course, at the back end, it's always a regulated entity, right? It's either an NBFC or a bank. So all of the data-related aspects will be compliant and will be as per what the regulated entity requires. If you look at the new digital lending guidelines, it talks about disbursals and repayments. So essentially complying with those while ensuring a seamless process for the anchor platform and as a result for the end customer. That is what the goal is for us as BaaS aggregators.
Thanks for giving us a peep into that future. So when we are talking about the future, I'll come back to Rajesh, and where Rajesh has already spoken about that Web3 integration layer on the BaaS. Rajesh, industry is still in India, the banking and the fintech still has to evolve to streamline the use cases of the blockchain and all these things in the day-to-day business use cases, right? How do you see the entire merging of both the blockchain as a service or the Web3 onto that BaaS platform and catering to the banking services around the blockchain?
So what we've done is to look at the implementation of a Web3 ecosystem using the metaverse. In fact, we launched India's first metaverse in June, and we are now in touch with various banking partners to make sure that we can have banking as a service on this metaverse in addition to other businesses being enabled. When we look at the aspect that any firm could be a fintech, and like you mentioned in the beginning, in the introduction, it need not necessarily be just a fintech firm that would do that. It would also be the general large corporates that want to conduct their business seamlessly in the customer journey and bring in banking as a service to be able to conduct either payments or any other interaction that requires banks to come in. So this may involve, let's say, not just payments, but trade finance. It would involve regulatory checks and various aspects such as this. So when we looked at the entire Web3 architecture, what we've seen is there is a need to have, let's say, a distributed architecture for database where data belongs to the owners of the database. Then it's necessary to create a creator's economy as such. And what we're looking at there is not the convoluted view of what Web3 has emerged in the concept of a gaming verse, if I were to put it that way, with crypto as the base. What we are talking of is a payment mechanism which is without crypto, with the capability to render interfaces with the standard conventional payment systems but also then lend upon, let's say, new technologies that are coming around, let's say, blockchain-based currencies like CBDC, etc., being able to extend those. So when we look at banking as a service under a Web 3.0 architecture, what we see is, like I said, the interfaces would move to being more microservices-led, being able to enable a distributed data ecosystem, and then importantly, from an identity management perspective, the banks will play a very important role in terms of the regulatory change, because regardless of what happens in the ecosystem on a metaverse or a Web3 ecosystem, eventually when banks choose to go with the conventional financial solutions, they will have, or other consumers and firms choose to go with conventional banking solutions, they will have to come back to the bank to be able to conduct transactions or financial activities. And that's how we've based the entire API integration layer at banks, where it's a three-pronged approach. One is the API layer that as it exists today with banks. The second one is to look at not just the consumers that are driven by apps, but then to look at the 1 trillion IoT devices that will come with the 5G revolution in the next 5 years. So it's necessary to look at the integration to IoT straight away, because customer journeys there are in microseconds. And then the last layer being the interface layer, which let's say metaverse being an example. So I would say when we look at banking as a service, it would eventually evolve into a 3-tier approach in terms of rendering interface.
Thanks, Rajesh, for giving insight. So now, Sumit, now it's easier said than that every company will become a fintech, but running a finance is not an easy thing. Even though any non-financial company, you will have the BaaS players helping with the banking services, but building that business model around the financial services or banking services is not going to easy. So what are the learning experience that you would like to share with the audience, that when you're trying to build on financial services on a stack of your own services, what are the things that you need to take care, and what are the things that you should be expecting that API aggregator or all these things will helping you to do that?
Sure. Thanks, Shashank. So there are two critical things that need to be taken care from the product perspective that we provide to the MSMEs, right? One is using the BaaS services. So if you look at the lending piece, today also when we do experiments in terms of providing the credit to our customer base, one of the major drop points for them is actually uploading the bank statements or giving the bank data to the platform, right? So BaaS is going to help in there. That is first. That the journey is going to be seamless, and that drop that happens, because MSMEs when they need the capital, they need it like now. It's not that they will need it 1 month later, right? And if they're not able to do it at that point of time, then it just drops off. So providing that with the availability of the BaaS and integrated into the product, it helps that to make that data available at the right point when they actually they need it the most, right? That is very critical, and that's where it's going to help a lot in terms of improving the number of MSMEs who actually get eligible or get the loan in reality, right? When it comes to the expectations, I think from a company like us, it is most critical that we work with aggregators, because it is practically impossible to work with every bank separately. So we always prefer to work with aggregator, and it's very critical that aggregators have that common layer across all the banks. It should not change from bank to bank, right? It has to be common across all the banks so that the integrations are seamless, experience to the customers are seamless, and there are very minimal breaks that are required. And that also improves the time to delivery to the customers, to the MSMEs who are actually going to be the real users. So yeah, thanks.
Thanks, Sumit. I think we have heard panelists, but any questions that there in the audience, maybe we can just pick up 1 or 2 questions if in case there are.
Hi everyone, thanks for that session. My question is that while platforms take on the role of financial transactions, could be lending, payments, exploring investment options, but the fundamental institution of trust is a regulated entity which performs far more transaction than just giving loans or insurance and etc. While there is obviously a monetization angle for large aggregating platforms to mine customer data and externalize it for lending or insurance, but often the trust markers of consumers, whether it is in terms of transparency or whether it is in terms of regulation or what kind of data privacy the platforms hold, often gets breached. So what is your take that while RBI may time and again come and segregate the role of an LSP to an RE, but you don't need an external, like you don't need RBI to come back and forth again and again to distinguish that role. But what do you think are the foresight in the next 3 to 6 months as to how the platforms will try to shape up in this ever-changing scenario?
Maybe Aditi would like to pick it up, or maybe this. Yeah.
Yeah. So actually, it's a very good question. So basically, as a bank, from the experience, what we are doing today in the market, see the entire data lies with the bank. As I already mentioned, the ownership of the customer lies with the bank. Even if it's an LSP or a DLA or any partner working with us, the entire customer onboarding journey is all through direct SDK integrations with the bank, and the ultimate underwriting of the customer and the transactions or maybe if you take it lending as an example, the money directly goes into the customer account from the bank and not through the LSP. So LSP is basically an intermediary who basically, as far as we are concerned today in our current architecture, it is basically they just actually do the customer experience. The UI UX part is basically managed by LSPs and through the DLA application. So, but with the new digital lending guidelines, September 2nd, you went to see RBI coming with the digital lending guidelines. So, it actually clearly lays out actually guidelines for how the data privacy and all the other aspects of data has to be managed by the bank, and also IT outsourcing policy of the Reserve Bank of India draft policy is also very clear on how LSPs, DAs, REs should actually take care of the customer data, what type of data they can store, and all these aspects are clearly laid out. So I think in the next, already there are, with the digital lending guidelines coming in, there are a lot of changes in the market, a lot of players actually moved out, and they are all coming back to REs to actually build new business models and new technology integrations so that all these guidelines are basically clearly laid out. So today the responsibility of the customer, once again I would like to reiterate that, even the underwriting part, the customer communication, the key fact statement, everything should go from the bank, and bank is responsible for sending this information to the customer. So that way, I don't see that. Okay, I think that more and more LSPs or DAs and REs should comply with this particular guideline, and RBI is actually constantly working towards ensuring that customer data, customer privacy, basically are maintained, and it is in favor of the customer. So ultimate responsibility is with the REs only. Even today, banks are responsible. Banks and NBFCs, who is the RE, are responsible for customer data and customer privacy.
Thanks, Jitesh. Maybe a space for one question, one more. Yeah, please.
Hi, I'm Radhika Biani from Narottam Seksaria Family Office. My question is for all the panelists. So, do you agree that embedded financing platforms are becoming commoditized? And if yes, what are the 3 factors businesses would have to consider while choosing one platform over another?
Would you like to pick it up, Aditi? Because it's a direct question to you as kind of sell. Yeah.
Sure. So I can pick it up, and then would love to also hear from Sumit from his point of view as well. So I think, first of all, like I mentioned, I think it is about the customer journey. That is the most important aspect, right? So let's say if there is a particular business which is using an app, there is a relevance to why they're using that fintech or that SaaS platform or whatever app they're using, right? So it is about the in-app journey, and it's about how that problem is being solved in that moment in an embedded fashion, right? So actually, the way I look at it is, it's instead of thinking of it as being commoditized, the way it has to be looked at is it's becoming very hyper personalized for the customers, right? So yes, there would be a lot more platforms offering embedded finance in various capacities, but also it is going to become more and more relevant to the customer, right? And the choice that a platform should make as well as what the customer should make really depends on that. So if I am somebody who's regularly, using WhatsApp, and then it just is a natural next step for me to use payments for WhatsApp as an example, right? So it's all about that. So then, it's not about commoditizing, it's about making it relevant to the customer's use case. So everybody, whether it is, platforms such as Vyapar, who are solving for SMEs, or aggregators like us, or even banks for that matter, right? The focus has to be for everybody, has to be being customer centric and enabling, processes and tools and infrastructure that can make all of these use cases possible. That's how I look at it. But Sumit, would love to hear your view also. on that.
Sure. So I think Aditi, you have put it very correctly. Embedded finance is a great thing in my opinion, and it solves the experience of the customer right at the point where he needs something. The only I think the second question that you put is how does a customer choose the right platform? I think the answer to that is whether that platform is overdoing it, or it's focusing on the customer experience. I mean, if you look at the Vyapar platform, till the time Vyapar is not a finance company, it will continue to do it at the right. It will continue to do the right thing, because till that time, SaaS or the customer experience, billing, accounting, that is the primary business. If a company's primary business becomes credit, then there is a chance that it will get into the path of overdoing it. So I think that's a fine balance that has to be maintained by the product that you are using, and that's the company's responsibility to make sure that the customer's experience is not getting impacted. Embedded finance is to solve the problem, and we have to make sure that we are only solving the problem, not I would say hindering the experience of the customer.
Also look at who are the REs who are actually supporting the platform, which all entities are there. Can this stop all of over a sudden if one partner fails, whether there's a single partner dependency? All those things are some of the things which you can look at.
So thanks, Jitesh. I think that was very critical, because BaaS is not only the look at from the technology service provider API, but I think the entire partnership they are working in behind. So I think we are coming to the fag end of the session, but it was amazing discussions. Yeah.
Sumit, I think there was one question he was actually.
Okay. So maybe we can pick up one question. Yeah.
One last question, sorry.
No, you wanted to ask somebody, no, third row. Yeah, he was raising the hands. Somebody give him a mic if it's.
Good afternoon, everyone. My question is that every company is now becoming a fintech company or will become a fintech company. So how do you see the future of BCs, business correspondents, being incorporated or onboarded by the banks and FIs in future?
I think everybody will gonna have a space, because finance is such a big area, right? Banking is still isn't evolving. But Jitesh, what's your take? Because you're working in one hand with the aggregators and the BCs also you've been working.
No. See, as you rightly said, no. This is a large space. Basically, the penetration of banking services into rural and many of the rural areas is yet to be achieved. So BCs will continue to actually work with the banks, and while because basically embedded finance and other BaaS as a service, etc., will be mainly at the top layer, or maybe looking at offering services to a certain set of customers. But I think BCs will remain. But BCs also may actually change their path. They also will start to reinvent themselves in the future, basically, because there is a lot of automation happening, a lot of digitalization, a lot of enablers are like video KYC. So today you don't need to have somebody going and picking up a document from somebody's home, because you just can call anywhere in India. You can actually open an account sitting at your home just using video KYC. So naturally, BCs need to rethink about their strategies, and what maybe they can also become service providers because of their vast experience, vast connectivity with the banks and integration with the banks. They can also rethink at becoming aggregators or maybe service providers in a different space. But definitely, life of BCs is going to be difficult over a period of time. That is in the current form of physical management and going to the customer, making the payment, etc., will slowly come down. Because UPI, you might have seen, UPI has actually picked up exponentially. So somebody who wants to transfer money today used to get the money from a BC might have moved to some other payment of UPI payment or scan and pay and all the other things would have happened. So it's basically, in the near future, I don't see any challenge, but long term, I think BCs also need to rethink.
Yeah, thanks. I think we already plopping a message with the time's up. So I don't know. We'll have to check with the organization. Do we have a space for any questions? Can we? Yeah, Nadeem, can we pick up one question? Yeah, please.
Yeah,
Okay,
sorry,
thanks.
this is relevant to the Web3, which Rajesh was talking about. So can you just let us know how the identity management plays a crucial role, especially like you say the metaverse and the MetaMask, everything. So how people actually get identified in the metaverse world as such, because this what will happen to the KYC, especially. Like if you can put some thoughts, then it would be great. How we are going about.
Yes. So I think, and I mentioned this point, that we had a convoluted version of Web3 that was confused with crypto being necessary to be implemented. And I just wanted to clarify that when we created our metaverse, we created one where the KYC checks are done at the bank's end, or whichever way. A regulatory check that is done is then introduced as an avatar in the metaverse to be able to conduct transactions. If it was the avatar wanting to use presence in the metaverse to play a game, or probably go around the metaverse, experience certain virtual assets, etc., that is a different matter. But the moment you come across a financial transaction, or creating, let's say, a fintech transaction, or whichever way you want to look at it from a shopping perspective, that's when you need to have a KYC check done as per the regulatory requirements. So what we've done is that we are providing the metaverse to the banks as well, and I see that extending even in future, with or without our metaverse as well, where the identity management will have to be in conjunction with a KYC check done by a regulated entity, which can then extend itself to be able to conduct financial transactions in the metaverse.
Yeah. Thanks, Rajesh. So I think we've come to an end of the sessions. I think we touched upon almost all the aspects. But thank you, our panelists, for wonderful discussion. I think this is a topic that we can go on for some more hours. But thank you everyone for their time. Yeah, thanks.
Thank you, Shashank, and thank you, fellow panelists. Thank you, all the
Thanks, guys. Thank you.
listeners. Yeah, thank you.
Thanks, everybody.
All right, that was one stimulating round of conversation. At this point, we'd like to thank our partners and sponsors, beginning with our theme partner, WhatsApp, co-powered by partner, Amazon Pay, spend management partner, Encash, our in-association partner, Perfuse, our payment partner, Cash Free Payments, and our CEO's dinner partner, HSBC. Next, we'd like to acknowledge our co-agenda partner, beginning with Lyra and Paypoint, our session partner, Feedza and Bureau.id, our gold partner, Jokata, our gold partner, Payten, Innovity, Beams VC, and our session partner, Rico. On this note, ladies and gentlemen, it's time to segue and transition into the next set of dialogue and conversation, which is going to be highlighting and elucidating how startups move beyond boundaries. And to maneuver this part of the conversation and panel discussion, I'd like to call on stage our moderator, beginning with Mr. Prakash Jaiswal, Managing Director and Head of Business Banking, MSME Startup HSBC India. And joining him on stage is going to be Mr. Chirat Patil, co-founder at Discovery. Followed by him would be Mr. Mitul Doshi, Head of Finance and Ops in Video. Mr. Vinayak Srivastav, co-founder and CEO at Videoverse. And finally, we also have Mr. Vivek Tiwari, founder and CEO at Medica Bazaar. So with this context, I think let's get the fireside chat started.
check, check. I can check, check, check. Hello.
Yeah. Mithul, can you hear me?
I can hear you.
Perfect.
Yeah. Hi. Yeah. Vivek. Check, check.
This is fine. This is fine. We'll wait for some people to come. As we start, so we'll wait for maybe it's not.
Good afternoon. Welcome to the panel, which is titled Startups Beyond Boundaries. But before I begin, I wanted to say that we at HSBC are quite excited to be part of GFF. This is the second year we are kind of participating in Fest, and looks the outside environment looks quite exciting. So really looking forward to the event. Coming to the panel, at the subject kind of suggest, it's about how startups, and startup is a word we're using to kind of describe early stage tech businesses, new age businesses, which are trying to build businesses in a very different way, using a lot of tech. And I would start with one analogy. Let's say 10, 15 years back, for a business to think to go international, you had to create a playbook of your own domestically and then think about international. But the whole startup ecosystem and the new age economy has really changed that. You can see founders trying to get international right from the beginning. So the international is a part of the playbook right from the beginning. On that note, I wanted to kind of introduce my panelist. So I have Chirant. Chirant is from a very interesting company, and I'm going to not steal the thunder. He is from a media tech company. And I'm going to, so Chirant is from, I'm sorry. Chirant is actually from a very interesting red tech company, insurance tech company, and I'm going to allow him to talk about his business. I have Mithul. Mithul is from the media tech company, very interesting work they're doing. I have Vinayak, again, from a media tech company, and I have Vivek, who runs the largest B2B medical kind of platform. So first, let's start with the first question, and my question is to everyone. Do introduce your business and also talk about why international for your business, right? Why did you think of going international as a part of your business model? So why don't we start with you?
Sure. So thanks. Lovely to be here. Thanks for the opportunity. I'm Chirant. I'm one of the co-founders of Discovery. Discovery is an insurance in a box. So think what payment gateways allow brands to do to accept digital payments from their end customers. We are similar to that, except that we help to distribute insurance. So it's a one-stop shop platform for which is a combination of technology, license, and everything in between to help large distribution platforms like banks, brokers, fintechs, mobility, anyone actually, any business that wants to distribute insurance, we are a one-stop shop. So that's a little bit about us. As far as the question of why international, I guess, well, you need to kind of break it down, and we were chatting about it the other day as well. You kind of need to break it down into some sort of an international thesis. And for us, it was really the if and the why has to check before you get into the what and the how, right? So the if and the why of international growth for us was a no-brainer, or is a no-brainer. We are very early as far as our international growth is concerned, relative to some of my co-panelists here who have more mature business models outside of domestic markets as well. So in our particular case, the if and the why really germinated from the India TAM itself, right? So in B2B enterprise tech in India, to think about it a little anecdotally, there is hardly any precedence of any B2B enterprise tech that is an Indian startup that serves the only Indian market and is a unicorn, right? The reason is because there are pricing pressures here. There is sort of a fair amount of supply chain constriction, fragmentation, though it's a very interesting and a large market. So there are chances that sort of, and even if you look at on the fintech side, there have not been a whole lot of, B2B tech startups that have actually become big only by serving the Indian market alone. So we don't think we are going to be any exception from that sense, though there is, that playbook has not been written. So for us, it was really a function of greater monetization and revenue growth, scalability, and more importantly, the backdrop to that was that by definition, what we do is globally scalable. We essentially help any brand to distribute insurance, which means that that same thing can apply to any market as well. So the if and the why, the buttress of the if and the why was really that, by definition, this is something that become a large global business. So that was the ambition meeting the business requirement as well. So that was the if and the why, if that helps.
So in a way, I can say you're building in India, but you're building for the world.
Absolutely. I mean, if you look at sort of, I think Indian startups are that much more better suited, especially if you're in the API infra business model, which we are in. We are better suited to actually dominate this space globally. If you think about it, we have been sort of, business models have been born here on the back of the India stack, like UPI and other, and sort of, and sort of, open API based principles are something that is deeply rooted in our societal sort of, demographic, right? And for us to kind of, take that and, take a product that is built for India, by India to the world, right? I mean, that's where sort of we see the growth trajectory. So, so it's very early days. We just launched in the UAE, where we have, tied up with the private office of one of the royal families, and with in a JV that is accelerating our go-to-market there, because think of it as a red carpet treatment to enter that particular country, right? So. That has been it's very, very early days, but it has been an interesting sort of ride, and yet to really acquire our first customer directly on our books and sort of, book revenue, but sort of, a fair amount of advanced, we are in advanced stages. But yeah, so I don't know if, I'll be able to throw a lot of light as far as international. I think perhaps the, very early stage founders who are looking at, growth outside of India, one or two sort of things that will probably like to share would be that, think through the if and the why really, really well, and sort of, because some of these things are irreversible, right? So yeah, more along those lines, but yeah, it really starts with the if and the why.
Sure. Okay, that's interesting to hear. Mutul, why don't we hear from you?
Yeah. Thanks, Prakash. I think really great coming here. Good afternoon, everyone. So basically, I'm VP Finance and the Global Head of Finance for InVideo. Obviously, Sanket is the founder, and he's not been able to make it up for the entire thing. So I think for us, in video was a very clear idea. Like we want everyone to create videos or edit videos, which can actually happen online. So today, if you want to actually create videos, you need a lot of softwares on your machine. And why do you want this? Like if you want to tell your small stories to the Instagrams or WhatsApp of the world that are just coming out with the reels and a lot of other stuff which happens. So in video is that kind of a software which helps you create these videos online within 5 minutes, and you're just creating the wow videos with all the help of templates and other beautifications which you require, and you simply download it. And what you're doing, like you're just paying us a SaaS fees. That's kind of a model which we work. Now, obviously, when we talk about videos and stuff, so global was always a plan, because you will not restrict your customers only to India level, but because this kind of software is actually valuable and needed across the world, so that's where. So we are like present at 190 plus countries. Obviously, when we wanted to global, there was some challenges which we faced initially, but yeah, obviously with the help of a lot of connects and with our payment gateways, which are right now available globally. So you're sitting in India and you can actually access to these things. I think that's kind of a development which has happened throughout the world today. So yeah, I think that was very key and a simple thing for us. InVideo is already a global company, and we help you create videos and edit videos online.
That's good to hear. So what you're saying is the product itself and the consumer segment itself is global, right? You wouldn't restrict yourself to one location.
Yeah, exactly. If you see today, so let's just take an example of TikTok. TikTok is like globally, it has scaled like so far. Even you talk about Facebook, you talk about Instagram. So video is kind of a thing which people need. And that was one of the key things which our founder saw it, and he thought like, let's build it from now. Obviously, we were a little early in the market, but when we know that this thing is coming up, we were already there with our product. So we actually developed our product in such a way that we can even cater the global segment.
Vinayak, why don't we hear from you?
Sure. Good afternoon, everyone. Thank you so much for having us here. What Videoverse is today, and I'm sure everyone loves watching IPL here or watching any of the live sports. We are the ones that create key moments and highlights. Like InVideo creates and edits content for social, for individual users. We do this for enterprise companies. So if you have been watching IPL for the last couple of years, we have been at the heart of the technology, creating these replays that you've been seeing, on your TV screens, on the digital apps of the Hotstars of the world, right? When we started expanding, and this was back in 2020, when we started expanding beyond India, for us, it was very simple that the market within India started to get niche for us, right? Because the media industry is dominated by maybe 5 or 6 players. Beyond that, there's a long list and long tail that you can cater to. But if you really have to have global aspirations in serving the broadcasting units across the globe, you have to go global. So we went global very early in our journey. Back in 2020 itself, we started looking at the international markets. What that meant for us is obviously we had a very different thought process when we went international. We needed to have feet on the ground because we are a very heavy enterprise selling product. That means it's not easily sellable online. We cannot have a digital GTM created here. So we needed a very offline GTM to be created where we needed people on ground. So we started hiring early in the international markets. Today we have employees across 6 different countries. We are serving more than 28 countries right now, roughly around 300 plus customers. But with the scale, what we have realized is you pick your markets that you really want to win, right? And you can replicate what you do in one market. And that's exactly what we have been doing for the last 2 years. We replicated what we did in the Indian market, in the UK market, in the US market, and so on and so forth. Because each market eventually has a similar or a slightly different playbook. But the sales processes that you set for yourself is going to be one and the same. And like the other 2 panelists kept saying, though we always knew that we had global aspirations, we ended up taking smaller steps, right? We did not want to go aggressive. Though we ended up raising a lot of money, we did not want to go aggressive because it's very easy to kind of just try and kind of burn this money through and through without actually defining what you're really going to get out of it. So we took it slow. We took a lot of time compared to what the other enterprise companies would take in terms of growing. But I think eventual results for us have really proved that we have taken all the steps correctly. So that's what Videoverse is, and that's why we went global. Kind of an ambition has been stuck to us.
Sure. Thanks, Vinayak. Vivek, why don't we hear from you about?
Sure. Thank you, Prakash. Thank you, HSBC and Fintech platform for having us here today. So Medica Bazaar is essentially the largest B2B medical supply platform in India now. And the aspiration always has been to go global. Uh, if I if I if I just connect, what B2C and B2B platforms have in difference. I think as B2B platform, we have more of global connect. We have more customers who are coming onto the platform who see supply chain problems. We have more number of manufacturers who want to come and access that platform, because as we all know that medical care is inevitable, and you need to have access to care or access to healthcare delivery all over the globe, despite of whether an innovator is sitting here in India or it's sitting somewhere outside India, doesn't matter. So access to market is quite a key out here. So that's one of the primary reason why a platform like Medica Bazaar should be looking at more of a global opportunity and not just India as a market. In fact, just to highlight, and we all know that during COVID, what we saw was that real supply chain problems coming, out in our awareness, and what we could see that there are big challenges coming up, especially looking at the basic things, what like face mask and all of them. That's been one of the primary reasons for this, this kind of an opportunity to be driven with more of global market driven factors. And this is what Medica Bazaar does. And now we have scaled up, and we have presence across 18 countries from a customer base, and direct established entities around 4 markets beyond India.
Perfect. No, so what I gather from hearing from all of you is that there are multiple factors which took you international, right? For somebody it was technology, somebody it was the customer base, for somebody it was the supply chain, right? But one thing is in common, which is the point I wanted to make, is that you guys went international right in the beginning, right? You didn't wait for a domestic playbook to be created and then go international, which was the thing, which was the thing what traditional businesses did. Okay, let me move on to the next one. So when you go international, in a way it's an uncharted territory. So there are challenges, there are risks, there are regulatory risk. Why don't I hear from all of you guys of how did you face, what did you face, how did you maneuver them? And a lot of those will be very specific to your industry, which will be of usefulness to the audience. So why don't we start with you, Mithul?
Yeah, I mean, see, as I told you, like when we wanted to go global, obviously there were challenges, but we knew that like for a company like us, our major thing is like like setting up the entity was not an issue for us, just because obviously you have employees abroad, and the kind of people who can actually help you out with, and then you have your founders who are ready to travel to different countries and stuff. But the most important thing was the payment gateways, and the banks. So these are the two very key things when you actually go abroad. Like, so payment gateways has to help you cater internationally. Now imagine we have like 190 countries the customers paying us. Now obviously you cannot set up entities across all the world. Like, so you need to have a system where you are accepting different currencies to a single currency which you actually wanted to have in your bank and stuff. Now your banks will also obviously have to help us cater that kind of currencies which we really want to do. So as I told you, like the setup and stuff was not a bigger challenge for us, just because our previous experience come with that kind of a mindset, and we always had a mindset of going global. So we already planned our move way before even starting up our sales in global entities. So I think two important things was our payment gateways was really important, that we got it fixed, and our banks, which was like obviously the HSBC bank has really helped us to do that up. So I think this was the two things which we thought was a bigger challenge. But apart from that, I think everything was really streamlined and cool, because we planned it like way before what we wanted to do about it.
Okay, that's interesting. Chirant, what did you face? And you were at very early stage of the journey.
Yeah, I was just going to say that, 190 countries, and here we are yet to acquire our first international customer. So very diabolical state of sort of, business maturity. But, coming back to risk, I mean, we did our sort of analysis in terms of what are the key, risks. And broadly, the risks are a combination of strategic risks, where sort of, can the business model be sort of easily, displaced or disrupted in that particular geography. Then there is execution risk, very tactical risk, whether you have enough money, whether you have enough people, when you have enough sort of, throughput in that particular sort of space. Does the market itself want a solution that you're bringing to the table, right? So no two geographies are alike. And then, as you rightly mentioned, regulatory risk, right? So at least for us, relative to some of the other panelists here, we live in a very regulated environment. So for us, having the right sort of, regulatory kosher kind of a go-to-market strategy was very important. So we took the step only when all these three things were like, we could understand, assimilate, sort of, we knew what the sort of the top end of the risk was going to be in terms of, what does that mean to our sort of overall, company? Are we biting more than you can chew, given where we are, etc., etc. So we took calculated sort of, decisions based on sort of understanding that risk profile. And it's not to say that those risks have gone away. It's just that we know what those risks are. It's all about going into these markets with eyes open, right? So that's why it can dovetail back to the earlier point of the if and the why of international market expansion has to be spot on, right? And I think some amazing founders have come in and said that if you can plan things out well, to the extent that you can, especially in regulated sort of spaces like ours, you can try and hedge a lot of those execution risks that will happen once you kind of actually take a decision and go there. So
And maybe when you go to your next market, you're better prepared.
yeah, and see, actually, that's absolutely right, because in our line of work, we can expand in multiple countries very quickly, because there are you start off with proof of concepts, right? In our particular business model, connecting insurers with distributors. And that doesn't mean that you connect all distributors and all sort of, insurers in a country and exhaust that before moving on to the next market. You can pick and choose those battles depending on sort of what it means for you tactically in terms of business growth and scalability of the platform and so on and so forth. So, for example, companies like M2P, right, who are amazing companies run by amazing founders in the banking infra space, fintech infra space, if you will. They went between 2 rounds. They probably went in 12.5 markets. Right, so there is nothing stopping us from kind of doing that as well, and that's the beauty of building capital efficient asset light business models which are based on API first kind of principles, and we hope to kind of make good on that potential.
Vivek, what has been your, how have you navigated the challenges and risks?
Sure, Prakash. Before I do that, let me first try to explain how do you access markets, right? You access market 2 ways. Either you try to go to a market which has a successful business model like yours, and you try to replicate and you try to do something out there. Or you try to get market access to those markets where you have some ready customers coming out and you have a ready market for you to access it, right? And when you talk of the risk overall, you have many-fold risk out there. You have risk of, the greater risk is economic risk. If you can access market like Ukraine and tomorrow if there is a war, what happens? The second risk is regulations. It can go really left or right, you don't know what will happen. Finance, especially fintechs, are always under a lot of regulations. Your media is always under a lot of regulations, a lot of government policies around it. Similarly, healthcare also is under a lot of regulation. You need to be mindful of the quality of execution you do and the care you do. So when we talk about the risk, it is manifold. But I think as a founder, it is important for you to access that risk and to really look at opportunities which you can do a calculated, kind of risk accessibility, and you can move with that. I think the best is to understand which markets could have some kind of customers which could come to your platform. Like in our case, it was very simple to see. We could see a lot of customers coming from Middle East during COVID on our platform, and it was a natural flow of customers happening. Or we could see a lot of customers coming from Southeast Asian markets. We could see a lot of customers coming from Eastern European markets, Latin American markets, because these are the markets where you have the largest supply chain problems. So it was a natural progression for us to look at markets which had the most supply chain problems, like markets like India, which were big, which had deep, healthcare private-driven markets, which had larger populations, which had lower healthcare spend, which had, better or poor access to healthcare, I would say, may not have better access to healthcare. So these markets were always preferred markets for us. We'll never go and try our hand out in US market because we know that India as a country, we are far, far away from the quality of healthcare index what we see in markets outside India. So I think from our business perspective, these are the few things what we did, and we really did some good assessment before we jumped into a market.
Interesting. Vinayak, what's your take on it?
हमने तो इतना सोचा नहीं था. मतलब when we wanted to sell in the UK market and the European market and US market, the first thing was hire people there and let's go and crack a couple of clients. We did not think about GDPR. We did not think about compliance issues that we'll run into, the taxation issues we'll run into. Maybe all of these people have thought so, but for us it was very clear that let's first try and crack a couple of customers and then देखा जाएगा क्या होना है. मतलब compliance ये सब बाद में करेंगे. We had a very different journey. Obviously, we learned while we were trying to deploy all of this, right? We hired people before we could even understand what compliances in a normal country is. Like UK में hire करने के बाद क्या compliances होते हैं? What are the labor laws, labor taxes क्या हैं? ये सब हमें बाद में पता चला. मतलब and I'm glad that we took that approach because if we had sat down and tried understanding each market differently, maybe we would have taken a much longer time to do things the way we would have done it, right? And obviously, we had support from the best in the world possible, right? We have EY backing us, we had HSBC supporting us, but that didn't mean that we didn't get the right advice. It's just that we said that let's first hire, let's get the customers, and then figure out the rest of the things. So at times, obviously, our compliances were all over the place because when we did hire, 2 महीने हम salary नहीं दे पा रहे थे because our compliances were not sorted. And so then we had to open an entity in UK, we had to open an entity in US and figure out how the wiring has to be done for their salary payments. We had to figure out how to collect payments. Collecting payments and bringing it back to India also was another hassle for us. So we had to figure out if there is at least 20% concentration revenue coming in from a specific market, you open a subsidiary in that particular market. So we did all of this on the fly, right? We did it while we were growing, while we were acquiring customers. We did not stop for kind of making processes set in one place and say that we will first figure out how to do things and then get clients. I think that approach helped us a lot because today what we have learned from it is absolutely irreplaceable. The knowledge that we have gained from failing and not understanding and then learning the processes, I think we're definitely well equipped right now that we can sell in any country in the world. And we don't really have to worry about any of the local compliances, GDPR and how whatever happens really.
Interesting. So one thing common I hear from all you guys that one you do. So Vinayak did not do a lot of planning and thinking, but an assessment is required, right? Where to go, how do you meet challenges? And another common thing is that you do get better with time. Like,
Absolutely.
yeah.
You get better with time, but the important thing is to just assess which market you want to sell in, right? Like if you know that you want to sell in the UK market, you have anyways narrowed it down. Now, obviously, once you've narrowed it down, and you know what the customers you want to go after and you have the right set of people, whatever GTM you kind of take a approach on digital ho ya offline lo, if you know what market you're selling in, everything else will follow in place, right? And I think that's the approach we took, that we figured out the market and then we started putting the other pieces of the puzzle together over a period of time.
Perfect.
I think just one thing was very different from us was we were B2C first. Yes, I think B2C, we knew that our customers are going to come globally. And I think hence, I think we already knew that this planning has to be there. I think just because of B2C, we know that we have different currencies, different people coming in, and we had to get the setup done.
Yeah. Okay. So I have one more question, and this is often talked about when you go international. What kind of corporate structure, holding structure should you have? And there are various debates, right? A lot of people want to base the entire investment, debt in India. Some people go overseas. When you go overseas, some people choose a different location than others. And there are various aspects to it. There's never one correct answer for it. Vivek, why don't I get to hear your views on that?
Sure, Prakash. I think it all depends on the kind of investors you have, first of all. because investors essentially are a big determining factor in the quality or kind of a structure you want to maintain. Uh, most of the startups out of India would want to maintain a holdco outside India, uh, and they want to then go with a structure of having that holdco owning different businesses in different geographies or different countries to look at. Many startups who are aspiring to be, say, looking at an IPO or a public market in India would want to stay in India and then look for global market expansion through a holdco structure. In fact, we are one of such a startups who are doing that. So it all depends on what kind of corporate structure you want to follow. There are various routes to do that. I think you can actually add more value to it from a large global banking perspective, because you would have seen all of them, and since we are already working with HSBC as a banking platform, we know how things are. But as I feel that it is more to do with few factors in place. First is that what kind of investors you have, whether these are global investors who would want much more flexible tax structures around your corporate structure, or you have more of the investors coming out of India and they would want to have a different kind of a structure. So it all depends on quality or kind of investors you have. And more than that, in fact, if you have aspirations to hive off those businesses outside sometime, or maybe create a separate ownership structure sometime, it all relates to that. So in my view, it is more to do with your company, with your business, with your sector, and it's not very, very standard. No businesses are standard. Something for which can happen for a media tech cannot happen for health tech. It has to be driven with different kind of industries. And as we talk more about regulatory, more about economic risks, all of that, I think this all relates to that.
And if I can, examine this question from another dimension of customers, does customers or the target segment play a role where how you should decide your structure?
Yes, it does. The classic example is Amazon. See, Amazon is a marketplace in India. It runs inventory business in US. Because the Indian regulation does not allow DPI, the main apex body of forming regulations around startups, does not allow the FDI-funded B2C platforms to run inventory model in India. If Amazon had to run the inventory model in India, I don't know the scale of its operation on the way it would have gone the way it has gone in US. But it has to be driven by also the factors that how customers or what kind of market realities are, how you are perceiving things. So yes, as you rightly pointed out, I think it is also related to the customers and all your local driving forces behind it.
Chirant, what's your view on this? Again, your business is all about the target segment in that place, right? You don't have international. Is insurance tech is all about domestic target segment?
For that market, yes. So typically, so if you are in the UAE, for that matter, and you want to distribute insurance, you have to get the product constructs from local insurers. It's not like you can get it from Bahrain and sell it in UAE. So in that sense, it is like domestic and localized. But just to build on what Vivek mentioned, like there's definitely an investor lens. You mentioned about a customer lens, and absolutely there's no one size fits all. There is a strategic sort of growth sort of implications as well. Your corporate structure is really sort of what do you know here and now, and what do you want to be there, and then what are the sort of the various corporate governance structures that allow you to get there, right? So that's the simple approach or framework we kind of incorporated. And a lot of it was actually, chances are that there are precedences there already, right? So it's not like, these things, there are only finite number of business models and finite number of corporate governance or corporate sort of, structures. So taxation is a big lens as well, right? So, how you repatriate that money back, if at all you do, your future sort of, funding aspirations as well. There have been a fair number of startups that have actually, without actually doing a lot of international work, they tend to be international companies, and then, but most of their revenue base is actually coming in from India. That has its own merits and demerits, but you need to kind of weigh that across a bunch of things. So it's one of the most complex things, I would say, in terms of international market, go to market, what your corporate structure is. professionals who can help you, through and through will be, chances are that founders won't know that off the top of their head. So, you'll need to rely on at least we relied on a bunch of sort of service providers.
So I can share my observation, and whenever I have posed this question to either the advisors or the founders or the CXOs, nobody has the same reason, right? You have seen people choosing a territory to list or to structure their corporate based on valuation, which is linked to investor. Some people lead it to regulation and taxation, saying it's easier to protect IPR in Singapore, so let's go to Singapore. We have customers where India is the holding company for like 10 entities across the world, and you have examples where Singapore is the holding company for all the overseas entities, including India, which is actually the largest. So you have cases like that. So it's always a combination. Investor does play a role because they decide, they give you the funds. But it's also the customer I have seen. A lot of people have decided to list in India because they say the whole potential of the customer segment is in India. My investor can be in US or Singapore, but I would want to list in India. So it's always a combination we hear. In fact, our playbook comes a bit from there. You want to be in Singapore, we can help you there. You want to go to US. A lot of tech companies want to be holdco in US because the investor or the depth of the technology understanding is much higher. So it's a combination, I would say. Okay, I have one last question, and maybe we can do a quick one, all of us, and then we leave maybe 10 minutes, 7-8 minutes for some Q&A from the audience. And this is a, I'm biased to ask this question. So when you go international, you have a lot of service providers who help you do business there. One of the service providers is a bank. What do you typically expect from a service provider, including a bank? And Vivek, we will start with you.
Sure, Prakash. What a pertinent question it is. So, I believe, as business, you need a lot of flexibility. As Vinayak was telling that you start as a founder, you don't think too much about compliances, regulations, taxation. You don't think too much about the impending issues which could come in future. I think what you need from a partner, especially from a banking partner, is more reliance towards those areas. Doing the right thing, right transactions, does not get into the wrong side of doing transactions. At times in international, because India is highly regulated market for FEMA, we have seen all of that happening. In fact, many times we are not able to accept payments which come from outside India for shipping goods because somewhat the country or the payment is not acceptable. There are different reasons for it. Or maybe, you cannot accept payment from some other customer who is trying to buy for some other customer. So in B2B especially, there are a lot of regulations. Business buying, there are a lot of regulations. So we would largely look from the banking partner is to really look at those problems, offer flexibility, take out some of the real-time challenges and trying to help founders with those kind of challenges to look at. I think HSBC plays a great role out here because obviously it's a global bank and it has a great strength across markets. So I think that's what essentially I look at as a founder, especially.
Sure. Vinayak, what would you say?
For us, it was all about relationship. HSBC was the first bank we opened our account with when we started the company. The team at HSBC had been super helpful. It was also when we were going international, they were there helping us understand various things. Like I said, right, we took strides before understanding what will be the implications for it. At times, the relationship manager was there for us and telling us every now and then that this is what you should do, this is what you shouldn't do. Where he did not have answers for us, he made sure he got the right advisors for us to give us the answers. And that kind of relationship really gives you the comfort that you're banking with someone who helps you understand everything, though you might not know a lot of the things in the process. I think that was a major thing for us. Otherwise, बाकी सब तो मतलब internet banking सब जगह होता ही है. So for us, it was all about relationship eventually.
So a bit of a helping hand.
Yeah.
Which is based on knowledge and familiarity.
Absolutely.
Okay. Mitul, how has been your...
So, most of the things have been already spoken about, and I think that's the best thing. So one of the things which we really wanted was, after COVID, we know that digital has played a very important role. So are the banks going from a paper business to a digital business? That's kind of a very, very important thing which was there. Like I was been talking to our RM and code, we have been going out from token and we're coming to OTP. So we remember that kind of days which is there, and that has really come a long way. So you're not attending or not going to the bank branches. I think that solves a bigger problem. Because sometimes you need the money on the same day. Because
So what you're saying is, what you want from bank is not to see the banks, right?
not to see the banks, but most importantly is यार पैसा हमें on the spot चाहिए, because that is something which we all rely on, because startups are like really a kind of a place where you are relying on this banking partner just to make sure that the compliance side, obviously the RBI and everyone comes into play, but if you guys are going to help us on that, then we don't have to be like really rely on that part of stuff. So that really helps us. And secondly, as Vinayak mentioned, like relationships. So if you're calling the person and if the problem is getting solved the daytime, that's the best thing. Customer service is something which is really, really important nowadays. And I think that's kind of a different thing which has come up with HSBC for us.
Chirant, what's your...
Our journey with HSBC started slightly differently. Basically, when we went in our seed round, the fund that led the round had an HSBC account. And we had to get that money, sort of that capital had to come in from the US, so, and across a bunch of other jurisdictions as well. And the advice that we got was like, if you have an HSBC account, it's easier in terms of, the compliances and sort of all the operational sort of things that came along. But over a period of time, I think it's been a, the R word, the relationship word, right, sort of has kind of, grown, right? So, and I think the difference between a good bank and a great bank is really that partnership mindset, right? It's not just about the CASA and you're just another account. It's more about sort of how do you help, especially younger companies, startups like us, be that extended arm that always has your back, right? So from that sense, thanks for all the support.
Sure. No, I think what you say is my favorite. I think businessmen want his service provider to be invested as well in his journey, right? It's just not about the charges or the product, but is he invested in my journey? And I think Mithul said a good thing. You would need responsive service providers. Banking is just an example. Okay, we have some time left. We have 5 minutes. Maybe I'm hoping we can take a little more time. We can take some questions from the audience.
Check. Firstly, thank you so much. For me, we got both the sides of the dilemma. When you approach a startup beyond the boundaries, is it you prepare for it or is it you go there and improvise? Vinayak, from the heart to you. So was it a calculated decision or was it a natural instinct that comes to you?
As founders, we make stupid decisions all the time. I think it was more of a instinct that we knew the market we wanted to go after. And we're like, jo hoga dekha jayega baad mein. The typical mindset that you have. That's exactly the approach we took. We're like, we knew the market we want to go into. बाकी जो होगा बाद में देखा जाएगा, and we'll figure it out. And that's what startup founders are, right? बाद में जुगाड़ लेंगे जो करना है. मतलब, if you start figuring out everything on day one, you're going to waste a lot of time trying to figure out things and trying to put processes in place. Might as well try and do something and then try and put processes. The implications to it is not going to be a lot. It's just that you will save a lot of time. In the other process, you will waste a lot of time. So that's exactly what we have done. I think that's what I tell everyone who I speak to. करो बाद में हो जाएगा. मतलब बैठे हुए हैं, you pay money to all these advisors, they will make the room easy for you and the life much easier for you. As simple as that.
Yeah, hi. Yeah, when you say that that simple is not that simple, but I think you should have a lot of guts for it. My question is, you guys have not addressed the part of marketing as a company which is going locally. Yes, we've had tried and tested methods, but when it comes to international, as a startup, putting your presence there, making a name for yourself, the biggest challenge is marketing, and how do you manage that internationally to see how you minimize your acquisition cost and spread the word for who you are internationally. So if you can address that, anyone from the panel.
So marketing is is not specific to countries or regions. Marketing as a concept is a global concept. You have different kinds of marketing which you adopt based on your budgets, based on whatever you want to do. I think it all relates to the different business models you have. If you're too much on B2B side, you don't want to go and put up hoardings around it, or you don't want to put up TV ads around it. But if you're more on B2B side, you want to do more of, say, customer connect programs, you want to directly reach out to customers, you want to figure out those. So I think if you see marketing as a platform or as a concept is a global concept, it has to be more business specific, customer specific, your country specific also at times, because many marketing concepts may not be allowed in different countries based on the local sentiments out there. I'm not sure how many of you know the Nike story in Middle East, because there was a brand called Nike Air and it had big backlash because it was written something which was offensive to Allah. So obviously you have to be very specific to the local sentiments around marketing. I think that's what I can add to your question.
I mean, if I may, I tend to agree with Vivek, right? Marketing is a very philosophical thing, and fundamentally, marketing, the end, just thinking first principles, the end goal of marketing is either to bring in new customers or sort of, retain customers or whatever. One is a customer lens, then there is an employee or a talent lens, and then there is a sort of a capital base or a shareholder lens, right? So in most cases, you're either sort of building a brand or building sort of a base to add to the top of the funnel, right? So from that sense, regardless of your going beyond boundaries, that first principles approach doesn't change. What changes are the softer elements. I think Vivek mentioned about sort of sensitivities, local sensitivities. Then there are sort of local sort of accepted practices. As a B2B tech company, our marketing is very different from, say, a B2C marketing B2C model, where you're looking at that growth playbook happening by way of customer acquisition, and then sort of that just using your product and then sort of flying off that wheel, right, and being that sort of being part of that growth playbook. In our case, it is very hand to mouth combat. It's sales driven. It's not as much as marketing driven, right? So or business development driven. So for us, marketing is about brand building. It's more about sort of getting the best talent to the door, just elevating us to the point where if there is this saying that nobody got fired because they hired McKinsey, right? So the marketing team in our organization is taken something like that, and there's like no company should nobody should get fired by hiring discovery, right? So what would that mean in terms of top of mind brand building? So that is the Zen state for us to be at. And not sure if that helps, but sort of just want to give some contours of how we think about marketing.
Yeah, I mean, just a point on why B2C marketing. I think most of the marketing happens for B2C is when your product talks. So if your product is like scalable and it knows the global capacity, I think one of the important thing which works for B2C is referral marketing. Because referral marketing has really pumped up the kind of revenues which you can grow. Maybe you hear examples of Zerodha and stuff of the things, right? So referral marketing is really becoming an antidote in the market today. Just because if you can really spend and really know that you can incentivize your own customers and they can bring you 5 more, so you are actually taking care of your cost. So we kind of also follow this kind of a methodology, and that's how we have really spread it a lot today where we are.
Can we take one more question? Maybe one more question from the audience? Okay. Thank you, Vivek, Vinayak, Mitul, and Sharat. I think it was a... So if I have to summarize, I think it came out very clearly that it's dependent on your product, I think Vivek was very stressful on the point that first you have to choose the market, right? So that thing came out clearly. Another thing I kind of observed that you have to create your own playbook. Vinayak said, "Maine karke seekha." Somebody said, "I did more research than usual." Somebody said, "It's just the start of the journey." So you have to create your own playground.
And the another thing I picked up is that many people are part of the journey. So service providers have a big role to play. And I can share from our experience being a bank, which is just one of the service provider. And I was telling Vivek and others this yesterday, saying we also do a range of quality of service. We don't do a very good job in all the times, which means that if you're productive at a service provider, you really add value, and that should be our endeavor. On that note, we'll end this discussion. Thank you very much, gentlemen.
Thank you.
Thank you.
Thank you.
Thanks for
Would like to go from there. Yeah. All right, that was one round of a very exhilarating and deep conversation happening during our panel discussion on the premise of Startup Beyond Boundaries, which is so relevant and compelling at this juncture of our growth story. Just to put things into perspective, this round of panel discussion was brought to you by HSBC. And at this point, we'd like to acknowledge some of our partners, including our co-agenda partner, Lyra, our co-agenda partner, PayPoint, our session partners, Feedzai, Bureau.id, Rico, and our gold partners, beginning with Jakarta, Pay10, Innovity, Beams VC. We'd also like to acknowledge our theme partner, WhatsApp, our co-powered by partner, Amazon Pay, our spend management partner, Encash, in association with partner, Perfuse, our payments partner, Cash Free Payments, and our CEO's dinner partner, HSBC. On this note, ladies and gentlemen, I'd like to reiterate and remind you all to please download our app available on Android and Apple Play Store called the Global Fintech Fest 2022. Ladies and gentlemen, as we transition and segue into our next fireside chat, I'd like to bring to core that innovation is always a driving force, be it in the aspect of life or when we discuss the new advances which enable us to balance financials that have actually revolutionized the spending patterns in corporate world and businesses alike. To understand more about the aspects of corporate spend management and beyond banking, Encash building it first, we have our moderator for the session, Mr. Amol Dethe, editor, etbfsi.com and etcfo.com. And joining him on stage would be our speaker, Mr. Hemant Vishnoi, who is the founder at Encash. So give them a huge round of applause, ladies and gentlemen.
Hi, good afternoon, everyone. Hi, good afternoon, everyone. Am I audible? I just want you to thumbs up if I'm audible. Thank you so much. I'm glad to see all of you here. Just to share before we begin that, the team PCI, IMAI, and the Fintech Convergence Council was trying to build this GFF since really long time, and glad to see this is happening in person. So first, welcome to the maskless world, and it's glad to see all of you. And it's really glad to see a big event like this happening in India on the scale of maybe Singapore Fintech Festival or Money 2020 in India. Coming back to the topic, I'm sure being a Fintech Festival, we have a lot of sessions lined up here specifically on the Fintech side. But this is a little different topic because in India, we have been talking a lot specifically about the payment in the retail space. But the space specifically towards corporate side is a little untouched. Not many players are operating on that side, and this is going to be an interesting space going ahead. And I have with me Hemant Vishnoi, the founder of Encash, going to give us some perspective in terms of how this space is going to shape up. So the topic of this particular discussion is corporate spend management and beyond banking, and how is Encash actually building it first. So, Hemant, glad to have you here, and would like you to, share your perspective, give more examples and perspectives so that the people at large could understand in a far more detailed manner in terms of how the corporate spend is shaping up in India. So, to begin with, why don't you just give us a brief about, how the corporate spend management is today? What's the difference that is needed to make in this space? What exactly you are doing? If you could share your own case study or give some examples.
Sure. Thanks. Thanks, Amol. I hope I am audible, right? Yeah.
Yes.
Thanks. So essentially, if we are talking about corporate spend management, it's more related to towards commercial payments or business payments. People are kind of often confused between when we talk about spend management. It's more related towards expense management. But when we are talking about corporate spend management, it actually includes expense management. Uh, when we are talking about corporate spend management, it takes care of overall overview of all the revenues of the company and the outings of that company. It takes care of the whole cash flow position of the company, and then it essentially provides a better fund management per se by also taking care of audit and compliance trails. So essentially, in short, expense management. If we're talking about corporate spend management, it's kind of include it's expense management is a kind of tiny layer. If we talk about overall payables and expenses of the company, and then it's kind of different from neobank kind of approach where we don't open business accounts. We do not disrupt existing banking relationship. Internal processes, internal softwares and all. We integrate them all, and then we don't, create a friction for any business when they are talking about managing corporate spends.
Okay, got some interesting perspective from you, Hemant. But considering the changes that is happening in this space, considering this space need to evolve. One is how do you see this space is going to evolve in maybe next 3 to 4 years? Considering people are now looking at corporate spend management, and I was just trying to exchange a notes before our conversation that even my company is trying to give me a prepaid coupon for the cab so that the whole reimbursement process, the spend, the expense, everything will be seamless, right? And a lot of companies have been offering such initiatives and taking proactive approach. So how do you see this space shaping up maybe in next 2 to 3 years?
So the problem of spend management is quite old, and then it's getting complex day by day. Considering that how businesses are deciding to purchase in a decentralized way, and considering that more and more businesses are actually requiring softwares to touching their all parts of operations. Uh, as we progress, and considering more spenders and more variety of spends, it is going to become harder and harder. And that is why if you are looking at global corporate spend management fintechs or companies like us, we are kind of trying to take a holistic view when it comes to managing the company spends or expenses. Essentially, one important part here is that it's kind of also important to note that the way consumer payments have evolved in last 1.5 decades, business payments actually lacked those kind of innovation. If we talk about our own country's payment infrastructure, uh, I mean it has actually taken the edge over others when it comes to when the consumer is actually paying to the merchant. But when we talk about business payments or commercial payments, they are typically high value transactions, right? Now on the consumer payment side, the customer has option to pay via UPI, have option via to pay cards or net banking. But when we are talking about business payments, high value transactions, UPI won't work. Net banking was was there from last 1.5 decade. It was launched for retail payments with some patches. It was offered to the businesses. It's kind of cumbersome to operate on net banking by any business. So essentially, what is left is your cards. And cards, if we're talking about, card is actually the most flexible, secured, and fast payment instrument as compared to any other one. And then that is where, it can actually take care of both retail as well as business payments. And that is where, when it is kind of, card is creating a digital value chain for business payments. It essentially is going to evolve over the period of time in combination of a platform and a card. So I think both on the global side as well as Indian side, the companies have adopted company cards to be issued to businesses. The reason is very, very simple, basis on how cards can actually handle large value of or large volume of transactions.
Okay, so but do you see only the corporate or the businesses will go for card more, or is there any other UPI movement which we can see?
So I think, when we are talking about in the current payment infrastructure, definitely there is a need to relook at how the payment infrastructure is built, right? As of now, business payments are kind of, untouched. So as of now, if we're talking about, creating a digital value chain, I think, company cards are best placed. Tomorrow, definitely, we need to have better solutions around it. For example, if we are talking about business payments, considering the kind of volume and the size of the commercial payments or business payments are there, typical current payment instruments can't actually handle that.
Right. So then, just for more better understanding, why don't you maybe share a case study or give us more example in terms of how are you actually working with some business? I'm sure you are working with a lot of corporates. So how do you actually deal with corporates? What kind of partnerships have you made with him? How the actual works? How it processes at Encash? How is it?
I think one of the examples, and there are multiple examples. One of the examples is that let's say if you are a business having multiple offices across cities, right? Now, if you want to decentralize your business payments to those local cities, and apart from that, you also want to have control, visibility at a central office, you have three options, right? I mean, if you're talking about three options in terms of paying via bank transfer. The second option is paying via check, and the third option is cards. Right now, if we are talking about check, they are slow. There is no real-time reporting, and the process of reconciliation is completely manual. Right? If you're talking about bank transfers, for example, right? Typically, net banking is out of question. Bank transfers, if we are talking about, you have two options, right? Either you can create multiple bank accounts across the cities.
Right.
Then again, the problem will be that the reporting will be manual. There'll be no real-time visibility, and reconciliation will again be based on the manual efforts. The other option on the bank transfers is you can create multiple users on the same parent account, right? Now, again, the challenge there is that, you are giving access to your parent account to multiple users. So, which essentially you are actually risking your system, right? So, essentially, and there also, the reporting is again, manual. It's a file-based bank transfer. Reporting will always be on manual side with no real-time visibility. Now, compare it with cards, right? And especially, and cards with the digital value chain, which we have created, right? Now, you can actually, offer a multiple child card to your local offices, which are kind of, connected to your central parent card account, right? You can, allocate limits on those cards. They can actually, provide, you can also, provide budgets on those cards. They can pay it via platform like us. They can do vendor payments. They can do bill payments. They can do tax payments. They can, manage their expenses all in one go. The central team is having a real-time visibility. There is no manual reconciliation. It's automated reconciliation. And there is a control and transparency on the entire payments value chain. So this is one of the examples. There could be other example also that, in a business, let's say, you are a business and having, multiple departments, and multiple departments want to spend on multiple various softwares. And each department, typically in any business, there is always a budget which is being provided to any particular department. In a normal environment, there will always be a communication between a department head and the finance team. about, allocating certain budget, and then subsequently the budget is getting spent. The reconciliation goes back to finance team. There are, multiple such kind of reconciliation reports which are being provided to the bank, to the finance team. Imagine a situation if where, you can again, issue multiple cards to various departments, assign a budget on that. Finance team will have a central visibility. Department heads can, spend as per their budgets, and the entire value chain is completely, real time. So there are, multiple examples where, the flexibility when it comes to, a spend management platform and cards, if we compare it with, the normal environment, there are, a lot of advantages which actually, comes into it.
So basically, if you go for office party and maybe some leader who have to pay from his own pocket, he doesn't need to preserve that bill, invoice. By instance, if he loses the bill, then the party is on him and not on the team, because the company will look for that bill, right, invoice to pay. But let me shift your focus on the regulatory side, because the regulators are very active. We can see what's happening in the digital lending side. Everyone thought that lending is the next business shaping up, but suddenly the regulator came with a big whip and trying to be put a lot of compliance on that side. On the payment side, what kind of compliance do you see happening in this space? Because recently there are many conversations around digital banking or even open banking, and the regulator also came up with the digital banking unit framework. So how are you seeing this managing the payment and banking?
So I think, when we are talking about DBO framework, it's a very, very welcoming step from the regulator, right? Essentially, when we are talking about the idea about DBO, the idea here is to actually, provide a digital experience, right, to all the customers of all banks, right? Right now, if you look at the current environment, there are only fewer banks who are actually, providing a digital experience, and that too in a limited capacity. It's a great opportunity for both fintechs as well as banks to partner. Regulator has also come up and emphasized on that kind of partnership to be established between fintechs as well as banks, right? Essentially, if you have to provide a digital experience, then definitely on the experience and the infrastructure behind that needs to be very, very agile and nimble, right? And then in that context, if you look at the legacy systems, they are heavy and loaded, right? You can't change it after a while, right? And in that situation, if we are talking about such kind of partnerships where fintechs, multiple fintechs are actually partnering with a bank with multiple products and multiple solutions, the entire ecosystem will be agile and nimble, right? And that is where I actually see it a great opportunity for fintech, especially for business payments also. Reason is simple that not much has happened on the business payment side, and there is a lot which we have to do. We should be doing it, and we should actually make it frictionless, as seamless as the consumer to merchant payments are.
Quite meaningful, Hemant. Let me add, I wanted to little bit add more on the global solutions. I think this can be the last question, and I will see whether I can take maybe one question from the audience. So, are global solutions applicable to India? Because now when you talk about cross-border, when you talk about connecting boundaries and, sharing all those things. So how different is it? So are global solutions applicable to India as well? And is it different, and how the Indian fintech are going to take it up?
See, I mean, there are many problems when it comes to business payments, which are kind of common across the markets, right? For example, if you are talking about any business who wants to, mitigate fraud risk, right? That's kind of, common. If some business wants to mitigate manual processing of payables, that's kind of, common across the globe. If someone wants to have better and faster processing, that's kind of, common to all the markets. But there'll be certain, market-specific challenges which needs to be solved basis the market. But having said so, if we are talking about especially, payment infrastructure, as I said earlier, more or less, the challenges around business payments is same across the market. Right. If we are talking about, again, from when the customer is actually, paying to any merchant, merchant can actually accept digital payments. But when we are talking about business payments, both sides, buyers and sellers, or either side of them, could be digitally primitive. So essentially, that's where when we are talking about the solutioning part, right? We need to think around and we need to actually take a holistic view around it for business payments. When we are talking about spend management companies or fintechs globally or in India, right, company like us, we are actually solving and taking it in a different way, right? And as I mentioned that company cards are best placed to solve it because they are kind of flexible enough and secure enough. But essentially good part here is that probably in the history of Indian fintech, we are actually seeing solutioning and products coming both at the global stage as well as in India in parallel, as compared to what exactly has happened in the past.
Oh, quite interesting. I think some meaningful thoughts from you, Hemant, I must say. I think I still have 2 minutes. Maybe I can take one quick question if anyone has here. Can I take one quick question if anyone has here on this particular topic? Okay, no, not an issue. I think so. Just last one quickly, Hemant. I want you to add. A lot of race is specifically into the payment space right now, and the fintechs which could not do well into payment space shifted to the lending space. What do you suggest? Is there a bigger scope in the corporate spend management, specifically managing the global payments and the business payments for the fintechs going ahead? And do you think that this business model can be a sustainable and a profitable business model for the fintechs?
As I said that nothing much has happened on the business payment side, right? And if we are talking about from an Indian context, right, it's a more than $1 trillion market as far as India is concerned. And when we are talking about company cards, the total market which can be addressed via company cards is a $5 billion, which essentially means that there is enough lunch on the table. There are more guests required in the space to come and disrupt, right? And essentially we are actually welcoming a lot of people, right? I mean, I think that there are many companies which need to come in this space. It's a sustainable model because it's ample is there for everyone to solve. It's just a matter of time.
Oh, absolutely. I think if by any chance if they could at least the MDR and other things are not still happening in this space, so maybe it could be a sustainable and maybe a profitable business model for fintechs, because not many hands are into this lake right now. So that's it from my side, ladies and gentlemen. Thank you so much for listening to us very patiently, and thank you, Hemant, for sharing your views on the corporate spend management. Thank you so much and enjoy the GFF.
Thank you, Amol. Thanks, GFF.
All right, that was one pragmatic discussion taking place. We would like to thank our theme partner, WhatsApp, co-powered by partner Amazon Pay, spend management partner Encash, in association with partner Perfios, payments partner Cash Repayments, and CEO's dinner partner HSBC. Ladies and gentlemen, advances in the form of electronic payments have seen no bounds over time. The growth scale has been increasing at a continuous pace. Cross-border payments till date remain an area of concern for many individuals at large. And to decode the secrets behind unpacking real-time cross-border payments, we have a moderator with us, Ms. Prachi Dharani, co-founder and CEO, Peg Local Technologies Limited. And our revered set of speakers will be also joining her shortly in a few moments from now. And meanwhile, let me remind you all to download the global Fintech Fest on your Android phone or your Apple Store to get to know all the updates, the profile of speakers, and the topics that we'll be deliberating in the subsequent conversations. It's sorted, you wanted to talk to me? Unpacking real-time cross-border payments. And the person who will be maneuvering and moderating this conversation and panel discussion will be Ms. Prachi Dharani, co-founder and CEO, Peg Local Technologies. And our revered set of speakers who will be joining for this panel discussion is going to be Dr. Emil Rubin, MD and Country Manager, India Real Financial, a Euronet worldwide company. Mr. Ramesh Narasimham, Chief Executive Officer, India Worldline. Ms. Rashmi Satpute, India Country Manager, Vice, Transfer Vice. Mr. Shinichiro Nishikawa, Head of Global Payment and Services Division, Entity Data Corporation. And Mr. Takeshi Kitu, Founder, Crowd Realty Inclusive and Vice Chair Person at Fintech Association of Japan. With this context, over to you all.
Do we have to do some test? Hello, can you hear me? Yeah.
Hello. Hello.
Mic.
Mic.
Check mic.
Yeah, okay.
Can you hear me?
Yeah. Yep. All right. Thank you, everyone. First of all, good evening, everyone. And it's lovely to see so many colleagues and industry leaders at this event almost after 3 years. It's absolutely energizing to meet each one of you. And I hope it opens the door for more and more business for each one of us. With that, probably we'll start with a quick round of introduction for each one of us. So we'll probably start with you, Rashmi. Over to you, about you and what you do at Wise.
Thanks, Prachi. Hi, everyone. I'm Rashmi. I lead in the India operations for Wise, which was earlier known as TransferWise. We are basically a cross-border payments fintech, and we are listed on the London Stock Exchange. We are headquartered in UK, and over the last 10 years, we have built our infrastructure, which includes 67 licenses in around 44 countries. Real-time cross-border payments is something that we hold very close to our heart, so I'm very happy to be here. Thank you.
Thanks, Rashmi. Yes, my next, esteemed panelist is Dr. Emil Rubin. If you could,
Hi.
I know he's suffering from a bad throat, so do excuse him.
Good evening. I'm so sorry. I have a very bad throat. My name is Emil. I represent a company called Ria Money Transfer Services. We are the second largest global money transfer company. Very happy to be here and share with you our learnings today.
Thank you, Emil. Welcome. Next to him is Mr. Nishi from NTT Data.
Yeah.
Over to you for a quick introduction.
Okay, thank you. Good evening, all. Sorry. Broken. Okay, can you hear? Sorry for that. Can you hear me?
Yes, we
okay.
can.
Hi, my name is Nishikawa. It's coming from the NTT Data Japan. The NTT Data itself is mainly the IT service company for the globally. Then, also from the around 40 years back, we are providing the financial infrastructure service to Japan for a long time. Then, currently our activities is around 2010. Our services to the globally and expanding. Then, now we have the subsidiary company in Asia region. Then, here is the NTT Data Payment Service India. And in Vietnam, in Malaysia, in Hong Kong. So we have some of the group companies then. So we provide for the localized service, also the cross-border service from the Hong Kong. So that's why today, we have some discussion that we look forward to discussion for the unpacking the real-time cross-border transactions. Thank you so much.
Awesome. Thank you. And, a lot of us have worked with Atom Technologies for a lot of time in India. Each one of us know.
So
I think
now
it's now NTT.
and the data payment services.
Yes. Thank you. And next of my co-panelist is Mr. Ramesh Narasimhan from Worldline. Sir, over to you for a quick introduction.
Thank you, Prachi. My name is Ramesh Narasimhan. I'm the CEO of Worldline India. And Worldline India has essentially a 360-degree payment suite, which includes in-store payments, online payment gateway-based payments, as well as omni-channel payments. We have a heritage. We are a European headquartered company with a heritage of more than 45 years in the payments business. And as part of this panel, our cross-border solution is something that we are very, very proud of, because we connect to over 175 countries globally. And what we offer is for overseas merchants to sell their services in India, and Indian merchants to sell their services overseas. So it's a very exciting value proposition, which we believe is the need of the hour for as we expand our horizons. And I look forward to this discussion, very interesting discussion over the next 30 to 40 minutes. Thank you. Over to you, Prachi.
Thank you. And the last panelist that we have is Mr. Takeshi Kito from Fintech Japan. Over to you, Takeshi.
Thank you. And thank you for having me today. My name is Takeshi Kito. I am a fintech entrepreneur, and today I am representing Fintech Association of Japan. Fintech Association of Japan is a non-profit organization with more than 470 members. And we are very proactive to collaborate with other fintech associations. So now we have roughly 35 international partners. And together with these partners, we are facilitating cross-border collaboration. And in addition to my role in the Fintech Association, I am working for some of the government initiatives, and one is a legacy sandbox in Japan. So I am working for the sandbox team as a committee member. So yeah, I'm looking forward to the discussion today. Thank you.
Yeah, it will be good to see the intersection of India and Japan ecosystem from a fintech perspective, and we look forward to getting your inputs on those. Um, so with that, we'll start our panel discussion. But before that, just a quick introduction about PayGlocal. PayGlocal is a early stage fintech. We focus on cross-border payments in the evolving, cross-border space in India. We focus on, consumer to business payments as well as B2B payments. And the landscape is only getting exciting by the day. So I am very, very happy to be on this panel and, very happy to also get this opportunity to moderate the session. So with that, we'll probably start the discussion. So you want? So we'll probably start with Mr. Ramesh. We'll start with, Mr. Ramesh. Your business, we've all seen through the years of our time at Indian payment industry grow. Cross-border, of course, as we all know, has been taking a very upward swing with all the effort that the government is making, towards exports and global commerce growing per se. Could you give us some more insights on how have you seen cross-border grow in your business? And what's your macro view on cross-border payments in particular?
Yeah, thank you, Prachi. So, great question. I'll address it in two parts. The first part is the emergence of India as a market for global companies, where you have a very educated workforce. You have the demographics are less than 45 years of age, and you have access to all methods of payment in India. And you have a requirement and you're willing to pay for services from anywhere in the world, you're willing to buy. That's the first part of it, right? And this obviously opens up our market to many service providers from across the world who want to sell services into India, right? That's one. The other side, what you said, Prachi, is about our country's focus on exporting to the rest of the world. And that is something that, we just saw some record numbers in the last quarter in terms of our exports. So how can Indian merchants export across the world and still be able to get their payments repatriated in a digital manner, right? These are the two things which I see clearly as emergence of two major, if you can call, trends. Now, as I said, Worldline is present in 50 over countries, but is able to connect to 175 odd countries across the world. Right? And that gives us a very unique ability to manage, as I said, both sides of this equation, which is to bring overseas merchants into India and help them do business in India. And the most important thing is when we do this, we offer local payment methods to these overseas merchants. You can use UPI, you can use net banking, you can obviously use cards, which creates a very big market, as opposed to only if you were allowed to use an international card, a credit card or a debit card, right? That's something that we have focused on to be able to offer, all local payment methods. And in the same way, we cover payment methods in all the countries that we are present in the world. And that is a very unique value proposition that I see. And similarly, an Indian exporter who is exporting services or goods overseas, and we do the entire end-to-end for them, whether it be, authorization, settlement, and repatriation, including chargeback and refunds that anyway we do, including repatriation of funds in the currency of their choice, which could be dollar or pound or euro, and we see a huge market in this, right? And that's exactly the emergence of what I see. As Indian consumers today, we consume some of the verticals. I'll throw some light on the verticals that we see traction on. Education. Today, you can continue your education remotely at your house, at your convenience. And there are giants from like Coursera, etc., from whom you can buy courses. And it's a major, we see that as a growing major segment. The other segment we see is OTT or music, streaming music. Then of course, you'll see many other services like travel, hospitality. These have been forever evergreen services as far as cross-border is concerned, right? And so the emergence of all these verticals, and when you see some of the numbers that some consulting companies have taken around these verticals, it's all in the size of the market is in billions for overseas merchants to come in and offer their service, test their service, see the acceptance, and if required, then you come into the country and you establish a full-fledged presence in the country. Similarly, for our exporters going overseas, right? It is something that they can, sell into multiple countries. You don't have to have specific infrastructure to collect payments from different countries, and you're able to do all the work for them, take away the pain of that part, and repatriate the money back to India. Then, of course, there are airlines and hospitality companies with whom we work. So we see a huge explosion of services. And of course, there's the other market, which is the SaaS market. Today, we don't even think twice. We download an app on our phone. It costs very less, but it's something that you're settling probably overseas as well as in India. Many of those companies are present in India. So we see a huge traction across these verticals when it comes to cross-border payments. And essentially, we cater to the B2B segment. And so it's a B2B2C kind of a segment. So we've had a couple of experiences. One of the airlines that we were servicing was only doing net banking with us. And with the addition of UPI, we suddenly saw a spurt, in payments happening. Similarly, for a company that provides domain names, they saw a 3x increase in their business because they were able to offer local payment methods. Because that's what we use in India. We're very comfortable using UPI, not necessarily an international credit or debit card. So the advantage that we bring to the table is a single contract, a single integration, and you get access to 175 countries, a network of 175 countries, which is a huge value proposition as we see when we work with our merchants. And it's something that we are seeing traction build as we go forward.
Yeah, I absolutely agree with you. Also, some of the bases with which we set up Pay Local. Before setting up Pay Local, I was with Visa. And one of the data that we were consistently seeing was, 5 years back, India used to be like a global importer of global merchants. So, you'll see Amazon and Shell and H&M and these merchants coming to India. All of a sudden, you're starting to see a lot of Indian merchants becoming global. So you see Zoho and Paytm and Zomato, Oyo, and the list continues to grow. So I think there is absolutely an upward trend in terms of Indian merchants going global. At the same time, the GDP of the country continues to grow, and the average spending capability for the consumer continues to grow, and hence India continues to be a market that a lot of global merchants would continue to focus on. And yes, all the right macroeconomic signals for cross-border to explode in a market like India. So thanks, Ramesh. Thanks for giving us a very merchant and a business kind of a view. And Rashmi, I know, Wise does business across multiple verticals, but something that, everyone is aware of is the remittance business, which is like a large part of Wise business. And India being a large inbound market for remittances, how have you seen the ecosystem grow for Wise in India from a cross-border P2P perspective?
Thanks, Prachi. And you are right, remittances is just one of our products, right? So we were earlier called TransferWise, and the reason we became Wise is also to kind of say that our business is actually cross-border payments rather than just cross-border P2P remittances. And that's something that we've been consistently growing across the globe.
Yes.
So while in India, our leading product has been remittances, and we have been live in India since 2016, so sending money into India. India is obviously one of our largest currencies. We are, our senders can send payments via different payment methods, whether it's UPI, IMPS, NEFT, etc. That is available. Globally, 50% or more than 50% of our transfers are now instant. And when we say instant, we say less than 20 seconds. And that's innovation that we've been able to build because Wise has consistently been built around the pillars of convenience, transparency in pricing, cost-effective transfers, and speed, right? So yes, India is a big market. India, we are plugged into a lot of different payment methods. But I just want to take a step back and also tell you where we are seeing cross-border payments grow, right? So we started with transfers because we knew that was a broken market. We think that the existing financial institutions probably do not service the growing needs of digitalization as well as global lifestyles that a lot of our consumers are now starting to build. And when I say consumers, it's not just P2P, so it's not just like retail customers, it's businesses, it's SMEs, and I think Ramesh also touched upon it. It's merchants, it's also other financial institutions, right? And Wise has been consistently been investing in infrastructure. And when I say infrastructure, it's licenses, it's direct access to payment systems in various countries. It's also speed, and it's also pricing. And then we are also now wrapping it up to offer this to merchants, to businesses, as well as to other financial institutions. So a lot of financial institutions do not want to invest in having licenses across the world. They can just plug into our network. So we are becoming increasingly the network of choice if people want to have transparent, convenient digital payments. So I think that's where cross-border payments are also moving. And as a lot of us are leading more global lifestyles, I think that is going to become key. So.
Yeah, I can't agree with you more in terms of the licensing and what it brings along. All of us are aware of, the regimes that are there across the world, and just stitching that together is like a very, onerous task, filled with compliances and all. So I'm sure, Wise is going to find a lot of partners who would want to kind of plug into the entire strategy that you guys have built over the years. You kind of segued us to the next set, which says, how important is real-time cross-border payments from an end consumer standpoint? And, Nishi would like to get your views there in terms of how you see this overall ecosystem evolve. We've seen RTPs growing rapidly from a domestic market perspective. But how important are these RTP and real-time payments when it comes to cross-border? And what's that pain that either the consumer or the merchants face, while doing cross-border payments?
Okay, so currently the whole, not only India, is also whole the ASEAN region. Each country basis is already the RTP is already started, and so now planning and already starting the business. So then in Singapore, the PayNow is now the planning to connect to NPCI. Then so the kind of the collaboration and each direct connection is also very useful for the more faster and so more costly and the cross-border payment system. Is so we can do it. Then so currently our business in the ASEAN region is also like a fintech company. Then so we are trying to make a more localized payment services to each country basis. Because the cross-border payment itself is also by a card scheme is also very easy to take it. But the more the Emerson mentioned is also each country basis is also focusing on more alternative payment and more local payment basis. So that's why we are now trying to make the more localized payment, each country basis. Then, so also we have the NTT Data Hong Kong. So this company is also not providing the local service. So they providing is localized cross-border payment service. Because it means not rely on the card scheme, that we can take our Vietnam group company and our Malaysia group company and so our Indian company. Then so if the merchant want to use and want to try to expand their service to each country basis, that we can provide the more localized the alternative payment methods like QR and e-wallets, the banking and something else. Is also anything that we can provide with the local fee structure. So that kind of situation is so our side is of course the RTP basis is so more common the standard for the worldwide. So but unfortunately so in Japan it's still some striking right now. But so also the we NTT Data is providing some service and infrastructure service in Japan. Then, so the services can be provide some of the RTP service in Japan. So that's why, so some kind of the collaboration, the bilateral, and so some of the use case. Then, so we can more good the services to the market, to the country, to the end users. It's my comment.
Yeah. And all of us know that at this point in time, there are over 40 countries in the globe that have domestic RTP platforms. So, more and more merchants and more transactions domestically are moving to RTP. It's only a matter of time that, cross-border payments would also move towards RTP, and that would become the base norm in which the digital transactions would happen. So, I actually want to, I don't know how your throat is and, you'll be able to take the question, but quite keen, Ruben, to get your views in terms of from a RIA financial services perspective, right? How are you seeing cross-border and real-time payments in particular kind of evolve in your business?
Okay, thanks, Prachi. A good question. Um, those who are in this space for more than 10 years, they will know the fact now how the cross-border payments and remittances have been evolved, right? We have to wait for 30 days to receive a payment in the bank account, and now we are talking about 30 seconds to receive a payment into your account, right? And this last 10 years of journey has been very incredible. And RIA, as an organization, took full advantage of this opportunity today. And sorry, um, we actually created a very nice platform, a real-time cross-border payment network. We say it's a largest one in the world today, which connects 190 plus countries, deals with 103 currencies straight. And that's a kind of payment platform we created. We basically a remittances organization, but in the last 5 years, the kind of infrastructure what we built in the organization to cater the requirements on the payment space is, tremendous. And we are up there, to grab this opportunity. And as you said, most of the countries today have the RTPs, right? You said 40, 45 plus countries. And, a lot of countries have, including India, you look at the country we created, the NPCA created such a beautiful platform, for us. The infrastructure is tremendous here. And it's up to an organization to utilize this infrastructure and provide a solution to the customers.
That's absolutely correct. And I think more and more players want to start participating in global commerce in some manner or other. And I think the core work of creating the right infrastructure has been done by a lot of organizations, including a lot of us on the panel here today. So, we spoke about organizations and what they are doing. Takeshi, quite keen to get your views. You've been looking at Japan's fintech ecosystem. You are here to see the massive Indian fintech ecosystem. What's your bird's eye view when you look at markets? From your perspective of how things are going in India, in Japan, overall from a global perspective on cross-border payments?
Okay, yeah, thanks for the question. As a fintech association, we are trying to push our ecosystem and the companies go international. And as Nisa mentioned, we are still struggling with being connected with the international infrastructure and ecosystem. So, on the other hand, India has a growing market and with huge population. It's compared to Indian market, the Japanese market is shrinking and aging. So totally different market we have. So we Fintech Association is quite proactive to bridge this ecosystem as a market. And in India, we have two partners. One is Gift City, so it's a financial center in Gujarat, and another one is a FICCI. So in the past 3 years, we have closely collaborating with these Indian partners and trying to bridge Japanese payment or financial infrastructure and the Indian one. So, for example, we have talked with NPC International, and they asked us to bring their infrastructure and solution to Japan. So I coordinate some dialogue with Japanese stakeholders such as governments and regulators and some companies, and I hope we can achieve this kind of a cross-border collaboration between Japan and India. And another topic is I would like to touch on is regulation. As I mentioned, I am working for the Japanese government's regulatory sandbox, and to facilitate cross-border payment or other related financial transactions, we have to handle this kind of regulations internationally. So I think regulatory sandbox is one good solution to create a cross-border framework or a regulatory framework for cross-border transactions, including payments. So I am very keen to have this kind of a cross-border regulatory sandbox collaboration with Indian sandboxes.
So you see a lot of opportunity for players in India and Japan to collaborate, trying to solve for cross-border payments. So yeah, I think, there'll be quite a few players in the ecosystem who might reach out to you after the session and, look forward to those conversations going. Taking the discussion forward, right? Rashmi, quite keen to get your view in terms of what more can be done into this cross-border payment environment to kind of take it to the next level, both from a product as well as from a regulatory standpoint to kind of make it more seamless and, probably the next phase of growth.
Thanks, Pachi. So I think there are 3 or 4 things that more and more customers are expecting out of cross-border payments, right? One, I think real-time now has become like the baseline, even for cross-border payments, because domestic digital payments have become real-time. So I think real-time payments is one of the key things that will go a long way in improving customer experience. The other thing is also pricing. We think at Wise, at least, we have this mission of transparency and mission 0, which is 0 fees eventually for cross-border payments, because we actually believe that sending a cross-border payment should be as easy as sending an email. Today, it's not like that, obviously, because there are a lot more checks and balances that have to be done in cross-border payments, and we accept that. But we also think that pricing is something that's key, and transparency in pricing is very key for a customer to know what they are paying for. And what do I mean by transparency? So there's like a couple of elements to the pricing, right? There's the FX markup, where a lot of institutions charge a lot of money, and then there is an upfront fee. At Wise, we believe that we offer customers the mid-market rate, which is like, the rate that they'll actually see on Google, and then an upfront fee. And then we actually give the customer a clear indication of what their beneficiary will receive and at what time will the beneficiary receive the payment. So this is transparency, right? Because even from a pricing and a speed perspective, we are very transparent. I think that is one key aspect that we have seen evolve, and that's how we have seen customers move to our platform, whether it's businesses, whether it's retail customers. I think that's key. From a regulatory perspective, I think we have seen a lot evolve in the last 10 years. For example, we have the Pay Now and UPI collaboration happening, which means that real-time payments, again, will become baseline. So from a regulatory perspective, we also work with regulators in a lot of countries to have access directly to payment systems. How does that help? Again, it goes back to cutting the middleman out of the picture so that cost and speed, again, is in our control, right? And that's how we can offer the best experience to consumer payments. That's what I think is key. Transparency, real-time payments, and then, of course, customer convenience.
Yeah, I think yes, ticks on all the boxes, and can't agree more on transparency per se. We face that in our business day in and day out, where both the consumer and the merchants are quite keen to understand what exactly is going to happen. Still, there seems to be some amount of question mark, through the transaction. Ruben, quite interested to get your view as well. How do you see product regulatory framework evolving in the ecosystem from a next generation real-time cross-border payments?
I agree to what Rashmi was about, real-time payments, transparency and the cost, and also other important in tracking the transactions. It's also very key when it comes to the cross-border payments, and that's something which is not currently very available in most of the systems, and that should come in near future. The tracking of those transactions and the KYC procedures should be simplified for the customer. I agree, it should be as simple as sending an email. At the same time, it should be very simplified process on onboarding and the KYC and the documentation. These are the things going to call a shot on the cross-border payments. And to me, tracking is more important.
Yeah, I think tracking also from a perspective when it comes to cross-border payments, the AML, the PMLA, the underlying risk, and how the overall ecosystem evolves from a perspective of making it more simplified. So that more and more participants in the ecosystem are actually able to participate and scale the businesses. I see a lot of businesses taking a step back when this entire conversation around AML and PMLA kind of comes in, and I think there is definitely some room of laying out rules like the KYC has evolved to a level where from a RBI perspective also there is a master circular which talks about how do you kind of do a KYC of the customer. I think something around that, quite black and white from an AML and a PMLA perspective to the next level would probably help players in the ecosystem, more players to join the bandwagon of cross-border payments and the evolving ecosystem. So I think, yeah, you raised a very valid point in terms of how do we kind of move forward. We do have some time on the for the panel, and hence Nishi would also kind of get your views in terms of what's the next level from your perspective for the cross-border payments.
Yeah. Okay, thank you for your question. The already mentioned the regulatory matters and some more transparency and some more simplify the order process. I also totally agree with you. Then, so my view is also this kind of more simplify is also needed for the fintech, the powering. So they have the so good the technical perspective. They have good the approach to that. Then and also the need to the bank side is so need to more collaborate. Either so like the open API banking initiatives or something like that. Then so the of course the from the central bank perspective, it also need to monitor and also need to control how the transaction flow and the money flow is very, very important. So that's why the fintech and the bank side and the merchant side and the consumer side, of course. So each the entities and the groups is so more need to collaborate. Then so more opening. Then so the information the opening. Then so customer side so very easy to access the one data from the bank and from the fintech. It's something like that. It's kind of the collaboration. It's very, very important for the more convenient, more simplified transaction. It's my comment.
Absolutely. And we've been debating within our teams, saying that there are so many organizations that collate data from a credit underwriting perspective. But when it comes to, a cross-border transactions of, reporting any kind of fraud or AML issues, there is no, centralized system that can be utilized by multiple organizations to kind of, dip in as the volumes kind of keep scaling. Thank you, Nishi. Ramesh, your last views in terms of what more can be done to kind of take cross-border to the next level?
Yeah, thanks, Prachi. I think a lot of people have already commented a lot, but I think spreading this awareness is also important, Prachi. We are in the payments industry. We know that the fintechs have come in, companies like ours have made this far more nimble, easy to use. But reality is, across the board, a lot of people are not aware of this. People still deal with the traditional way through the banks, and that's something that I think, if made aware, that would really help in growing this entire business. The second one, absolutely, Prachi, you talked about it. You know, I think compliance in this area where you talk about AML and other things, I think absolutely we need to be clear, across regulations, across countries, since we are moving money across countries, whether it's KYC, whether it is, anti-money laundering check. I think these all become very crucial, and we don't want any missteps. Early on when there is a little bit of liberalization and there are companies like ours which are able to offer this as a service, we don't want any missteps, because then the regulator comes down, making it, putting some more constraints so that we do the right thing. So I think in addition to all the other things the other panelists spoke about, I think spreading awareness of these solutions, being available, giving confidence to merchants, right, that it's fine to use. Because the other day, I don't know if you saw this news article which said, don't use these forex companies, in economic times. So people get scared as a result, and then, they say, no, let me go to my, bank and do this transaction. But I think an awareness that this is another thing that even the regulator supports, and it's properly done with a proper OPGSP license. And these are some of the things I think can be additionally done to help us grow this part of the industry, Prachi.
Yeah, I think, probably, and going back to my experience at Visa, right? Visa certifies partners and then puts it on the website saying that, these are like certified players. So, while there is a blacklisting, if there is any kind of whitelisting, that kind of also helps the ecosystem further from an awareness building perspective. So, yeah, Ramesh, absolutely agree with that. And Takishi, any closing remarks from your side in terms of what more can be done for taking cross-border payments forward?
Yeah, I totally agree with what other panelists mentioned, and AML and CFT related topics is quite important for all of us. And also, as President mentioned, blacklist and whitelist sharing is among financial institutions, the PSP is quite important. But there's some regulations for cross-border data sharing and transfers. So we need to solve this kind of conflict between data protection or data sovereignty or privacy protection and cross-border data sharing to fight with money laundering and other crimes and frauds. So solving this conflict and issues is, I think, one of the biggest topic to bring cross-border real-time payment to a next level.
Yeah.
That's my opinion.
Awesome. Thank you. Yeah, I think, with that, cross-border is complex. Cross-border has its own set of challenges. It has its own set of, giving highs to organizations like each one of us when we are able to actually solve the problem for the consumers, for the merchants. And, with the advent of growing global commerce, I think more and more conversations around these would only help, participants in the ecosystem to come together, work together, and, create products and services for the end consumers to help cross-border grow. So I thank each one of you for giving time and being on this panel. It's been quite an interesting conversation. I've taken down a few notes, which I'm going to work upon once I'm back. So thank you, everyone. I'm not sure, do we have questions from the... Yeah, if anyone has any questions from the audience, we'll be happy to answer. So, yeah.
Hi, this is Priyam here. I'm a part of the Global Sales and Partnerships team at PayU. My question actually is, I mean, thank you for your insights, but my question kind of relays into what you spoke about. How do you think can we improve access to payment systems for cross-border solutions. Where I'm coming from is that cross-border payments is highly regulated, and if I may be so bold, sometimes the regulations are a bit restrictive in nature, and I see a huge gap between how things operate domestically and how things operate internationally. So being in this space, what is it that can be done specifically for non-bank PSPs to improve this sort of access?
Rashmi, you want to take that? You guys have mastered the art of having multiple licenses.
I think the question is better asked where the RBI presence is right now. But I think it's a journey, it's an evolution, because it took us a while as WISE itself, having licenses in various jurisdictions, to build that confidence with the regulator that we can plug into payment systems. And this is a very complex matter, right? There are a lot more evaluations that the regulator will also do on us as a technology company, as a solvent company, before they give us access to payment systems. So it's a journey. I think maybe in India we are a little behind, but I'm sure that this will be a journey that we can go to, right? And this also comes from the fact that there have been so far very few organized larger players in the market. And that is how confidence will be built by the regulator as well. So if you see the Indian ecosystem, there have been a lot of these smaller currency exchanges, etc. That probably is not the best ecosystem to be allowed to plug into payment systems. But as more and more organized players, and the other panelists on the dais itself have also said how they're building cross-border payments. But as this grows and as more organized players come in the system, I think then there'll be confidence from the regulator to give that access. But it's going to be a journey, and it's going to be a journey that all of us will need to be, plugged in together to work with the regulator to go forward. Yeah.
I think we have one more question on the back.
Hi, good evening. This is Krishna. I head the product for RBL Bank Payments Division. The question is, with the new guideline on BBPS, where bill payments are allowed for the non-resident remitters, how do you see this panning? What's the potential? Do you think it's a good development? And will there be a good traction on that?
I'll probably take that question. We just got an award today from NPCI being, the first player to solve for BBPS cross-border payments. So look, a background on that, we are a country which has the highest number of non-residents outside. So I think the official number stands at 32 million, right? Most of these have their families, their friends back in India. They also invest into properties here in India. And what BBPS platform kind of offers on the platter is over 24,000 and growing merchants in this space to be available on one go for these NRIs to kind of, make the payment. So I think it's definitely a pain area is what we've realized, because a lot of these bill payment companies on their own platform do not accept any kind of an international or a cross-border payments. So it is definitely, hitting the right chord in terms of, solving a problem. At the same time, we are also very strong believer of, this product will find its right scale with players who, already do a lot of remittance business into India, because they have the customers who are sending money to India. When bill payments kind of becomes a value-added services, which could lead to a lot of convenience for their platforms to kind of start also now, providing bill payments as a service. And as more and more categories and more merchants get added, it's only going to help the NRIs, pay the bills in a seamless manner. So we'll see in terms of over the next period of time, in terms of how it kind of scales, but it's definitely solving the right problem.
I myself Dharam from product team of Entity Data Payment Service. So recently you might be knowing that the UPI has been going international for few of the players, okay, for the few of the countries. So when we say the remittance or the inward from the cross border, how do you think that it can compete? There's an alternative option of the SWIFT GPI, or what do you think about that when you go for the RTP that we were talking about? So is there any insight on that?
Sorry? The question is with UPI, finding the right bilateral partnerships outside the country. Could it become an alternate to probably a SWIFT or any other rails for, remittance to come in? Have I got the question correctly? Yeah.
Possibly, yes.
Okay.
And I just spoke about one of the services what we are launched in RIA, a platform called Dandelion, which is the largest real-time cross-border payments, and which is a kind of replacing your legacy messaging platform.
Okay.
So there will be more such new services will be available, and UPI is yes.
Okay. Thank you.
I think we have time for one last question.
Well, it's not a question, it's actually a comment. I'm surprised to not have heard the word blockchain in a panel discussion on real-time cross-border payments. Was that deliberate?
I think, blockchain and crypto in India, probably in our head is all blocked, and probably that's the reason it kind of did not find, conversation on the table. But I'm not sure if any one of you want to give any insights of any work that, you folks are doing on blockchain in any of your platforms. Yeah, I think not on this panel. All right. Thank you, everyone. Thanks for giving time, to the panelists, to each one of you. It was lovely, having conversations, and look forward to meeting all of you during the event. Have a good evening. Bye-bye.
Thank you, Prachi. Thank you.
All right, this was a riveting set of conversation on unpacking real-time cross-border payments. Ladies and gentlemen, we'll be starting our next panel discussion at 6 p.m. in this ballroom only, which is going to be about channeling own platform versus third-party platforms for growth strategy. So the panel discussion will begin sharp at 6 p.m. in this ballroom. Thank you very much. And once again, requesting you all to download the application on your Android or Apple Play Store of Global Fintech Fest to stay abreast of the latest updates, the topics, the panel members in different ballrooms happening over the next 2 days.
like that. You like it like that. like it like that. You like it like that. like it like that. You like it like that. like it like that. You like it like that. like it like that. You like it like that. it like that. You like it like that. like that? like that. You like it like that. like it like that. You like it like that. like it like that. You like it like that. like it like that. You like it like that. like it like that. You like it like that. it like that. You like it like that. it like that. You like it like that. like that.